A very good morning, everyone. So, last class we completed successfully customs and FTP, and today and next 2 days we are going to focus on GST. And in GST, so we have to learn now how to present the 14 marks question, because this 14 marks question is something which is actually a daredevil, and if at all that question is easy now, definitely it will be a good scoring area, but otherwise it will be gone, and mostly it will eat away our time also, because whenever I have interacted with many students, what they said is that, sir, it is taking me 1 hour solid to complete this first question, that is 14 marks question, because of which my pressure is mounting up, sir, because MCQ already I spent 45 minutes and thereafter 1 hour went here itself. So it literally 1 hour 45 minutes gone. Now I have only 1 hour 15 minutes. In that I have to complete the remaining paper. So I'm just scribbling something, but I'm not able to write properly. This is the feedback. So therefore, please try to understand the time management properly. The time management is like the entire 3 hours you divide into 6 parts. The first part, every part is 30 minutes, not more than that, and which means that, so in this 30 minutes time you need to complete each and every question. So my advice is that first 30 minutes you take for MCQ, because what happens is that you will be fresh, and MCQs requires little bit of patience also. So therefore 30 minutes timer, and better to take one watch and go, that is this timer watch will be there, na? Like kids and all will be using. Beep like that, it will come for every 30 minutes, like that you keep a alarm or some timer for 30 minutes, that watch and all is allowed. Okay, so digital watch is allowed, analog watches is also allowed, smart watch is only not allowed. So you take a digital watch and go. In your childhood you would have wear na? So that watch, you take that and 30 minutes you keep, like every 30 minutes it should alarm you or tell you that 30 minutes is over. So first 30 minutes what you need to do is that you need to just spend on MCQs, and when you are reading the MCQs also, don't go to the options first. So don't go to the options first, because the options are so confusing that you will definitely get confused. See the question and try to do the workout and then arrive at the answer. And in that case scenario MCQs are there. So case scenario MCQs, solid 2 to 3 case scenario MCQs will be there, and 3 case scenario MCQs also, like somewhere 12 questions, 4. So 12 into 2, 24 marks, and remaining 6 marks again from customs it will be given. So therefore my advice is that they have released one case scenario MCQ booklet. ICA has given one case scenario MCQ booklet. I don't know why for DT they have not released. So for they released last week, I think I have checked, they have not released last week. So they have released for DT also, very good. And what you need to do is that daily what you need to do, some 1 hour time you need to spend on that case scenario MCQ. Squeeze in that time. It is definitely possible, because now you have really good time. So March mid we are in, and till April end. So daily 1 hour if you spare also, you will be able to complete the case scenario MCQs. So therefore now that you are completing this batch also, which means the entire revision is also over. So now what you need to do, that case scenario MCQs 1 hour each, that will be sufficient, so that you will get a command over that and never ever see the answers and then do the working. So you do it independently, it will take time. And when you are reading the case scenario MCQs, what you should do is that first you need to read the question, that is the MCQ question you need to read. So when you read the question, you will know what are the concepts which are being tested in that particular question. So when you are reading the paragraph, you will understand, okay, this is the reason why this paragraph is given like that. For example, in MCQ there is one point related to registration. Then immediately while reading the paragraph, you will, on the back of your mind, it will be working, okay fine, registration, this should be added in aggregate or no, this should be added in aggregate or no, like that it will start working. So that's the reason why first read the MCQ question and then read the paragraph, do the working and select the answer. Without seeing the answer, please do that. It's my humble request to all of you, because what you do is that you will do the audit of MCQs, because of which nothing is going in your brain, and you are just doing the audit of an audit which is already done by ICI. Got it? So therefore what is the point in doing that? You don't have to do that. So therefore work out. Then next thing is that in 30 minutes, if you are working all those case scenario MCQs, you will become a pro in that. And thereafter 30 minutes, you should not spend more than that for MCQs. 30 minutes gone. Now you have 2.5 hours only. In that 2.5 hours, what you need to do is that, so you have 4 questions to write. question number 2 to question number 6. Now you need to first go to question number 6. When you go to question number 6, you need to check whether that theory you know or not. You need to check. If you know that theory, just okay, fine, you have a savior. Suppose if you don't know the theory questions, which means you are compulsorily required to write all the other questions, means there is no choice. Okay, so if that 15 minutes time, when you have 15 minutes time, don't read anything, just go to the last question, question number 6, and read the theory question. You will make your mind, okay, fine, I have a backup. So even if I don't have time, so I can write the theory question and get some marks. Otherwise you don't have backup, so you have to write question number 2 to question number 5. 4 questions you need to write. 2 hours. 2 hours is the time, actual time, but you need to complete it. That is, it is what the standard time, and you need to complete it in less than that. If you are able to complete in 1 hour 45 minutes, so 15 minutes if you are able to save there also, for the 14 marks question you have 45 minutes. So therefore you have completed everything, and keep question number 1 at the end. When you keep question number 1, the compulsory question at the end, you completed everything. Now you are at ease, so you don't have pressure. So carefully, happily you can read. And one more idea is also there, like whenever you are doing these questions and all, when you shift the question number 1 at the end, what happens is that as you solve each and every question, this knowledge will be processed, which will be useful for question number 1. You understood or not what I am telling? So input tax credit related provisions, exemption related provisions, and RCM related provisions, all these things will run in your back of mind once, because when you are solving this question number 2 to question number 5, this knowledge will in turn be helpful for question number 1. So please try this. So for mock test itself, you need to do this way. And this Sunday we are having a mock test. This Sunday we are having mock test 1, and thereafter next Sunday there is a mock test 2. So even I am not pushing to April also. In March itself you are writing 2 mock tests. Okay, so this mock test itself, you do this time management, definitely it will work out. And thereafter you have 1 solid month also, and then you will go for exams. So please do this strategy for these 2 mock tests. If it is working out, well and good. If it is not working out, you will have something in your mind, you follow that. Okay, so just it's a trial. Please try this once. And then whenever you are writing the 14 marks question, what you need to do is that 3 dedicated pages you need to allocate. So 3 pages, 3 papers you need to allocate. 3 papers in the sense, like say for example, this is the page, So in this page and back side, this is for first statement. What is that first statement? Statement showing computation of GST payable on outward supplies. So this first statement, computation of gross GST payable on outward supplies, will be in the first statement. And in this first statement, what happens? Lot of details will be there. Outward supply details will be there. So this page and even next page also it will go. Then third page, page 1 and page 2 for first statement. You write that. You write and you prepare the table also. In the table you need to take particulars, value, CGST, SGST, IGST. CGST, SGST, IGST is just the amount columns, whereas the value column will be like just the amount. So therefore 4 amount columns, and particulars you give lot of space. It should be like, half of the sheet should be for particulars, remaining half of the sheet is for this 4 columns. Just the amount only you are going to write, nothing else. Got it? So now in the particulars itself, to the extent possible, give the explanation. The main mistake what many students are doing is that they will prepare one table, they will do the computation, and below they will be writing the notes, because of which what happens, here they are reading, here itself they are giving marks, and thereafter notes and all they are not evaluating, because of which for a 14 marks question, even though everything is correct, they are not getting more than 10 marks. Why you need to lose 4 marks? So that when you are putting it in the table itself, the explanation, so then and there the marks will be given like 1 mark or 1.5 marks, then and there they will be giving, so that therefore notes also you don't have to write separately. One more advantage is there, you don't have to again recollect the information. Immediately when you read, anyhow you need to answer, there itself you can write. Okay, so that is about this first statement. Second statement is about computation of GST payable on inward supplies. When you read the question itself, definitely 1 or 2 transactions will be there, so don't give more than 1 page. 1 page is maximum. Okay, so page 1, page 2 for statement number 1, and page 3 for statement number 2. So that is GST payable on inward supplies, and parallelly you prepare another statement also, that is page number 4. That page number 4 is for computation of input tax credit availed, then reversed and net eligible. Got it? So that particular statement, ITC statement, these three statements you need to parallelly open. So like a single entry, when you open entire ledgers and you post accordingly, like that you prepare three statements same time. When you read, you don't read the question and then do the answer. So you open the statements, and as and when you open the statement, you read the question like transaction wise. One transaction you analyze. First you need to analyze whether it is a outward supply or inward supply, because sometimes they will give with clarity that it is a outward supply. Sometimes they will not give any information as to whether it is outward supply or not. So which means inward supply or outward supply. By reading only you will be able to identify. So first you need to identify it is outward supply or not. Once it is an outward supply, thereafter we need to see is it supply or not a supply. That is, the transaction is an outward supply. First you need to check whether it is supply or not. This is something which we will many times forget. So they will be giving one point, so and so person has given product to their customer free of cost, and the open market value of that is something like that they will give. And actually open market value is there, everything is there, you will think that, so we need to pay the GST. But first of all, the transaction should become supply. It is not at all a supply. When the transaction is not a supply, why the hell we need to pay GST on that particular transaction? Hope you are understanding what I am telling. So due to that reason, first you need to check whether the transaction is supply or not. And once the transaction becomes supply, you need to check whether it is taxable or exempted. For that, definitely if it is goods related provisions, goods related provisions only in question if it is given as exempted, it is exempted. Otherwise all goods related provision will be taxable. Got it? Whereas services, you need to remember that section 11 read with notification 12 of 2017, that is a notification number. So you have to write as per section 11 read with notification 12 of 2017, the said activity is exempted. Okay, so therefore you need to first check supply or not. If it is not a supply also, you need to write note, and if it is exempted also, you need to write note why it is exempted, and to the extent possible give the proper reasoning. Okay, so if you are not giving the reasoning, you will not get. Reasoning does not mean don't try to beat around the bush, to the point you write, that is sufficient. So it's not about the quantum, it's about the quality. Got it? Then next, supply, for suppose if it is not exempted, then what it will be? Taxable. And again balancing figure is taxable. Whenever it is taxable, we need to check who is liable to pay GST. Suppose if the transaction is covered under RCM, so for that you need to write section 9 subsection 3 read with notification number, so 13 of 2017, this is for services, 4 of 2017, this is for goods. So therefore this will not be added to the liability of the particular person, but it will be added to the liability of the recipient. But we need to write a note and we need to take the amount column. Why we need to take in the value column? See, when a transaction is not a supply, don't take it in the value column. Whereas when the transaction is exempted, take it in the value column, because that will help us for the purpose of determining the ITC reversal. Because when we are doing ITC reversal, so we need to take total ITC minus ITC reverse. When ITC reverse you are doing, so that is ITC availed or common ITC into exempted turnover divided by total turnover. We need to proportionately reverse the ITC. For that purpose this will help us. Okay, so exempted turnover you take in the value column. Supply which is taxable under RCM, why we should take it in value column? We don't have the liability, but why we should take? Because supply covered under RCM is treated as exempted supply for the purpose of computation of ITC. Generally when the supply is covered under RCM, it's a taxable only, but taxable in the hands of my recipient, but for me it will be treated as exempted while computing ITC, so we need to take it. Then remaining supply which is taxable under FCM, if it is intra or inter as the case may be, so we will be mentioning it in value CGST, SGST or IGST. If it is inter, you will mention in IGST. If it is intra, you will mention in CGST, SGST. So this total is the total of the first statement, and you have to write the notes for each and every transaction. You read the transaction, you check the below table if they have given any additional points for that, and then you will get an idea. Then you can prepare that and you can write. Then in this, exempted turnover is useful for ITC reversal, and there are some transactions which are not a supply but treated as exempted for ITC. What are they? Sale of land, sale of building, sale of securities, and supply of warehoused goods under customs. These are the 4 transactions which are actually not a supply, but it will be treated as exempted supply. Sale of land. Sale of land is not a supply, excluded from supply. Sale of building where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, that is also excluded from supply. Then sale of securities is also excluded from supply. Supply of warehoused goods, that is supply by duty free shop in international airport to the incoming passengers. These 4 transactions are not a supply, and we need to treat it as exempted supply for ITC purpose. So therefore, whenever you are writing it as not a supply, if it is to be treated as exempted for ITC purpose, you put it in the value column. You put it in the value column because that will be counted for exempted turnover. Then next you need to also know taxable turnover. For one reason you need to know taxable turnover, because of applicability of Rule 86B. Rule 86B is a hidden adjustment. So Rule 86B says if the taxable turnover in a month, while counting taxable turnover per, you should not take 0 rated supplies and exempted supplies, non-taxable supplies, etc. You should take purely taxable supplies. If the taxable supplies exceeds 50 lakhs in a particular month, then in that case 1% of the gross liability under FCM. So this liability only, gross liability under FCM, you have to pay through cash ledger, even if you have sufficient balance in the electronic credit ledger. For the sake of that, this taxable turnover will be useful. Taxable turnover is useful for checking applicability of Rule 86B. This is about statement number 1. Thereafter, statement number 2, computation of GST payable on inward supplies under RCM. So this statement fully I have given in page 295 of that SET book. You can see that page 295 of that SET book. Computation of GST payable on inward supplies under RCM. So inward supply also you need to analyze first. Is it supply or not a supply? Because if it is not a supply, first of all there is no GST liability they will give. Inward supply is also some transaction they will give which is not a supply. So when it is not a supply, just write the note, leave it. And inward supply which is exempted, so that also you write the note and leave it. Inward supply taxable under FCM, that also you write, but don't take it in this statement because this is only inward supply under RCM. So just write the note and leave it. And thereafter inward supply taxable under RCM. So this alone you need to put it here, and why you need to pay under RCM you need to write, then you will get the total. Now while doing this, there are no contrary like situations which ICA has done. In some questions what they did, IGST paid on import of goods, they have not taken in the RCM liability in some questions. Whereas in some questions, IGST paid on import of goods, they have taken it under RCM liability. So which method to be followed? If you see old questions, somewhere like 2018, 2019 or 20, that time RTP questions and all, they have not taken IGST paid on import under RCM liability. But 2021 onwards, so they have taken that. So therefore, which means in the recent past, they are following this treatment. So therefore, my advice also, whatever IGST paid on import of goods, you please take as a part of this particular statement RCM liability. Okay, even though this we pay under Customs Act, but you add it as your RCM liability itself here. And thereafter, computation of input tax credit availed and reversed. So now this two, whatever inward supply taxable under FCM, whatever inward supply taxable under RCM, these two is eligible for ITC. In that you need to write about blocked credits. So first you need to check whether it is a blocked credit or not. If it is a blocked credit, then ITC not available. Otherwise ITC will be available provided it is used in the course or furtherance of business. Like that, there are certain disqualifications. Your focus should be more on the disqualifications only, and there are many things which we will be learning in input tax credit, like for example, invoice is missing, ITC not available, goods are not received, ITC not available, goods received in installments, ITC can be taken on last installment, but now we cannot take ITC. Like that, many disqualifications are there. All these you need to keep in mind. One more disqualification also which is there in e-invoice. That is, if our supplier is required to give e-invoice, but instead gave a normal invoice, then you cannot take ITC with respect to that particular purchases. Okay. So therefore, all these things you need to carefully read in the question, and then you will know whether ITC is available or not. So computation of input tax credit, this is the third statement. Inward supply taxable under FCM or RCM. So you will take that is these two you will take here, and in that ineligible ITCs you need to reduce. Okay, what is that ineligible ITCs? So blocked credits, T1 used for non-business purpose, you will not take, and T2 used for exempted. Inward supply is clearly mentioned that it is used for exempted. T3 that is blocked credit. So now you need to take it out. Now you will get ITC availed in GSTR 3B. In that some credits will be exclusively for taxable, some will be common for both taxable and exempted. So then you need to reverse the proportionate ITC as per rule 42, 43, 42 for inputs and input services, 43 for capital goods and other reversals, like that you need to deduct it. Then wherever in the question, if somewhere opening balance of ITC is given, you add that opening balance of ITC, you will get net eligible ITC for utilization. Don't add this opening balance in the beginning itself. I'll tell you the mistake in one attempt many students did. What they did is that opening balance they have taken in the beginning, and ITC availed during the month also they added. While doing ITC reversal, including opening balance they reversed. Including opening balance of ITC they reverse. That's a blunt mistake. So opening balance, why you need to reverse? Only ITC availed during the month only you need to do the reversal. So but they don't know. They took okay ITC availed into exempted turnover divided by total turnover. This is what SAR said. So therefore what is ITC total? In that opening balance you take, you should not take. Here why opening balance we need to reverse? Opening balance is after reversal something which is eligible only of the previous month. So that's why add the opening balance at the end better, so that you will not do this mistake. So add opening balance of ITC. Now you will get net eligible ITC for utilization. Now we got these three statements. Now we are moving on to the final statement. So page 1, page 2, page 3, page 4, page number 5. Sometimes the page number 4 may extend to page number 5 also, because if lot of inward supply datas are there, so it may go by one more page, and last page will be, last page you don't have to create now, at the end we will do, after completing all these three statements. The last statement is computation of net GST payable. In that first you will write gross GST payable under FCM, that is statement number 1, copy paste. So when you are taking that, then less ITC utilized. ITC utilized is as per statement 3. Now you need to check the turnover. First you need to check the taxable turnover. What is the taxable turnover? Say more than 50 lakhs. Then rule 86B will be applicable. Then you need to go to ITC and you need to see the gross liability, and you need to check whether the gross liability at least 1% are we going to pay through cash ledger or not. For example, gross liability is somewhere like 7,50,000. 7,50,000 into 1%, 7,500 at least we are going to pay or not, we need to check in the answer after adjusting ITC. Yes, at least 7,500 we are going to pay, or more than 7,500 we are going to pay. It's okay. Don't apply that 1% logic and all, because by default your ITC is less. So therefore you are anyhow going to pay, so more than 1% itself as net liability, that's fine, no issue. Suppose you are going to pay less than 1% through net liability, then what you need to do? At least 1% we need to pay. So remaining only we can utilize through ITC. Is it clear or not? So 7,500 will be the balance, and difference. What is the difference? That is 7,50,000 minus 7,500. So remaining 7,42,500 only you can utilize out of ITC, and therefore net liability you will get after adding RCM liability, because for payment of GST under RCM we cannot utilize ITC. Even if we have excess ITC also, that excess ITC will be carried forward to the subsequent period. For example, you see this, say my gross GST payable under FCM, my gross GST payable under FCM is 8 lakhs, and whatever GST payable under RCM, this is under FCM, then GST payable under RCM, my RCM liability is somewhere like 1 lakh, and my ITC, what is the ITC available? So ITC available will be somewhere like 10 lakhs. Okay. Now literally if you see, the net liability will be 0. No, net liability will not become 0. Why net liability will not become 0? Because RCM should always be paid by cash. then what you will do? First you will take gross GST under FCM. Gross GST under FCM. This gross GST under FCM 8 lakhs you will take, and assume that taxable turnover exceeds, okay, taxable turnover exceeds 50 lakhs, okay. Then in that case what you need to do is that you need to just take a balance. What is that balance? So that is 8,000 here, 1%. So how much ITC you will utilize? 7,92,000. So ITC utilized, that ITC utilized will be 7,92,000. This 8,000 you need to anyhow pay because of Rule 86B. So Rule 86B restricts only 99% of liability we can utilize, and 8,000 anyhow you need to pay. Then you need to add RCM liability. What is that RCM liability? RCM liability is 1 lakh. So therefore the answer will be 1,08,000 is what? Net GST payable. Net GST payable through electronic cash ledger. Through electronic cash ledger will be 1,08,000. Thereafter one more line also you write. So balance in ITC that can be carried forward. Balance in ITC carried forward. What is the balance in ITC that will be carried forward? So therefore this 10 lakhs we used only 7,92,000. So 10 lakhs minus 7,92,000, that is 2,08,000 will be the balance in ITC that will be carried forward. Like this we need to present it, okay. So only when you are doing like this, you know, you will get a clarity, and even the answer also will not go wrong. Just stick on to the format, okay. And this is one step which usually you will miss. The balance in ITC you will not write. When you are not writing balance in ITC, unnecessarily like 0.5 or 1 mark you will be losing, okay. Each and every 1 mark and 0.5 marks is very, very crucial, and a student who got 58 or 59 will know the worth of it, okay. So just because of this, again, even though IDT you have scored well, you cleared also, then again you need to sit and prepare. That too, this bloody amendments and all will be there. Why do you need all those things, correct or not? So to the extent possible, squeeze in every opportunity and score as much as you get. Suppose if you are getting 80, come what may, you are getting 80. Are you telling like I don't want that 20 marks extra, etc. and all? It will be carry forward. Now for other subjects, definitely yes or no. Maybe DT paper gone completely. At least 40 you are getting, 41 you are getting. Now you can clear now with 80 marks in IDT, correct or not? So every 1 mark is very, very crucial. So don't make any mistake. To the extent possible, you put your hard work and ensure that that 1 mark is also important, because you know usually drinkers and all, what they do, once they consume also 1 or 2 drops will be left. 5 minutes they will do like this, so that you know that 1 drop, 2 drops at least it will come into their mouth like that. Like that you should be like a drinker. You understood that 1 drop, 2 drops also you should not leave, because you don't know the worth of it. Those are honey drops. You understood? Then coming back to this, example, then see this computation of net GST payable, gross GST payable under FCM minus ITC utilized. We need to check whether Rule 86B is applicable or not applicable. If Rule 86B is applicable, 99% of liability only you will pay, otherwise 100% you know you have to adjust. Then GST payable under RCM, net GST payable using electronic cash ledger. So this is the format which you need to keep in mind for the purpose of you know presentation of this 14 marks question. First itself I discussed this pending half an hour with you, because as and when we learn, you will know the objective. Why are we learning this? Because it will be connected towards that 14 marks question. Got it? Then remaining things whatever we are learning will be for other questions. What is that other question? Question number 2 to question number 5. Okay. And question number 6 also it will be useful because of you know the theory questions. Now we are starting with one area which usually you neglect. You will not prepare properly, and that's the reason why I want to start with that first. Offences, penalties, search, seizure, etc. Because I know that you will never be interested to learn that. So say this, segment number 18. Segment 18, search, seizure, offences and penalties. And in this what we are going to cover is first offences which leads to seizure, and thereafter, so there is one question, how to apportion that 1% under 86B if all the tax heads are given, that is CGST, SGST, IGST. Very simple, that head into 1%. That head into 1%, simple. So why you get confused? That respective head into 1%. Sir, total into 1%, no, don't follow that. That respective head into 1%. Accordingly utilize the ITC, okay. Then, so first in offence and penalties chapter, we are going to discuss offences that leads to search and seizure. Thereafter, we are going to learn offences that leads to penalties, and next we are going to learn offences that leads to arrest, offences that leads to imprisonment, and offences which are cognizable and non-bailable, and finally offences which leads to compounding. So means compounding means you don't have to undergo any imprisonment, you can pay some fine, thereby you will get immunity from prosecution. These are the 6 headings we are going to learn now. First, offences that leads to search and seizure, okay. So say this, situation 1. So offences that leads to search and seizure, there are 2 situations. Situation 1, section 67 read with section 130. This is seizure in the premises, that is search and seizure in the premises, whereas situation 2, that situation 2 is search during the transit, okay, search during the transit, that is situation number 2. This is section 68 read with section 129. These are the 4 sections you need to remember, 67, 68, 129, 130. In that, first and last is one combo, 67, 68, 129, 130, okay. First and last is combo 1. What is that? Section 67 read with section 130. Then middle 2 is a combo, 68 read with section 129, okay. So first one is search during the search in premises, second is search during transit. Now look into this, search during in the premises. So what will happen? Inspection will be carried out at the premise of the taxable person. Who is a taxable person? So one who is registered or liable to be registered is known as taxable person, okay. So not only registered, even liable to get registered. Then transporter, warehouse operator or any other premises. Question number 1, can the residential premises also be searched upon? Yes. If proper officer has reason to believe that there are some goods or documents containing the details of the goods which are evaded under tax, for which they can do the search in residential premise also, because they use the word any other premises. And transporter and warehouse keeper, what if they are not registered? That question will not arise. Definitely they need to at least enroll and get a unique enrollment number. Every transporter and warehouse keeper, even though not registered, should obtain a UEN under GST law. So therefore their details will be available. And for doing this inspection, even though the words used here is inspection, but it is actually search only, and authorization from joint commissioner or above is required for the purpose of this inspection. And very important, there should be some reasons to believe evasion, otherwise this search will not be applicable, okay. And for getting the reasons, like I have a reason to believe there is a evasion. How do I know that there is a reason to believe evasion? For that purpose, there is one softer provision before this, that is called as access to business premises. Access to business premise under section 61 is actually a prefix to search under section 67. What will happen? I am an officer, I will go to the premises and I will ask for documents. I cannot do any search. I cannot go to the MD room, open the drawer or open the almirah, etc. and all. No. I can sit in the conference room, ask them to give the documents, and they can give the documents. I can do the checking, and thereafter I will get the reason to believe evasion. Then I will go to my officer, my superior, that is joint commissioner and above, and I will tell to him, boss, I have a doubt on him, so we should go and search and break whatever available. So okay, fine. So he will give me the search warrant, and thereafter I will go and search his premises. That's how it works. So therefore, access to business premises and inspection is more or less it is connected, but there is a huge difference between these two. And now we are discussing only section 67. So inspection is carried out at the premises. If any unaccounted goods are found, then such goods are liable for confiscation. So unaccounted goods means those goods which are not reported in section 35 accounts and records. There are many accounts and records which are required to be maintained by a registered person. Suppose if the details are not there, or if he is liable to get registered but not got registered and he suppressed the information, so all those are coming under unaccounted goods. And what they will do, seizure under section 67, seizure of goods. So when they do seizure, what will happen? Search, they identify something, they search to identify something. Seizure, transfer of possession. Confiscation, transfer of ownership to the department. And seizure, from place of business. Seizure order, order for seizure of goods, documents shall be passed. Then two options are available. Option number one, that is immediately after seizure order, the person from whom the goods are seized or documents are seized has two options. Option number one, he need to pay the tip, that is tax, interest, penalty. He need to pay that so that the goods will be released and all the provisions are deemed to be concluded. Pay applicable tax, penalty under 122 subsection 1. So what is the penalty under 122 subsection 1? 100% of tax or 10,000, whichever is higher. And remember, four things should always be done separately: CGST, SGST. So we need to compute penalty separately under CGST, SGST. Late fee, we need to compute separately under CGST, SGST. Then pre-deposit. Pre-deposit should also be computed separately under CGST, SGST. And thereafter, any other fee. So that fees, if it is given as CGST, SGST, okay. So but three mandatorily separate. What is that? Penalty. Sir, interest? No. Interest you do it together. Interest you do normal 18%. Don't compute separately 18% of tax under CGST, 18% of tax under SGST, then the interest will go to 36%. Okay. So that is not there. So 18% when you take on together only you take. But these three things and all when you are learning, it will be separately under CGST. What are they? Penalty, then late fee for delay in filing returns, and then pre-deposit. Okay. So here penalty, that is under CGST, is 100% of CGST or 10,000, whichever is higher. Suppose if the question is about IGST, multiply with 2. Suppose if the question is not about IGST, you do it only that separate, CGST alone you do. Got it? And what will happen once you pay this penalty? The goods shall be released and all the proceedings in this respect shall be deemed to be concluded. And option 2, but I don't have money to pay. I don't have money to pay. Moreover, I am not selling the goods. These are unaccounted goods. I agree, but I am not selling. I don't have money to pay. Why should I pay? Then in that case, I will execute a bond. When I execute a bond, they will do provisional release. Provisional release, not final release, which means the proceedings are not concluded. And whenever I sell these goods, at that time, I need to pay the tax and applicable penalty. Right now the goods are released because I will tell, sir, if you give goods only I will sell and then only I will earn money, then only I will be able to pay you tax and penalty. For that reason I will execute a bond and the goods will be released provisionally. And bond covering the value of the goods we need to execute. These are the two options. If any of these two options not exercised by the person from whom goods were seized, then in that case a confiscation order will be passed by the department. The moment confiscation order is passed, the ownership also will go to the department. So far the possession is with department, the ownership also will go to the department. That is about confiscation, transfer of ownership to department. Now they will pass a confiscation order, and yet there is one more option given, that is called as redemption option. Redemption option is to pay the redemption fine so that the goods will be released. And what is the time limit within which the redemption fine needs to be paid? 3 months. 3 months from the date on which they pass the confiscation order. Option to redeem goods by paying a fine within 3 months. Okay. Within 3 months we need to pay that fine. 3 months from which date? 3 months from the date of confiscation order. And is this redemption fine in addition to whatever the penalty that we need to pay, of course. So TIPF. So TIPF, that is tax we need to pay, interest we need to pay, penalty we need to pay, and redemption fine is also required to be paid. What is this redemption fine? The maximum redemption fine is market value of the goods minus tax chargeable, and this you don't compute separately for CGST, separately for SGST. This you do it together only. That is, you see the total market value of the goods minus the total tax payable thereon, because this redemption fine will be charged by either CGST officer or SGST officer, and therefore only one fine, one officer only will do, and they will collect the total. Thereafter will share between central government and state government. So due to that reason the redemption fine you do it single computation. Okay. So just remember penalty, late fee, pre-deposit. That alone separate computation. In all other places you just take it as total, okay. And market value of the goods minus tax chargeable thereon. This is the maximum redemption fine. Means does not mean this much they will be levying. They can levy any amount less than this, but in exam when they are asking what is the maximum redemption fine, you need to write this much they can levy. And redemption fine, see tax chargeable means whatever is the applicable tax on that particular goods, that should be taken, and that need not be on the market value, because market value different and transaction value will be different. So therefore we need to compute tax not on the market value but on the transaction value. Then redemption fine in case of conveyance. In case of conveyance we need to check whether the owner is coming forward or not coming forward, etc. But usually in case this conveyance is coming here under section 130, for 129 only we need to check owner coming forward, not coming forward. For 130 this conveyance is seized in the premises, which means the conveyance is there in the premises, we loaded the goods in the conveyance and the conveyance is there, at that stage the conveyance is seized. So then for release of goods only there is a redemption fine, but for release of conveyance the redemption fine is separate, that is on that in that conveyance what is the value of the goods into what is the tax rate on with respect to those goods, that much we need to pay as the redemption fine, so that the conveyance also will be released. Redemption fine in case of conveyance to the owner of the conveyance, tax payable on goods transported thereon. And once we pay this redemption fine, this is again the maximum redemption fine, that much we need to pay, and they can levy anything less than this. Tax and penalty along with redemption fine. If option not opted, what will happen? So within 3 months from confiscation order we are not paying this, then the goods will be disposed of by way of auction. When they dispose of by way of auction, will they return anything to the owner of the goods? Nothing, because the ownership already transferred to department. Now department itself is the owner of the goods, so entire amount retained by the department. This is about section 67 read with section 130. 67 talks about seizure in the premises, 130 is about confiscation order. Then inspection can be carried out only after joint commissioner or above officer gives the authorization. Before issuing authorization, officer should have reason to believe. So reason to believe is important. Reason to believe that the taxable person suppressed a transaction or suppressed the stock, means a transaction they have made but they have not reported in accounts, or the stock is there in the place but they have not reported that stock in the records, or claimed it is in excess, or any other contravention. After seizure order, that is here after they are doing seizure order, they are giving an option to pay the appropriate amount and get it released. For that they need to give a notice, and that notice to be given within 6 months plus 6 months after seizure order, not for seizure order. After seizure order, to pay the tip, they need to give a notice, and that notice to be given within 6 months, plus it can be extended for a further period of 6 months. If no notice is given, the goods shall be released, and that is whatever release, and this release is provisional release or final release. Final release, it's not like bond provisional release, not like that. The goods will be released because it is their mistake by not giving the notice within the time limit. Okay, then next, inspection under section 67 versus access to business premises. What is the difference? In case of access to business premises, the reason to believe evasion is not required, whereas in case of inspection, the reason to believe evasion should be present. And what about warrant? Search warrant. In case of access to business premises, search warrant is not required, but an officer authorized by an officer not below joint commissioner should only go for search. Okay, not below joint commissioner. Officer authorized by an officer. Can a superintendent go for access to business premises? Yes, but they should be authorized by an officer. Who? ACDC? No, not ACDC. Joint commissioner or additional commissioner, that stage. Okay, so ACDC cannot authorize a superintendent to go and do access to business premises. Got it? And the hierarchy you remember. So first we have commissioner, chief commissioner, and below chief commissioner we have commissioner. Below commissioner we have additional or joint commissioner. Below additional joint commissioner we have assistant or deputy commissioner, and thereafter below we have superintendent. So that is this, not required but such officer authorized by an officer not below joint commissioner. And warrant is definitely required to be issued by the officer here in this case, and both case if you see officer not below joint commissioner. And next, which person they can do inspection? Here taxable person, but here only registered person. Taxable person or operator of a warehouse or transporter, but here only registered person. And what premises they can do inspection? Business premises, residential premises, warehouse, transporter premises, or any other premises. Whereas here only place of business, no other premises can be done for access to business premises. Usually access to business premises is carried out to gather evidence for inspection under section 67. That's how these two sections are connected. Again 67 is connected with 130 because of the confiscation after seizure. And next we have, suppose if they are going for inspection at that stage, that is search, they are going. So maybe the person is so powerful that he has lot of bodyguards or bouncers etc., and they may obstruct an officer. For that, can the officer take the support of police officers? Yes, police department, customs department, everyone. So they can take the permission or they can take the assistance of the following officers, and police, railways, they can take the help of police, they can take help of railways, they can take help of customs officers also. Suppose if the premises fall somewhere in the customs area, okay, so in that case customs officers, village officers, because if there are some rural areas and all, village officers will know nook and corner in that rural area, so they take the permission of village officers, because it will be completely like a dense forest. Somewhere inside the forest one warehouse will be there, in that warehouse stock will be kept, okay. So but village officers will have an idea about it, okay. Pushpa movie and all you did not see. Then officers in charge of collection of land revenue means, so these collectors, so land collectors, land revenue collectors or mandal revenue officers etc. will be there na. So those people, their support also can be taken. Then after seizure order, what is the limit for confiscation order? They have not given. So that is a mistake in the drafting, they have not given in the law. That is, once the seizure order passed, what is the time limit within which confiscation order to be passed? They have not given, but notice only they gave. So notice to be given within 6 months plus 6 months. And suppose if this person has to pay two things, either option 1 or option 2, if not confiscation order is passed, what is that duration? That duration is not defined in the law, which means it may take 1 year, 2 years also, or depending upon the nature of the goods. If the goods are not having that much of shelf life, immediately also they can complete. It's all about facts to facts basis. In law there is no information about that. Then following records are to be made available within 15 days from the date when such demand is made. That is, during this access to business premises, they will ask for the documents. So those documents needs to be produced. What are those records that they can be asked? This provision is actually common not only for access to business premises but also for special audit. So in case of special audit, CA or CMA will be appointed. That CA or CMA will go and ask for the document. For that also, what are the documents that they can ask for? Say this, following records to be made available within 15 days from the day when such demand is made, and is also applicable in case of special audit under section 66. What is the time limit within which we need to give? 15 days. For example, today one officer is coming for access to business premises and say that I want to check your records. Right now rocket revision batch is going, you go and come later, I can tell. 15 days is the time that I have. You understood or not? So 15 days time I have. So not that immediately I need to give all the documents. 15 days, not working days, 15 days, keep that in mind, 15 days. What records I need to make them available? All the records which are to be maintained under section 35. What are the records which we are required to be maintained under section 35? So we have I formats. It went off. No, projector also could not tolerate the torture here. Can you manage with the book for some time till the time they change this? Okay. So please check the book. What are the various accounts and records which are required to be maintained, you can just turn the page little bit before and you can see page number 158. Page number 158. No, it got blasted. Say this, I formats, what are the records to be maintained? Section 35, I formats, I for inward supplies. Inward supplies means all the purchase related details we need to maintain. F for foreign trade. Foreign trade means that is import and export. O for outward supplies. So I for inward supplies, remember the mnemonic, I formats, I for inward supplies, but don't write just inward supplies. You need to write a registered person shall be required to maintain the following accounts and records, that is accounts and records pertaining to inward supplies. When you are making inward supplies, from whom you are making? From the suppliers, along with the details of the suppliers and with supporting documentation. What is the supporting documentation? Tax invoice, debit notes, credit notes and delivery challan, e-way bill, etc. Got it? Then auditing, you know, na, this much you will learn, you will write this much like that. Okay, this you remember, but you write extra information and all. Then F, foreign trade, import and export. So in case of import and export, so all the other records, what are the other records we need to maintain? Import along with the details of bill of entry, bill of lading, airway bill, etc. And in case of export, along with details of shipping bill, whatever documents you remember, everything you write. Okay. Thereafter, O for outward supplies. Outward supplies, so to customers, along with the details of the customers with supporting documentation. R for RCM. Out of the inward supplies, what are all the inward supplies on which GST payable by the recipient under reverse charge mechanism, along with the supporting documents needs to be maintained. M for manufacture related. Manufacture related means like process accounts, whatever the manufacture related records, production records, opening stock, closing stock, all those details we need to maintain. That is manufacture related. A for advances received, paid and adjusted. Advances will be received from whom? Advance will be received from customers. Advances will be paid to suppliers. And adjustment, like say for example, already we paid some advances or we received some advances, while raising the bill we need to adjust it and on net amount only we need to pay. So that advances received, paid and adjusted. Then tax details. Tax details means input tax and output tax. Then stock details. So stock details along with the place where we are keeping the closing stock. This is about the I formats. These are the list of accounts and records which we need to maintain. Okay, and these accounts and records will be produced before the person like officer who is coming for access to business premises. Also to the auditor who is coming under section 66, CSMA who is doing special audit. So records under section 35. Maybe this can be asked as a theory question. Next, number 2, trial balance or equivalent. Then audited financials, cost audit report and income tax audit report. Then next one you see. So we completed situation 1. Now we are moving on to situation 2. Situation 2, that is seizure of goods during transit. Okay. So this seizure during transit we have section 68 read with section 129. So here what happens, a conveyance will be going on the way and the proper officer will intercept the conveyance. When the proper officer intercepts the conveyance and does the physical verification, he will come to know that there are no proper documentation available with respect to those goods. Maybe e-way bill is not there, tax invoice is missing or wrong information is there in e-way bill, etc. So then the proper officer will pass a seizure order for seizing both goods as well as conveyance. So conveyance carrying the goods are intercepted by the proper officer for inspection in the transit. If the transporter was found transporting or storing such goods which are removed in contravention of the provisions of the act, such goods and conveyance are liable for confiscation, both goods and conveyance. So seizure of goods, so transfer of possession to department. So this is seizure during transit. They will pass a seizure order. Order for seizure of goods and conveyance shall be passed. Now what happens after seizure order? So once they pass the seizure order, within 7 days from seizure order, they will be giving a notice for payment of penalty, and after 7 days they will pass a penalty order. So seizure order, 7 days notice for levying penalty, and after notice within 7 days they will pass the penalty order, and that penalty order once they pass, within 15 days. Within 15 days, we need to pay the penalty. Otherwise, what they will do? They will dispose of the goods. But the difference between section 67, that situation 1, situation 2 is that in situation 2 we need to pay tax, interest, penalty, but here we need to pay only penalty. So about tax payment, that section is not talking. Okay, first notice within 7 days of verification of conveyance, penalty order within 7 days of service of notice after giving an opportunity of being heard, upon payment of penalty within 15 days of receipt of order, all proceedings in this respect shall be deemed to be concluded. Write down one more point. Alternatively, bond can be executed. Yes, there is a possibility of bond that can be executed in this case. Not necessary that we need to pay the penalty, but bond also can be executed. So write down alternatively. So for the third point, you write down upon payment of penalty within 15 days. So the proceedings shall be deemed to be concluded. Alternatively, bond can be executed. So this bond point is common. Even there also we have bond point, here also we have the bond point, and the set period of 15 days can be reduced in case of perishable goods. Once a penalty order is passed, maybe 2 days time only may be given if the goods are perishable in nature. Okay. Then next, penalty payable for release of goods. Sir, is there any time limit for seizure order under 129? No, there is no time limit for seizure order under 129. Immediately, as and when they intercept, they will do the seizure order. Okay, so there is nothing like that called time limit that is given here. That time limit is regular time limit under e-way bill. So e-way bill, they will intercept the vehicle and they will do the physical verification. That time limit only. But for seizure order, immediately they will do the seizure. Got it? And what is the penalty payable? So here we have two headings: owner coming forward to claim release, owner not coming forward to claim release. When owner is not coming forward to claim release, then who is coming forward to claim release? Transporter will be coming forward. How much is the penalty? If the owner is coming forward, then for taxable goods, 200% of tax will be penalty. So 200% of what tax? CGST tax. So for example, 15 lakhs is the total value. Okay, so 15 lakhs is the total value. So please try to understand here. If the value of the goods, is 15 lakhs, if the value of goods is 15 lakhs, if the value of goods is 15 lakhs and IGST is at the rate of 18%, then what we need to do? If owner come forward, okay, if owner is coming forward, if owner comes forward, how much will be taken as the penalty? So the penalty will be 200% of tax. Okay, so how you need to compute? First you need to take 15 lakhs. After taking 15 lakhs, you take 9%. You take 9%. First you do this way. So you take 9% into 200%. Okay, so this is penalty under CGST Act. So now in question they will clearly give, or in MCQ they will clearly give compute penalty under CGST Act. So when they say penalty under CGST Act, you do like this only. So 15 lakhs into 9% into 200%. So 15 lakhs into 9%, 1,35,000 into 200%, that is 2,70,000. Suppose if they are asking penalty, they suppose this is like alternative 1, they may give penalty under CGST Act like that. Alternative 2, they may ask a question, compute penalty, like that they will give, that nothing, they will not give anything, compute penalty. So they will not specify the act. When they are not specifying the act, we need to take 15 lakhs into 9% into 200% into 2. Why into 2 times? Because both CGST as well as SGST. So 2,70,000 into 2, 5,40,000. Or alternative 3, they may also ask penalty under IGST Act. Penalty under IGST Act, like that they will ask. Suppose if they are asking penalty under IGST Act, same story, that is 15 lakhs into 9% into 200% into 2, that will be 5,40,000. So this is how, either they can ask this way, any of these 3 ways they will ask. Accordingly you need to modify the answer. in descriptive question will not be a problem because you can write multiple alternatives also. But in MCQ, what will you do? You cannot answer multiple options. All the options if you shared, it will be considered invalid. Okay. So therefore, one answer only you need to select. For that reason only I told you this. So suppose if owner is not coming forward, if owner does not come forward, then what will happen in this case? If owner does not come forward, if owner does not come forward, how much will be taken as a penalty if owner does not come forward? So suppose if it is penalty under CGST Act, penalty under CGST Act, say this is alternative 1. Suppose if they are asking penalty under CGST Act, what we need to do? A or B, whichever is higher. A that will be 200% of tax. So same story, 15 lakhs into 9% into 200%, that will be 2,70,000, or B will be, so 15 lakhs into 50%, that will be 7,50,000. So whichever is higher, that is 7,50,000. Suppose if they are giving like alternative 2, just compute the penalty like that they have asked, they did not specify anything. Then what you do? The same computation you do, and that 7,50,000 you get, multiply with 2, that is 15 lakhs will be taken as a penalty. Means close to value of goods we are required to pay penalty. Yes. And alternative 3, suppose if they are asking compute penalty under IGST Act, same story, penalty under IGST Act, then also we need to do the same way, that is 7,50,000 we need to take and multiply with 2, that is 15 lakhs will be taken as the penalty. Okay. So like this we need to do depending upon the question. Owner come forward, owner does not come forward. When owner is not coming forward, if you observe, everywhere the penalty will be high only, correct? 7,50,000, 15 lakhs and 15 lakhs. Why when owner is not coming forward the penalty is higher? Because to make the owner come forward. If the owner is coming forward, see, when more penalty is there, owner will not come forward, then higher penalty. So owner will naturally come forward to pay a lower penalty. Then we know who is the owner, what is the premises. So therefore we can go for situation 1, search in the premises. For that reason only they want owner to come forward. So that's why they have created a penalty like this. And this particular penalty can be more than, that is, can this 200% be more than, so 50% of value? Yes, possible. In a case where the GST plus compensation cess both are there, GST is also there, compensation cess is also there, then definitely the 200% will be more. For example, if the GST is 28% and compensation cess is somewhere like 72%, so 72% and all is there, yes, tobacco products. So in tobacco products 160% up to that also we have. So therefore compensation cess is 160, 210% compensation cess is also there. Okay. So therefore 100 and then into 50% equal. Suppose if you take 160% compensation cess, so 28% GST plus 160, that is 188, 50%, so is what? 94, that is only more. Got it? So therefore 94 into 200%, so definitely that will only be more. So therefore 50% of value or tax can be higher. So therefore don't conclude that 50% of the value is only higher. So therefore always we can take 50% of the value like that. Don't write the provision fully, 200% of tax or 50% of value, whichever is higher. That is about this. Then so taxable goods, exempted goods will be 2% of value of goods or 25,000, whichever is lower. Usually penalty everywhere it will be whichever is higher. This is the place where we have whichever is lower, because it is exempted goods. The maximum penalty will be 25,000 rupees. Why for exempted goods there is a penalty? Because exempted goods also should be transported with valid documents, that is bill of supply. If there is no documents, then these are unaccounted transaction. For that reason, so penalty can be levied, but the maximum penalty will be 25,000. What if the owner is not coming forward? Instead of 2%, it will be 5% of value or 25,000, whichever is lower. And for release of conveyance, so this is penalty only for release of goods. But for release of conveyance, whatever is the penalty that is payable for release of goods, or 1 lakh, whichever is lower. So it is not whichever is higher, whichever is lower. These two places they use the word whichever is lower, and so maximum penalty for release of conveyance will be 1 lakh. Okay, and next, so this is about owner coming forward, owner does not come forward. Then recovery of penalty by sale of goods or conveyance. What happens within, what is the time limit that they have given after this penalty order? So 15 days. Within 15 days we need to pay, and it can be reduced for less than 15 days. Otherwise, they will dispose of the goods, they will dispose of the conveyance. What they are going to do with the proceeds? Can they retain indefinitely? So like confiscation, no. In confiscation, when they dispose of, the entire money is owned by the government, retained by the government, because ownership is already passed, because they passed a confiscation order. But here they are not passing a confiscation order. So due to that reason, the entire money cannot be retained by department. They have to refund the balance. What is the money that they will refund? First, disposal of proceeds of sale of goods or conveyance and mobile or immobile property. First, it will be apportioned against the administrative cost of the recovery process. Like they need to conduct auction. For conducting auction, some expenses will take place. First, they will adjust towards that expenses. Thereafter, whatever penalty that is payable under section 129, it will be taken for that, and balance amount shall be credited to the electronic cash ledger of the owner of the goods or conveyance if they are registered, else it will be credited to their bank account. And suppose, why will they be unregistered? Because even they can be taxable person also. And thereafter, what if the balance, like their bank details is not identifiable, no one is turning up? As soon as the lorry came and the proper officer stopped the lorry, the driver jumped from the lorry and he ran away. So then in that case, the proper officer will not know anyone. So therefore, they will sell the goods by way of auction, conveyance by way of auction, and they will wait for 6 months. So if the balance of the sale proceeds cannot be so paid within 6 months, within 6 months from the date of sale, it will be deposited in the consumer welfare fund. Okay. Next, so we completed the first part, that is what are the offences that leads to search and seizure. Now we are looking into offences that leads to penalty. In that, section 122 subsection 1. 122 subsection 1 talks about like some list of offences. For that list of offences, bio discredits TFT, the penalty will be 100% of tax or ITC or refund or TDS, TCS, whatever is the amount that is involved in the offence, or 10,000, whichever is higher. So what are those offences? Bio discredits TFT. Okay. So these alternative methods, same for calculation of redemption value in section 130. What we have discussed is section 130 only. Concentrate to the class. Okay, if you don't understand, leave it. Okay, so why there is no confiscation in this section? So because they have not given, I have not drafted it, sorry, seriously I have not drafted the section 129. I have not drafted. How will I know whether there is confiscation or not? This is the law, this is the rule, this is the way in which we need to follow. So don't ask me this type of questions and all. So Nirmala madam is not my mother-in-law and all, got it? So how will I know? So they have not given, they are telling like after penalty order you have to pay within the 15 days and thereafter this will be sold by way of auction. That's it, got it? That's it. This book is that's it. Okay, and you don't ask me questions in this. This is the law, this is the what you need to follow, that's it. Okay, then offences under section 122 subsection 1. What are those list of offences you need to remember? Bio discredits TFT. B for books of accounts default. Books of accounts default means not maintaining books of accounts or maintaining false books of accounts or fake books of accounts. That is books of accounts default. Then I for invoice default. Invoice default means I am supplying without invoice, or I am giving invoice without supply, or I am making supply with giving incorrect details of invoice. That is invoice default. Then O for obstructing an officer from doing duty. So like an officer is coming for physical verification and you are stopping them from doing duty. D, dealing in goods liable for confiscation. So therefore, like whenever we are transporting these unaccounted goods or storing these unaccounted goods, selling these unaccounted goods, that's where if you see section 67, the penalty will be under 122 subsection 1. That is dealing in goods liable for confiscation. But for 129, don't apply this 122 subsection 1 penalty, because for 129, that is situation 2, already they have given a separate penalty. That's the reason why this 122 subsection 1 penalty will not be applicable there. Then dealing in goods liable for confiscation. I for ISD default, input service distributor default. Then S for supply with GSTAT of another person. So that is, I am supplying goods or services, but instead of giving my invoice, some other person's invoice I have given, their GSTAT I have given. So which means that I am trying to defraud the government. For that purpose, it is an offence. Supply with GSTAT of another person. ISD default means what? ISD default means I am not supposed to distribute the credit, but I have distributed the credit, or I distributed the credit in excess. That is ISD default. Then C for collected tax not deposited within 3 months, or collected an amount as tax not deposited within 3 months. What is the difference between these two? Collected tax not deposited means I am supposed to collect tax, I collected the tax, but I have not deposited or not paid. Whereas a representing as tax, I collected an amount. For example, I am making exempted supplies, but I collected GST from the customer, or I need to collect 5%, but I collected 12% or 18%. So this is called as amount collected as tax, representing as tax, and not deposited within 3 months. R for registration related default. Registration related default means not getting registration or giving false information for registration. E for erroneous refund. Erroneous refund means I am not supposed to get refund, but I got the refund. D, disposal of goods while detention or seizure is operational. That is, already they have seized the goods, and when the proceedings are going on, what I did, I barged in and I took my goods and I came out. That is called as disposal of goods while detention or seizure is operational. Then when the moment seizure happens, possession is with them, but I tried to take those goods and I have disposed it of. That is that. ITC default means input tax credit I have taken in excess, or wrong credits or fake credits. Then tampering with material evidence. Material evidence is like documents, etc. and all. So officer is coming for search and they have identified some diary, and that diary contains a paper. In that paper some details and all written. So you are asking, sir, show me that paper, and you torn it. You understood? So like that you try to tamper the material evidence. Got it? So that is this, tampering with material evidence. Suppression of turnover. You try to suppress the turnover even though it crossed 40 lakhs, but you are telling that I am not earning that much, I am earning 10 lakhs, 5 lakhs only, so therefore I am not required to register. Like that you have suppressed your turnover. TDS TCS default. So you are supposed to deduct the TDS, not deducted, but deducted, not remitted, or remitted short. That is TDS TCS default. Failure to furnish information or document. The department is asking you to submit the information or documents, but you have not submitted the documents. Then transportation related default. So you have transported without the valid documents, etc. That is transport related default. And these are the offences which are given in section 122 subsection 1. And for these offences, the penalty will be 100% of tax, or ITC, or TDS TCS, or refund, whatever it may be, amount involved in the offence, or 10,000, whichever is higher. All these penalties are under CGST Act, which means an equal amount will be payable under SGST Act also. Then what is the difference between section 122 subsection 1 penalty for transportation versus 129 penalty, because both are for transportation only? Simple. First, the lorry went and transported without e-way bill. This fact we came to know only during audit. This fact that they have transported without e-way bill or without documents, we came to know while doing the audit of consignor or consignee. Generally GST department will do the audit under section 65. When they do the audit, they will identify all these details. At that time they will invoke penalty under 122 subsection 1. During the transit itself, if they identify, then the penalty will be under section 129. Okay, whatever we discussed, that 200% of tax, etc. is only during transit. Once it reaches, and thereafter we came to know that the goods are transported without documents, 122 subsection 1. That's the connection to this transport related default given in 122(1) versus that 129. Then here, dealing in goods liable for confiscation, that is given in section 67 read with 130. So there we have seen one penalty, that is a connection to this 122 subsection 1. Then in case of these offences, we understood what is the penalty, and this penalty is on whom? This penalty is on taxable person. Who is a taxable person? One who is registered or liable to get registered. Then 122 subsection 1A. This 122 1A is on the mastermind, who is a person making invoice default, ISD default, ITC default. So at his instance only the offence is committed and is a beneficiary of these offences, then there will be penalty which is tax evaded or ITC availed or passed on. So person at whose instance offence is committed and who is beneficiary of invoice default, ITC default or ISD default, 2 points. At whose instance the offence is committed and who is a beneficiary of these offences. Okay, both the conditions should be satisfied. But suppose in the exam if they give at his instance the offence is committed, so don't check beneficiary, assume that the beneficiary will be there, he will be the beneficiary, because at his instance only the offence is committed, because already they tested this question in one attempt. In that attempt they have given at that person's instance the offence is committed like that, but they have not mentioned whether they retain the benefit or not. But usually at that person's instance only when the offence is committed, naturally they will retain the benefit out of that offences. Due to that reason this section 122 subsection 1a can be invoked in that case. And what will be the penalty? ITC evaded or ITC, tax evaded or ITC passed on, etc. For example, I am creating fake registrations. Because of these fake registrations, ITC could be transferred to some other person. Now in that case, on the suppliers there will be invoice default 122 subsection 1, whereas on recipients who enjoyed the ITC also 122 subsection 1 ITC default will be there, but on me, so that is a person who, at whose instance this offence is committed and retains the benefit out of these offences, on me whatever is the tax evaded or ITC passed on, that much will be the penalty on me. Got it? But this is on any person. Not necessary that they should be taxable person, they can be taxable person, registered person or unregistered person, any person there will be 122 subsection 1a. 122 1a should be compared with 122 subsection 3. 122 subsection 3 is on the supporting characters, that is on a main character, accused number 1, there will be 122 subsection 1, that is a main character, whereas the supporting characters who assist the main characters, on them 122 subsection 3, offences where person is not directly involved in any evasion but may be a party to evasion. For example, I am asking my driver to transport the goods without documents, so I am doing transportation related default and my driver will come under 122 subsection 3 because he assisted me. Then I am asking my accountant to make supply without invoice, so on me there will be invoice default, but on my accountant there will be 122 subsection 3. Then I am a registered person, you are unregistered person, and I am making sale to you without invoice and you did not ask for invoice. You are telling, okay sir, you don't have to give invoice, and you made the cash payment, and this transaction department came to know. On me invoice default under 122 subsection 1, supply without invoice. On you, unregistered person, you should have demanded the invoice, you did not demand the invoice, on you penalty will be 122 subsection 3. Okay, that is this. Up to 25,000 rupees will be the penalty. Offences where the person is not directly involved in any evasion but may be party to evasion, or if he does not attend any summons. So summons were issued and he did not appear. So summons, whenever it is issued by the officer, that person should appear before the officer, because all the officers under GST are quasi judicial bodies, and whenever they are asking we need to go and appear before them. If you are not appearing, then there will be penalty up to 25,000 rupees. Or produce documents, not producing documents, if he does not produce documents. Already not producing documents, failure to furnish documents is there in 122 subsection 1. So failure to furnish documents, like that one point is there. What is the connection between that and this not furnishing the documents in 122 subsection 3? Simple connection. So that is on the registered person, the owner of the business, whereas this is on the accountant or any person who is involved in that office. So if they are not sharing the documents, so produce documents up to 25,000 rupees. And what is the difference between 122 1a and 122 subsection 3? Say for example, there is a chartered accountant and that chartered accountant abetted to commit the offence. So he planned and gave, this way you do so that you don't have to pay tax, like that. Now in that case, on chartered accountant, what type of penalty will come? Whether 122 1a or 122 subsection 3. If he collected only the fees, then 122 subsection 3. If he tried to retain the benefit out of the offence, so then in that case it will be 122 subsection 1a. So this can be asked because we have ethics under GST also, so they can connect it to CA. In addition to that, what other penalties CA can be having as per ICA Act? that provision also they will be asking you to write. So you connect it to that professional misconduct point is there na, you connect it to that. Then next 122(1)(b). 122(1)(b) is on e-commerce operator. So what is that e-commerce operator will be doing? Allowing unregistered supplier to make interstate supply of goods, and so there are certain compliances to be followed by e-commerce operator. So when the supplier is unregistered, so he should not allow that supplier to make interstate supplies. So can an unregistered person make supply through e-commerce operator? Yes. Every supplier of goods through e-commerce operator is compulsorily required to get registered. However, we have a relaxation. If I am making only intrastate supplies, I am not compulsorily required to get registered. I need to register only when aggregate turnover exceed threshold limit. So therefore, when I am supplier of goods making supply through e-commerce operator, being an unregistered person, I should not make interstate supplies because I should make only intrastate supplies. Number 2, I should obtain a unique enrollment number. So therefore, the e-commerce operator, you are the e-commerce operator, you need to ensure that I am not making interstate supplies. If you permit me to make interstate supply through your platform, then there will be penalty on you. And same way, if you are allowing me to make supply through your platform without obtaining unique enrollment number, then also there will be penalty on you. So allowing unregistered supplier to make interstate supplies, or allowing a person opting for composition scheme to make interstate supplies. Yes, a person who is making composition scheme should not make interstate supplies. If they make interstate supply, they are disqualified from the composition scheme. Or failure to furnish correct details in GSTAT 8. So these case on e-commerce operator, there will be penalty under 122 subsection 1b, 10,000 rupees or tax involved, whichever is higher. And what is the difference between 122(1)(b) versus 122(1)? Because here also we have TDS TCS default. What is the connection between these two? In this TDS TCS default, it is TDS not deducted, or deducted but not remitted, or short deducted. Then in that case, this 122 subsection 1 will come and the penalty will be 100% of the TDS, 100% of the TCS, or 10,000, whichever is higher. Whereas in this case 122(1)(b), it is not related to TDS TCS not deducted or deducted but not remitted, etc. It is on the procedural compliances. That is, if he allows an unregistered person to make interstate supplies, a composition scheme person to make interstate supplies, or not furnishing the details properly in GSTAT 8, then the penalty, please carefully listen, please listen, the penalty is not 100% of TDS TCS, it is 100% of tax, because TCS is just 0.5% of tax, 0.5% of value. So TCS is just 0.5% of value. For example, 1 lakh is the value. Say this, 1 lakh is the value of the goods, because you will think it has 100%. In option both will be there. See how they will test. So value will be 1 lakh, value of goods will be 1 lakh, value of goods will be 1 lakh, okay, through ECO, value of goods through e-commerce operator, and IGST at the rate of 18% and TCS at the rate of 0.5%. You know now the TCS rate has been reduced to 0.5%. Previously the TCS rate is 1%, that's a May 25 amendment, they reduced it to 0.5%. Now what will be taken as the tax here? So if it is section 122 subsection 1 penalty, how much will be the penalty under CGST Act? Come on. How much will be the penalty under 122 subsection 1 of CGST Act? Reason is what? TCS not deducted, or deducted but not remitted, or remitted less. Then what will be the penalty? The penalty will be 0.5%. That is, so 1 lakh into 0.25%, because CGST will be 0.25%. So or 10,000, whichever is higher, that will be 10,000, okay. Whereas section 122(1)(b) penalty, 122(1)(b) penalty under CGST Act, what is the penalty under 122(1)(b)? 1 lakh into 9% here, 1 lakh into 9% or 10,000, whichever is higher, that will be 10,000. Okay, so therefore no difference, and so why we need to do this way and multiply it to, I'll tell you. Had you not done this way, if it is 18%, if you take together 1 lakh into 18%, you would have taken 18,000. 18,000 or 10,000, whichever is higher, 18,000, like that you selected as the answer. But actually that is wrong, because you need to first do it CGST, multiply by 2, the answer is 20,000. Is it clear or not? And because 1 lakh into 9%, 9,000 or 10,000, whichever is higher, will be 10,000. Now suppose in this case, what we will do, we will take, if value of the goods is 10 lakhs, if value of goods is 10 lakhs, so let me modify this question little bit. So I am taking the value of goods as 10 lakhs. Then what will happen with respect to the penalty? Okay, with respect to the penalty, so penalty will be how much? 10 lakhs into 0.25%. So 10 lakhs into 0.25%, 2,500 or 10,000, whichever is higher, that will be 10,000. You understood? Whereas here 122 1B, 10 lakhs into 9%, 90,000 or 10,000, whichever is higher, 90,000. You got it? So there is a difference between the penalty under 122 subsection 1 and 122 subsection 1B. Please appreciate this difference. In exam, definitely there is a chance that you may go wrong. Okay, then sir, TCS is calculated on value of supply or on tax amount? Value of supply, not on tax. TCS is never on tax. TCS is on value. TDS is on value. Okay, don't forget this. Next, sir, whether 10,000 is under each act? Of course 10,000 is under each act. Clearly I mentioned CGST Act. So 10,000 is under each act. And what will be the penalty total into 2? Whenever you get the penalty, you multiply by 2, that will be total. Got it? Then next one, 122 1B, you understood na? Next, 122 subsection 2. 122 subsection 2 will come into picture only when there is demand and recovery under 73-74. If the demand and recovery is not invoked under 73-74, then 122 subsection 2 penalty will not come. So 73-74 comes into picture in 5 situations. Number 1, non-payment of GST, short payment of GST, wrong availment of ITC, wrong utilization of ITC, and erroneous refund. Okay, in 5 cases. So in this 5 cases also, if it is on account of fraud, collusion, willful misstatement, suppression of facts, or contravention with an intent to evade payment of tax, then it will be 74. If it is other than fraud, means you don't have intention to evade, then it will be 73. And in case of 73, that is other than fraud, no intention to evade, other than fraud, the demand order will be under section 73. It is on whom? It is on the registered person. What will be the penalty? Penalty will be 10,000 or 10% of tax or ITC or refund, whichever is higher. Whereas if it is fraud on account of demand order under section 74, it is also on the registered person. 10,000 rupees or tax or ITC, 100%. Here it is 10%, here it is 100%. Tax or ITC or refund involved, whichever is higher. Now, what is the difference between 122 subsection 1 versus 122 subsection 2? 122 subsection 1 is on taxable person, 122 subsection 2 is on the registered person. In 122 subsection 1, we don't have any classification as to other than fraud or fraud, but in 122 subsection 2, we have a classification about fraud versus other than fraud. So in case of other than fraud, we have a lower penalty, 10% of tax or ITC, whereas fraud it will be 100% of tax or ITC, etc. Then next point is that, so there are few offences which are common between 122 subsection 1 and 122 subsection 2. If you see 122 subsection 1, big list is there. Biodiscredits TFT like that. But in 122 subsection 2, the list will be 5. Non-payment of tax, short payment of tax. That is there even in 122 subsection 1. Collected tax not paid within 3 months. So non-payment, short payment, that is same. Then wrong availment of ITC, wrong utilization of ITC. It is also there in 122 subsection 1. Okay. And thereafter erroneous refund, that erroneous refund also there in 122 subsection 1. Then for these 5 offences, can there be a possibility of both 122 subsection 1 and 122 subsection 2? No, never. No, because out of these two, any one only will be coming. So therefore 122 subsection 1 and 122 subsection 2 are mutually exclusive. And for this purpose, what we need to do? That is, remember, whenever there is a tax due on a person, then only demand and recovery will be initiated under 73-74. Only when demand and recovery is initiated under 73-74, then only 122 subsection 1 will come. If there is no tax due against that person, only penalty needs to be levied, then it will be 122 subsection 1. So this we can understand with the help of 3 clarifications which is given under demand and recovery chapter. You see that page number 195, clarification number 1, CBIC circular on section 122 subsection 1 versus 122 subsection 2. So in this, what happens is that Mr. Amar is making supply or not making supply, but just raise the invoice to Mr. Balaji. There is no supply of goods or services. First of all, is Mr. Amar having any GST liability? No GST liability. Why no GST liability? Sir, he did not make supply. What is a taxable event under GST? Supply. Supply itself not happened just because he gave an invoice. Anywhere in GST law it is given that invoice is supply, invoice is the taxable event. No, supply is the taxable event. Supply itself does not happen. So therefore mere giving invoice, there is no liability on Amar. But Amar did the contravention, yes. But there is no liability on Amar. As there is no liability on Amar, 73-74 will not come on Amar, but there will be penalty under section 122 subsection 1, that is invoice default. So as 73-74 not coming, so 122 subsection 1 will come into picture. Okay. So demand and recovery under 73-74 cannot be initiated. So penalty leviable under 122 subsection 1, that is invoice default. 100% of tax involved or 10,000, whichever is higher. Understood? Then second clarification, Mr. Amar is not giving any supply, not making any supply, but just raised the invoice on Mr. Balaji. What he did, against his invoice, whatever ITC is there, GST paid, he availed as ITC and utilized for payment of his tax liability. Means he is having some tax liability. Towards the tax liability he has utilized, availed ITC and utilized for payment of tax liability. Say for example, he is having a tax liability of 4 lakhs and 4 lakhs, what he did, this fake ITC out of this invoice 1 lakh, he adjusted. So he would have paid only 3 lakhs. Instead of 4 lakhs, he would have paid 3 lakhs. Means there is a short payment. So because of which, can there be a recovery on Mr. Balaji? Yes. To the extent of 1 lakh, there can be a recovery on Mr. Balaji. As there is a recovery on Mr. Balaji, they will invoke 73-74. As they invoke 73-74, that penalty will be as per 122 subsection 2. So 122 subsection 1, even though he did in ITC default, will not be coming. So penalty under section 122 subsection 1 will not be leviable. Why? Because 73-74 is initiated, and as demand and recovery is initiated on Balaji, this penalty will not come. Then clarification number 3, Mr. Amar is raising invoice to Mr. Balaji without making supply. So when he is raising invoice without making supply, what Balaji did, he took the ITC. Again Balaji is also making, like giving invoice without supply to Mr. Charan. And first on Amar, he just made the invoice without supply, there is no liability on Mr. Amar, so the penalty will be under section 122 subsection 1, that is invoice default. Whereas on Mr. Balaji, he availed the ITC first and he utilized it for payment of a liability. That liability also fake liability, ITC also fake, liability also fake. You understood? So because of that, will there be any recovery from Mr. Balaji? No, no recovery from Balaji. Why? Because he is not having a liability at all, because he did not make the supply but just raised the invoice, but he did the contravention. So for that reason, 2 times penalty will be levied under 122 subsection 1, one on account of ITC default, another on account of invoice default. So 73-74 not initiated, however 2 times penalty payable under 122 subsection 1, that is ITC default and invoice default. What about Charan? Charan availed the ITC and utilized for payment of his regular tax liability. Now will there be demand and recovery on Charan? Yes, because he has utilized for payment of tax liability means to that extent he has paid lesser liability, so he need to pay tax, and that tax he need to pay. For that purpose 73-74 is initiated, even though he did ITC default. 122 subsection 1 is not applicable. So from these clarifications only we can understand that. So there will be 122 subsection 1 or 122 subsection 2 mutually exclusive. The moment 122 subsection 2 comes, 122 subsection 1 will not come. And here you can see, so what are the reasons for 73-74, page number 192. Page number 192, page number 192, reasons for issuing show cause notice. So there will be non-payment, short payment, wrong availment or utilization of ITC or erroneous refund. And that's where I connected the penalty here also. The penalty will be 122 subsection 2 in case of fraud, okay. Fraud, collusion, willful misstatement or suppression with an intent to evade, means there is a mens rea, intention, guilty mind is present. So that's where 74, 100% of tax or ITC or refund or 10,000 whichever is higher, and here other cases 73, therefore 10% of tax or ITC or refund or 10,000 whichever is higher will be taken. This is about 122 subsection 2. Now we are looking into 122 capital A. So we completed up to 122 subsection 3, look into 122 capital A. That's a newly added provision. Failure to register certain machines used in manufacture of goods as per the special procedure. So what happened, many tobacco manufacturers and all, so they have brought in a tax liability based on capacity, based on production capacity. For example, if you are having a machine and that machine has a production capacity of 1 lakh units. Now whatever may be your sales, but you need to pay GST based on 1 lakh units. Even if your production capacity is less than that and you need to pay like that, there is a provision. From quite a long time that provision is there, but you have not studied that provision because I have not taught you that provision, because it is not there in syllabus, okay. But this provision is there, okay. And what happened, these tobacco manufacturers and all, they used to buy lot of machines, and using these machines they will be making lot of production, and so therefore no one will know about these machines. So production capacity is not noticeable. Then department came out by telling that every machine that you have, you need to register the machine, not register the business, you need to register the machine. Like that they have brought in one special procedure, and for that purpose these people were not considering that, okay fine, why should we register machine and all. So therefore they brought in a penalty. Now what is that penalty? 1 lakh per machine if you are not registering it. 1 lakh per machine, 1 lakh for each unregistered machine. If you are having 10 machine, 10 into 1 lakh, 10 lakhs you need to pay as penalty. Now they will come and register for that reason. Failure to register certain machines used in manufacture of goods as per special procedure, 1 lakh for each unregistered machine. And I have given some questions on amendments, so that you can see in my website. If you are having solved workbook, it is there at the end of that book. I have given even separately also here in downloads for everyone. I have given CA final IDT questions based on amendments for May 25 exam. So in this approximately some 26 questions I have given. So just to follow these 26 questions, it's a high possibility out of these 26 questions, easily 2 to 3 questions can come in exam, not necessary verbatim. Verbatim if it comes, na, I will become pan India faculty, okay. So it will not come like that, but they will modify in these lines, they will be creating, okay. See this question number 26, XYZ Private Limited is registered, is engaged in manufacture of tobacco and pan masala. The company is required to register its manufacturing machines under a special procedure notified under section 148 of the CGST Act. However, during an audit in April 2025, it was found that XYZ Private Limited failed to register 5 machines used for manufacture of tobacco products. On the basis of this new section 122A, the proper officer issued a penalty order on April 20, 2025 for non-registration of machines. Compute the amount of penalty as per the penalty order. So penalty payable under 122 subsection A of CGST Act. CGST Act is 1 lakh for each unregistered machine, which means 1 lakh into 5 lakhs, but this is under CGST Act. Suppose if they ask under total penalty into 2, so 10 lakhs will be the penalty, got it? So 1 lakh under CGST Act. Mostly you will get provisions only under CGST Act. 99.999999% of the cases it will be CGST Act only will be tested in exam. IGST Act rarely it will be coming in exam, so don't break your head in that. CGST Act only you need to first determine. Next, what is the course of action on the part of XYZ Limited after receipt of the penalty order? They should pay this penalty and register the machine in accordance with the special procedure within 3 days of receiving the penalty order. And what will happen if they are not registering within 3 days from the penalty order, then the machines will be seized. Okay, so you just connect that point and write here, that is failure to register machines. So register within 3 days from penalty order, register and pay penalty within 3 days, from penalty order, otherwise machines shall be seized. Okay, so this point may be tested because it's an amendment and many people will ignore this amendment. That's why I say like that. Register and pay penalty within 3 days from penalty order, otherwise machine shall be seized. Then section 123. Section 123 penalty will come into picture in case of failure to furnish the information written under section 150 within 90 days from the date of notice. As per section 150, GST department is having power to seek information from any person. So any person who possesses the taxpayer's information, he can be a chartered accountant, he can be registrar, or he can be bank manager. From any person they can seek the information, and they need to submit the information about that particular taxpayer. For example, bank manager is required to submit the details of the bank statement of a particular person. So within 90 days from the date of notice. If not submitted, then there will be a penalty which is 100 rupees per day, subject to maximum 5,000. Again it is under CGST. This is like our regular late fee for delay in filing returns. So 100 per day, failure period subject to maximum 5,000. Section 150 empowers the jurisdictional commissioner or officer authorized by him to seek notified person from filing information return. Then 124 will come into picture in case the information is not submitted under section 152. As per section 152, what will happen? So we need to submit the information, but the difference between 150 and 151. 151 is like we need to give the data. 150 is about the information. Example, if GST department is asking the bank manager to submit the bank statement of Mr. THARUN'S, that is section 150. If the bank manager is asked to submit the data of all the account holders whose gross receipts in a year exceeds 40 lakhs, that will be information under 151. 150 information not submitted within 90 days, penalty will be 123, and 151 information not submitted within the time limit. What is the time limit? Not defined. Means case to case basis, GST department will give notification and will specify the deadline in that notification itself. If not submitted by that time, then information not submitted under 151, penalty will be 124. And what is that penalty under 124? If it is a first time offence, up to 10,000. If it is a continuing offence, then it will be like for every day 100 rupees, for every day delay 100, which means up to 10,000 will be there. Up to 10,000 will be there, plus 100 rupees for every day delay, but the overall, that is the 10,000 plus this 100 rupees, overall will be up to 25,000 rupees. So continuing offence 100 rupees per day for the failure period, subject to maximum 25,000. So be careful. For example, it's a continuing offence, like that it is given. Don't just take 100 rupees per day. Got it? So this up to 10,000 also will be there. 10,000 will be there, plus for example, if the delay is 100 days, 10,000 plus 100 into 100. What is that? 100 into 100? 10,000. So 10,000 plus 10,000, 20,000. This is under CGST Act. The same penalty will be there under SGST Act also, but the maximum will be 25,000. Section 152. So whatever information that is obtained under 150 and 151 cannot be used without giving an opportunity of being heard to the person concerned. For example, so GST department is asking the bank manager to share information about me, and the bank manager is giving the details like, I have made a turnover of 2 crores, but the tax payable, that is GST records, says that I have paid GST only on 1.5 crore, but remaining 50 lakhs I have not paid GST. Now they should not pass a order directly on me without giving an opportunity of being heard. They need to send me a notice stating that as per your bank statement, so 2 crores is the gross receipts, but you paid GST only on 1 crore 50 lakhs. Why on 50 lakhs you have not paid GST? Now I have an explanation to say, I am making exempted supplies. So because of that exempted supplies, I have not paid GST. So some genuine reason will be there, or that 50 lakhs is not my sales, that 50 lakhs is my borrowals, capital receipts. I have taken a loan and that loan got credited in my bank account. So therefore some reasonable explanation could be there. For that reason, they need to give me a notice and seek explanation, and thereafter only they can proceed against that information which is obtained under 150 or 151, that is about 152. Then general penalty under section 125 up to 25,000. So wherever we have up to means they can levy less than that also. Got it? In 3 places we have up to penalty. What is that? First, section 122 subsection 3. 122 subsection 3, you see there, up to 25,000. Again 124 up to 10,000. Then 125 up to 25,000. In these 3 places, section 126 will come into picture. Applicable in case of 122 subsection 3, 124 and 125. No penalty for minor offences. What is minor offences? So offences where the tax or ITC involved is less than 5,000, not less than or equals to less than 5,000, less than 5,000. Then there is no penalty. This is the power of the officer. So this section 126 is power of officer. Power of officer not to levy any penalty or reduce penalty. Got it? Power of officer. And where the offence is easily rectifiable and made without a fraudulent intent or gross negligence. For example, I gave you an invoice without mentioning SAC. When I am not mentioning SAC, that is an offence. So you can complain, and GST department will come and ask me, so you have not mentioned SAC. Yes sir, sorry. Next time onwards, I will give the invoice with SAC. Easily rectifiable and made without a fraudulent intent. If I have a fraudulent intent, I would not have given invoice at all. So therefore made without a fraudulent intent. In that case also they can waive off the penalty. What are the 2 cases? Number 1, no penalty for minor offences or which can be easily rectifiable and made without fraudulent intent or gross negligence. Okay. Then section 127. This section 127 is a notice and order only for levying penalty. Only for levying penalty. In that example of Mr. Amar. So Mr. Amar, there is no penalty under 7374. There is no proceeding under 7374, but the penalty needs to be levied only under 122 subsection 1 for invoice default. How that penalty can be levied? Directly the penalty cannot be levied. Some notice is required. That notice will be given under section 127. Where proper officer is of the view that a person is liable to pay penalty and the same is not covered, underline, not covered under any other proceedings. Not covered under any other proceedings, he may levy penalty after giving a reasonable opportunity of being heard. So section 127 is notice and order only for levying penalty. So this particular section is notice and order. Notice and order under section 127 only for recovery of penalty. Only for recovery of penalty. Okay, only for recovery of penalty. Definitely if I want to make a question, I can make on this, because no one will write, 4 marks gone, okay, or 5 marks gone. Then section 128, section 128, government may by notification waive in full or part any penalty referred to in section 122, 123, 125 or any late fee for delay in filing returns. What is the difference between 126 and 128? 126 is the power of the officer, but 128 is the power of government. They can waive off completely all penalties except 124 penalty. See there in the sections we have 122, 123, 125, 124 is not there, and even any late fee for delay in filing returns also can be waived off. Section 133, that is, officer who is engaged under this act willfully discloses the information about a taxpayer with any other person otherwise than in execution of duties, because they will possess the taxpayer's returns information, and that returns information is a sensitive data that should not be shared with anyone otherwise than in execution of duties, maybe for the purpose of preparing a notice or for the purpose of passing an order. Then they can share with any other officer or any other person, but otherwise they should not do that. And if they are doing, then there will be a penalty. How much will be the penalty? Up to 25,000. In addition to that, there is a possibility of imprisonment also, or imprisonment of 6 months or both. Okay, imprisonment is for a period of how many days? Only 6 months, maximum 6 months, up to 25,000, or imprisonment of 6 months or both. Then this is about offences that leads to penalties. So two headings we have completed. First one, what are the offences that leads to search and seizure? Offences that leads to penalties. Now we are looking into offences that leads to imprisonment. Offences that leads to imprisonment, you need to remember ICE bid. Now if you remember biodiscredited TFT, this will become easy for you. First, in this ICE bid, how many I's are there? I, C, E, B, I, D, I. In biodiscredited TFT, 3 I's are there. What are they? Invoice default, ITC default, ISD default. In these 3, tell me which is not that much severe for imprisonment. ISD default. Other 2 will come for imprisonment, that is invoice default, ITC default. Okay, so ICE, I for invoice default. C, in biodiscredited TFT, what is C? Collected tax or collected an amount as tax not paid within 3 months. In these 2, which is more severe? Collected an amount as tax, that is only given for imprisonment. Collected an amount as tax and not paid within 3 months, but collected tax not paid within 3 months is not an offence for imprisonment. Okay, be careful with respect to this. Then that is C, I, C, E. E for erroneous refund. Okay, erroneous refund. Then B for books of accounts default. Only one is there. E, only one is there in a biodiscredited TFT, and even this B also only one is there. I, ITC default. D, there are 2 D's in biodiscredited TFT. What are they? Dealing in goods liable for confiscation, disposal while detention or seizure is operational. But in these 2, which is more severe? In case of disposal while detention is operational, already I have seized it and therefore you disposed of, but I know the value of the goods, etc. and all. But dealing in goods liable for confiscation is more severe because you can easily escape. So for that reason, that is only covered under imprisonment. So ICE bid, you need to remember I for invoice default, C for collect an amount as tax not paid within 3 months, and E for erroneous refund, B for books of accounts default, I for ITC default, and D for dealing in goods liable for confiscation, plus attempt to commit or abetting commission of this ICE bid. Attempt to commit, sir, I tried, but I was not successful. Okay, murder includes attempt to murder also, so therefore attempt to commit this offence is also covered here. Then abetting commission means encouraging, supporting, planning, etc. So all the chartered accountants or cost accountants or consultants who are all involved in giving plan to the people, so will come under abetting commission. Got it? That's where whenever a taxpayer is caught in GST, so that particular consultant of the taxpayer, he will get sweat in AC room, because he will have a fear. Under abetting to commit an offence, he may be caught. Got it? Then so that is about this. And in this case, you can see collected tax but not paid within 3 months is not an offence for imprisonment, but collected an amount as tax but not paid within 3 months is an offence for imprisonment. Now how to remember this imprisonment schedule? First you need to see, so 1, 2, 5. So see this, how you need to understand, I am telling you. 1, 2, 5. 1 crore, 2 crores, 5 crores. 1, 3, 5. This alone you remember. 1, 2, 5. 135, 125, 135, 1 crore, 2 crore, 5 crores, 1 year, 3 year, 5 year. In all these cases, if you see imprisonment, minimum 6 months is common, means minimum 6 months is the imprisonment, and everywhere it is and fine, and fine. How much is the fine? As decided by the court, as decided by the court, and all this is for the first time. Subsequent, there is nothing, no more discussion. You are already a senior, so why we need to differentiate how much offense you did? Senior always up to 5 years and fine, minimum 6 months. And here, if it is a books of accounts default, in this entire ice bed, for books of accounts default alone, they are giving a lower imprisonment, that is up to 6 months or fine or both. Okay, then this 1 year, 3 years, 5 years is for what? Other offences. For books of accounts default, don't see the amount, always it is 6 months or fine or both. Then next, that 1 crore point is there, na? That 1 crore point is applicable only in case of invoice without supply. So invoice without supply only invoice without supply. What if supply without invoice? No, this 1 year point is not applicable. So therefore invoice default issues invoice without supply where the amount involved is greater than 1 crore, then only up to 1 year. For all other offences, it will be more than 2 crores. So for supply without invoice, so it should be more than 2 crores, then only it will come. If it is greater than 1 crore, it will not come. Got it? So what is the table that you need to remember? Say this. First, what you need to see, that is books of accounts default. Books of accounts default. First time, subsequent, books of accounts default. Thereafter, next 1 crore greater than 2 crores, greater than 5 crores. This 1 crore point is only for invoice without supply, correct? Invoice without supply. But this 2 crores etc. is for ICE bid minus B. Why ICE bid minus B? Because for books of accounts default this is not applicable, but all other offences ICE bid minus B it is applicable. And if it is first time, so books of accounts default up to 6 months or fine or both, whereas here greater than 1 year na, so up to 1 year, greater than 2 crores up to 3 years, and greater than 5 crores up to 5 years. Okay, then or fine or both, or sorry, and fine. It is not or fine, it is and fine, and fine, and fine. In all these cases, what is the minimum? Minimum 6 months. And if it is subsequent, no more discussion, everywhere it will be what? Up to 5 years plus fine, okay, or and fine, and there is a minimum of 6 months. Okay, so you write and practice it once again at your end, the imprisonment table alone, so that you will not make the mistake. Okay, then that is about this imprisonment schedule. And you can see here penalty under 122 1 is on whom? Taxable person. 122 1A on any person, 1B on e-commerce operator, 2 is only on registered person, 3 is on any person. 123 is on whom? Person required to file information written under section 150. Penalty under 124, person required to file information under 151. Penalty under 125 is on any person. Just update this. Then make it quick. So penalty under 123, person required to file information written under 150, 124, person required to file information under 151, 125 is on any person, any person. Then we have arrest. What are the offences that leads to arrest? Remember IIC. What is that IIC? First, invoice default. Next ITC default. C, collected an amount as tax not paid within 3 months. What is the difference between arrest and imprisonment? So when a person is arrested, so the person is taken into the custody of the officer, and thereafter he will be produced before the magistrate, and thereafter the magistrate will decide whether the imprisonment order to be passed or not passed. Whereas if the imprisonment order is passed, so far he was under the custody of the officer, now he will be going into the imprisonment. Whereas sometimes the offence can be imprisonment but without arrest. Without arrest also a person can be imprisoned. That is, so first the charges will be made against that person, and till the time imprisonment happens he need to come to the court whenever called for, and in every hearing he need to come, and finally the court will decide imprisonment, then he need to say tata bye bye to his family and he will go for imprisonment. So therefore imprisonment can be with arrest or without arrest. So therefore arrest and imprisonment both are not same, don't get confused. So these are the three offences: IIC, invoice default, ITC default, collect an amount as tax and not paid within 3 months. But how much should be the tax involved? More than 2 crores, then only arrest can be made. But there are certain guidelines for arrest. After considering the following factors only, the arrest has to be exercised. First, there should be proper investigation of the offences. Casually it should not be. So therefore really there should be, like these 3 offences, and proper investigation should be made. Then to prevent a person from absconding, sometimes if the arrest is not made, the person may abscond, he may run away. For the sake of that, the arrest can be made. Number 3, these offences are committed with a guilty mind, that is mens rea is present, then only arrest should be made, otherwise should not be. If the person is telling that it's an error and we don't have any intention to defraud the revenue, and all the evidences are in support of that person stating that he don't have intention to evade, then definitely arrest should not be made. Large amount of evasion, just because it is 2 crore 1 rupee, don't arrest, okay. So it should be really large amount. So 2 crores it crossed by 1000, it crossed by 2000, or it crossed by somewhere like 5000, don't arrest. Really the amount should be so huge, and this 2 crores should not be interpreted so loosely that it crosses 2 crores immediately arrest should be made, not like that. There really the large amount of evasion should be involved. And if this person is outside, he may tamper the evidence, he may try to kill the evidence like witness and all, or he may try to blackmail the officer. I know where your daughter is studying, I know where your wife is going, like that. He may try to intimidate or influence, you understood? So due to that reason, possibility of tampering material evidence, or can intimidate or influence within, or they are the mastermind or key person in the offense. Because of these reasons, these are the guidelines they need to check before making an arrest. It can be asked as a theory question, okay. So this is something which usually we will not read in study material and go, and they can ask. After considering the following factors only, arrest can be exercised. Then what is the connection between imprisonment, bailability of offence and arrest provision? Now we need to understand what are the offences that leads to cognizable and non-bailable. Cognizable means what? A person can be arrested. 4 terminologies we should know now. Cognizable means person can be arrested without a warrant. Non-cognizable means person can be arrested only with a warrant. Bailable means the arrested person can be granted bail by the arresting officer. And non-bailable means the person arrested, the officer cannot grant the bail and he need to be produced before the magistrate. And if it is a cognizable offence, all cognizable offences are non-bailable offences, therefore the person should be produced before the magistrate within 24 hours from the arrest has been made. Otherwise the person should be released upon, because the person has been arrested without the warrant, so he should be produced before the magistrate. That's where like many movies and all you would have seen, night times also they go, police will take to the magistrate home and they will be disturbing the magistrate, okay, and magistrate and all will scold, next day you can come to court, why night time you are disturbing like that. So that is the reason. So see this, tax involved, see this, offences specified in section 132, invoice default, ITC default, collected an amount as tax and not paid within 3 months. These 3 offences, if it exceeds 5 crores, then it will be cognizable and non-bailable. Arrest can be made. Inform the grounds of arrest and produce before the magistrate within 24 hours of arrest. and as the amount exceeds 5 crores, definitely imprisonment up to 5 years. Where the tax involved exceeds 2 crores but does not exceed 5 crores, then in that case it is non-cognizable plus bailable. And can the arrest be made? Yes, arrest can be made, but the arresting officer will give bail. ACDC can give bail. If bail is not taken, then forwarded to the custody of magistrate. And imprisonment, what is the period for which imprisonment will be made? Imprisonment up to 3 years and fine. And in both these, all these cases, there is a minimum imprisonment of 6 months. Any other offence is not coming under cognizable, no arrest, etc. So any other offence, arrest cannot be made, but in law they gave that as non-cognizable and bailable. So tax involved exceeds 2 crores, exceed 5 crores, imprisonment is there. So now what you need to write in exam? Arrest cannot be made, non-cognizable and bailable, but when arrest cannot be made, the question of bailability does not arise. And however, there appears an error in drafting, as all offences other than cognizable and non-bailable are treated as non-cognizable and bailable. Due to that reason only we follow this, and you need to write like this and then write a note like this. Got it? Next. So this is about cognizable, non-cognizable, etc. Sir, in case of imprisonment limits, tax amount is checked or transaction value is checked. So it is given as amount involved. Where is it given as amount involved? Clearly I gave tax involved. All these are tax involved. Okay. So where the amount of tax, this is tax here, 1 crore, 2 crores, 5 crores, these are all tax. Here also I gave clearly tax involved is greater than 2 crore, tax involved is greater than 5 crore. It's not the value, it is the tax. Tax amount is more than 1 crore, tax amount is more than 5 crores, like that. Okay. Then look into this cognizable offence, non-cognizable offence. So person can be arrested without a warrant and to start investigation with or without permission of court. Non-cognizable offence, person cannot be arrested without a warrant and investigation cannot be initiated without court order. And in the case of arrest, provisions of Code of Criminal Procedure, now BNSS, should be followed during the arrest. Then the last area is offences that leads to compounding. First we saw offences that leads to search and seizure. Second, offences that leads to penalties. Third, offences that leads to imprisonment. Then offences which are cognizable and non-bailable. And then we are looking into compounding of offences. Okay. And cognizable, non-bailable, all those things also we saw. First we completed search pass. Second we saw penalties. Then after that I told you imprisonment, then arrest, then cognizability of offence, finally compounding. In compounding, what is the meaning of compounding? Granting immunity from prosecution, means imprisonment upon payment of a compounding fee by the offending person. So anyhow, if the imprisonment order is passed, so they will try to bribe the officers. So therefore, why to bribe? Directly itself you pay. So compounding fee, so that you will get. But compounding can be done only once in the lifetime of a person. Not that every year you make mistake and tell I will pay money, sir, give me immunity. No, only once. So is there a possibility of subsequent compounding? Never. So restriction on subsequent compounding, all offences under section 132, there is a restriction on subsequent compounding. But there are two offences. First time compounding itself, it is not possible. What is that? Invoice without supply or invoice without supply, but supply without invoice possible. Invoice without supply, first time compounding is not possible. First time itself is not possible. Then prosecution order is passed, means imprisonment order already passed. The moment imprisonment order is passed, now officer also can't do anything with respect to that. Before passing imprisonment order, he can withdraw the case. So after collecting the compounding fee, but the moment imprisonment order is passed, the appeal only can be made. Then appeal, that too regular appeal is not possible. Using writ only we can go to the court. Okay. And meaning of compounding, granting immunity from prosecution. What is the compounding fee? The compounding fee will be general compounding fee 25% to 100% of the tax involved. So this 25% to 100% is general, not for any specific offence. So in the question when they are asking, so there is a compounding of offence, what is the compounding fee payable? You just write 25% minimum compounding fee and 100% of the tax is the maximum compounding fee. But specifically if they list out the offence, this is the offence, how much is the compounding fee? For that we have a specific point you can see below. If the offence is under section 132 and if it is books of accounts default or disposal or dealing in goods liable for confiscation or attempt to commit or abetting commission of any offences, the compounding fee will be 25%. B or D or attempt to commit 25%. If it is any other offence except invoice without supply, and then because invoice without supply there is no possibility of compounding, then tax or ITC or refund greater than 2 crores but does not exceed 5 crores, 40 to 60%. If it exceeds 5 crores, 50 to 75%. So keep that in mind. First, books of accounts default, dealing in goods liable for confiscation, attempt to commit or abetting commission of offences 25%. All other offences, and if it is more than 2 crores but does not exceed 5 crores, 40 to 60%. More than 5 crores, 50 to 75. Why more than 1 crore is not there? More than 1 crore only for one offence, that is invoice without supply. If there is no imprisonment, compounding will not come. Imprisonment is applicable only if it is more than 1 crore, but more than 1 crore only for one offence, that is invoice without supply, and that invoice without supply there is no possibility of compounding. That's why more than 2 crores. So first slab 40 to 60, next one 50 to 75. This is the specific compounding fee. Whether this compounding fee alone is payable or in addition to the tax, interest, penalty also payable, everything. So tax, interest, penalty also payable. And next special points, compounding is not possible if the prosecution is not initiated, possible if prosecution is not initiated or during prosecution, but it should not be completed. After initiation of prosecution, prosecution means imprisonment proceedings in the court. After initiation of that also, upon payment of compounding fee, all proceedings shall stand abated. What is the procedure for compounding? Step number 1, first we need to make an application. So for compounding, along with payment of tax, interest, penalty, so we should pay the tax, interest, penalty first itself before making the application for compounding, and commissioner call for the records from the concerned officer, and compounding order will be passed within 90 days from application. Once we make application, within 90 days they will pass the compounding order, and thereafter, after passing compounding order, the applicant shall pay the compounding fee within 30 days from the date of receipt of order. Then next, suppose if there are 2 offences that I have committed, books of accounts default is also there and ITC default is also there, then in that case, so will they divide and collect 25%, 40 to 60% like that? No, the highest only will be applicable. However, where the offence committed by a person falls under more than one category specified above, the compounding amount in such case shall be amount determined for the offence for which higher compounding amount has been prescribed. Then offences, penalty to compounding. Now I am merging everything, all the discussions which I have made so far. So see this, let's complete this chapter, then go for a break, okay, so that the mental block is gone. So see this, types of offences, ice bit, and first we need to check what is a penalty, what is the arrest, imprisonment, cognizance plus non-bailable, compounding, okay. And first we will see invoice default. What is invoice default? Invoice without supply. What is the penalty? 100% of tax or 10,000, whichever is higher. This under CGST, SGST. Arrest, yes, if the amount exceeds 2 crores. Invoice without supply, yes, if the amount exceeds 2 crores because it is in IIC. Then imprisonment, yes, if the amount exceeds 1 crore itself. 1 crore itself there is an imprisonment possible. Will it come under cognizable plus non-bailable? Yes, because it is also in IIC. So when it exceeds 5 crores, compounding first time, impossible, not possible. Then invoice default, supply without invoice, penalty same. Arrest, yes, if it exceeds 2 crores. Imprisonment, yes, if it exceeds 2 crores. Cognizable and non-bailable, yes, if it exceeds 5 crores. And what about compounding? Compounding is if it exceeds 2 crores, 40 to 60%. If it exceeds 5 crores, 50 to 75%. Got it? Next, collected an amount as tax, not paid within 3 months. Penalty, same. Arrest, yes, more than 2 crores. And imprisonment, yes, more than 2 crores. Cognizable and non-bailable, yes, more than 5 crores. And compounding fee, same as above. Then erroneous refund. Erroneous refund penalty, yes, same as above. And arrest, no. There is no arrest in case of erroneous refund because arrest is only in case of IIC. So no arrest. And is there a possibility of imprisonment? Yes, because I is bit, in that E is there. So imprisonment is possible if it exceeds 2 crores. Will it come under cognizable and non-bailable? No, because cognizable and non-bailable is only IIC, erroneous refund is not there in that list. And what will be the compounding fee? Same, that is more than 2 crores 40 to 60, more than 5 crores 50 to 75. Then next, books of accounts default. Books of accounts default penalty same. And will there be arrest? No, impossible. And what about imprisonment? Imprisonment is there, but it is different, up to 6 months or fine or both. Cognizable and non-bailable, no. Compounding, yes, as it is books of accounts default, flat 25%. Then ITC default. ITC default penalty will be same as above. Arrest, yes, if the amount of ITC exceeds 2 crores. And what about imprisonment? Yes, if it exceeds 2 crores. 2 crores. Imprisonment, if it exceeds 2 crores itself, it is there. Whereas cognizable and non-bailable, yes, if it exceeds 5 crores, because IIC should exceed 5 crores. So kindly correct that. IIC if it exceeds 5 crores. Cognizable and non-bailable, yes, if ITC exceeds 5 crores. 5 crores. And compounding, yes, normal. More than 2 crores, 40 to 60. More than 5 crores, 50 to 75. Dealing in goods liable for confiscation, same penalty. Arrest, no. And imprisonment, yes, if it exceeds 2 crores. Cognizable and non-bailable, no. But what is the compounding fee? 25%. So therefore, whenever you get a confusion, just refer to this table so that all your doubts will be clarified. Then summons, last section, section 70. Ordering a person to appear before an officer to give evidence or to produce documents is known as summons. So asking a person to appear before the officer and either to give the documents or to give the evidence is known as summons. And person to whom summons is issued is legally bound to attend either in person or through authorized representative. Underline through authorized representative, not necessarily that person should go. So even he can send an authorized representative by giving a power of attorney. These proceedings are deemed to be judicial proceedings, and if such person does not appear or does not produce documents or gives false evidence, he can be prosecuted under IPC. So because for all evidences, false evidences and all given, false witness, so we have a separate penalty under IPC that will come. And even under GST also there is a penalty. What is the penalty for not appearing during summons? Section 122 subsection 3. What is that? Up to 25,000 under section 122 subsection 3 of CGST Act. Then there are certain precautions while issuing summons. Number 1, can be exercised only when there is an inquiry and attendance is necessary. Only when that person has to appear. Maybe we are taking a video statement and therefore he need to come and give a video witness. For the sake of that, you can make him to come. Or should not, and next one, should not be issued repeatedly. Maybe he is good looking or she is good looking. You cannot call them repeatedly and all to see them. Minimum number of appearances should be there. Okay. Person should not be made to wait for longer hours unless as a matter of strategy. You are telling a meeting time of 11 AM, but you are asking them to come somewhere like 7 AM itself. You understood? No. Or you are telling 11 AM, they are coming at 11 AM and they should not be made wait so up to evening, because afternoon lunch they need to eat na. But as a matter of strategy, when you make them wait, when you make them hungry, they will not be like that. You understood? So because till the time you give Snickers, they will not be like that. So for the sake of that, you can do that. And you cannot call them night 11 o'clock you come, we will do sitting and discuss. No, not possible. Statement should be recorded only during office hours unless regards facts of the case. Say night time they are going to arrest one person. At that time this person is required for witness before the magistrate, because he is arrested under cognizable and non-bailable offence. He will be produced before the magistrate. Magistrate will ask for the witness. At that time the witness can be summoned to come in the night. That is this, unless regards the facts of the case. That's it. This is about offences, penalties, search, seizure, everything we completed. We'll take a break. Happily we will take a break. And one doubt, sir, which officer has the power to arrest a person? GST officer. GST officer. So which GST officer? Commissioner. Commissioner will have the power to arrest, but imprisonment will be passed by the court. Okay, fine. Okay, we'll start. We are going to discuss now segment 19 demand and recovery under GST. So in this segment 19 we are going to focus on three demand orders, that is demand order under 73, 74 and 76. Thereafter the recovery provisions. So there are two sections 73, 74 for recovery of non-payment of tax, and 76 also will come. These are the three main demand orders. And then payment of tax in installments, general provisions and other points related to recovery. So look into this. First, there is non-payment, short payment, wrong availment of ITC or utilization of ITC or erroneous refund. It may be on account of fraud, then 74 will come. If it is on account of other reasons, then 73 will come, that is error. No intention to evade, here there is an intention to evade. And what is the time limit for issuing the show cause notice and issuing the order? In case of 73, in case of 73, the order should be passed within 3 years from the due date of filing annual return for the relevant financial year, and in case of erroneous refund, 3 years from the date of erroneous refund. For example, financial year 2020-21. For financial year 2020-21, due date of filing annual return is 31st December 2021. So 3 years from the due date of filing annual return for the first 4 cases, that is non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC. In the 4 cases, it should be 3 years from the due date of filing annual return. So therefore, plus 3 years, it will come to 31st December 2023, 24, 22, 23, 24. 24 is the time limit by which the order should be passed. If it is erroneous refund, we will not see the due date of annual return, but we will see the date of refund. From there 3 years should be counted, and at least 3 months before the notice to be given, which means from the notice date to the order date there should be a minimum gap of 3 months, at least 3 months before the due date of passing the adjudication order. And wherever it is 3 years, you replace it with 5 years in case of 74, and the notice to be given at least 6 months before due date of passing the adjudication order, which means suppose if the financial year is 21-22, so for 21-22 31st December 2022 is the due date of annual return. So 23, 24, 25, 26, 27, 31st December 2027 is the date by which the order can be passed, and at least 6 months before, that is 30th June 2027, they should have given the notice. Means from the notice date to the order date there should be a minimum of 6 months. So it can be more than 6 months also, it's okay, but there should be a minimum gap of 6 months. And this is the overall time limit within which the order should be passed, that is 3 years for 73 and 5 years for 74. And next, is there a possibility of giving a supplementary notice? Supplementary notice is already for a particular financial year, they passed and they gave a notice. Now for the another financial year also the same issue they have identified. Say year number 1 they have identified that short payment of tax, instead of paying 12%, they paid only 5%. So there is a short payment by 7%. Next year also the same offence has been committed of short payment of tax. Now rather than giving a new notice for the last year for which already they gave a notice, now they will give an annexure, that is a supplementary notice. So merging these two notices, they can pass a single order. That is the purpose of giving a supplementary notice. Can that supplementary notice be issued? Yes. In both the cases supplementary notice can be issued, but it should be on account of same ground. For example, year number 1 it is short payment of tax, and year number 2 if it is ITC default, then for that they cannot give any supplementary notice, it should be a separate notice only. What will be the amount that will be mentioned in the order? Tax, interest and penalty, that should be mentioned in the order. And what is the penalty that is payable? If it is 73, that is 10% of tax or 10,000, whichever is higher, tax or ITC or refund. In case of 74, it is 100% of tax or ITC or refund, 10,000 whichever is higher. This is the penalty under GSTAT. Then when it comes to that tax evaded, like in imprisonment provisions we saw tax involved more than 2 crores, more than 5 crores. Is it the CGST tax or the overall tax? Overall tax. I told you only in 3 places we will see separately, that is penalty, late fee and pre-deposit. All other places wherever they use the word tax, that will be total tax. Even one more point also we have, that is minor offence. Minor offence means offence where the tax involved is less than 5,000. That tax is total tax or CGST tax, total tax. All those places the tax will be total tax only. Only when penalty, late fee, pre-deposit comes, it will be separate, but in all other places it will be total only. Got it? Then next one, here there is a discount offer. So first 73 penalty is 10% of tax or 10,000 whichever is higher, but if you pay before show cause notice, no need to pay penalty. If you pay after show cause notice but before order, then we need to pay like penalty or not need to pay penalty. No need to pay penalty, but we paid within 30 days from show cause notice, not 30 days from order. So before show cause notice no penalty, 30 days from show cause notice no penalty. Thereafter we need to pay the original penalty. Just 3 slabs are there. Before notice no penalty, after notice within 30 days no penalty, and thereafter we need to pay original penalty. Whereas in case of 74, before notice if you pay 15% we need to pay as penalty. After notice within 30 days if we pay, we need to pay 25%, and thereafter within 30 days from order if you pay, we need to pay 50% of penalty, and beyond that we need to pay the original penalty. So total 4 slabs. Before notice 15%, after notice within 30 days 25%, and thereafter within 30 days from order 50%, and thereafter it will be 100%. And this is about 73, 74. There is one more section, that is 76. This 76 will come into picture whenever an amount is collected as tax but not paid. Amount collected as tax means you are not supposed to collect tax, but representing as tax you collected and you have not paid, then recovery will be under section 76. Is there any time limit for show cause notice? No time limit for show cause notice. Even after 10 years also or 20 years also they can give the show cause notice, but once the notice is given for this, within 1 year they need to pass the order. And what will be the penalty? Penalty will be 100%. 100% of tax. Here 100% of tax means 100% of amount collected as tax or 10,000 whichever is higher, because this penalty will be in terms of section 122 subsection 1. So here 100% of tax means, sir, tax is not there now, sir. That's what. Whatever you have collected as tax. So amount collected as tax or 10,000 whichever is higher. And interest also will be payable, but there is a special point for interest. Interest will be payable at the rate of 18% from the date of collection. It's not from the due date. Usually interest will be computed from the due date, but in this case interest will be collected from the date of collection. So today I have collected, from today the interest needs to be computed. Usually while computing the interest, so that from date don't include, but till date you include. Okay. For example, from 20th of March, due date is 20th of March. From the due date till the actual date of payment means 20th March is the due date. Don't count 20th March, because that is a due date. On due date if you pay, there is no interest. So on the date of collection itself if you pay, there won't be any interest. So the interest will come thereafter, but the starting period will be from the date of collection till the date of payment. And what is the time limit within which we need to pay the amount as per the order? There are 3 orders we saw. 73 order, that is non-payment, short payment other than fraud, and 74 non-payment, short payment on account of fraud, 76 amount collected as tax. These 3 orders they passed. Once they pass the order, within 3 months we need to make the payment. Within 3 months from the date of order we need to make the payment, otherwise recovery will be initiated as per section 78. Whether we have EMI facility? Yes, for many things there is EMI facility. Why not for this? For this also we have EMI facility, but how many EMIs? Maximum 24 EMIs. No cost EMI, this is not Bajaj Finance. So therefore here it is cost EMI. What is that cost EMI means? Whatever you need to pay is taken as principal. The tax, interest, penalty will be taken as principal. That will be divided over the installments, and there will be interest on that principal component. Okay. So yes, max 24 months. And here there is one very important point, benefit of no penalty. Already this has been tested in November exam in MCQ. Benefit of no penalty if paid before show cause notice. Here if you pay before show cause notice, or if you pay within 30 days from show cause notice, there is no penalty. This is not applicable in case of self-assessed tax not paid within 30 days from due date. So for self-assessed tax, this is given in 73 subsection 11. For self-assessed tax means what? So that tax which is reported in GSTR 1 but not paid in GSTR 3B is known as self-assessed tax. So self-assessed tax means you need to understand which is reported in GSTR 1. You can write there what is the meaning of self-assessed tax. Self-assessed tax means reported in GSTR 1. Reported in GSTR 1, that is known as self-assessed tax. If you have not paid, then in that case, so you have to pay the penalty. If it is 73 invoked, you have to pay the penalty, and this benefit of no penalty or reduced penalty is not applicable. Then next one, section rule 142, which says that as and when the person makes the payment, because here before notice itself they are paying 15% or after notice they are paying 25%, but as soon as they pay they need to intimate, otherwise department will not know. And moreover, this payment should not be paid through regular 3B. If you pay through regular 3B, how they will know that this is paid towards this notice? So therefore this has to be paid only using DRC3. Only using DRC3 we need to select the notice number under which we are making the payment, so that they will not ask you to pay the extra penalty. For example, notice is given within 30 days from notice you are making the payment. When you are making payment within 30 days 25%, so remaining 75% they will not recover from you, and that 75% when they are not recovering from you, so you need to intimate that because of this we are making the payment. Okay, so where a person makes payment of amount under section 73 or 74 or 129 shall intimate the proper officer of such payment in DRC3. Proper officer shall issue an intimation. So what is the intimation in DRC5? Concluding the proceedings. But remember, it is not through 3B, it is through DRC3. Then other provisions see GSTAT. So far what we saw is 73, 74 and 76, 78 and 80, but there is one 75 which talks about the general provisions relating to determination of tax. In that, see the first point, if there is any stay that has been granted, so stay has been granted by court, GSTAT or court, then in that case that stay period, that department cannot take any action. Due to that reason the stay period will be excluded. For example, there is a stay for 6 months. Usually what is the time limit for passing the order? 3 years, which means automatically the time gets extended by 3 years 6 months, because during the 6 months they can't take any action. So the time limit for passing the order of 3 years gets automatically extended by 3 years 6 months. Reason being, the 6 months is like a period where they can't do anything, so they need to skip that period. Okay, so stay granted by court or GSTAT for notice or order, such period shall be excluded from the notice or order due date. Sir, it is given as excluded, but you are telling that we need to add. What is the meaning? That's what, while counting the overall period of 3 years, this period will be excluded, which means the overall period will be 3 years 6 months if the stay is granted for 6 months. Then notice issued under section 74 not sustainable in the court, then the same shall be converted to be 73 notice. But for that the 73 notice should have been given within the time limit. But the problem is, it is not 73 notice, it is a 74 notice. So let's try to understand what is this about. So first, a notice has been given under section 74. Notice under section 74. That notice under section 74 on 15th March 2025 for financial year 2021-22. For the financial year 2021-22, the notice is given on 15th March 2025. Usually for the financial year 21-22, what is the time limit by which the notice to be given? Within 4 years 6 months. Notice to be given within 4 years 6 months. So for financial year 2021-22, for financial year 2021-22, what is the due date of filing GSTR 9? The due date of GSTR 9 is 31st December 2022. From there you take 4 years 6 months. 5 years is the order date. So therefore order should be passed. Order under section 74 should be passed by which date? 31st December. So 23, 24, 25, 26, 27. Whereas the notice under section 74, show cause notice under section 74 should have been issued. What is the date by which the show cause notice should be issued? That should be at least 6 months before this, means 30th June 2027, not September, June, because there should be a minimum gap of 6 months between this. Now the notice is given on 15/3/2025. Is this a valid notice under section 74? Yes, it's a valid notice under section 74. Against this notice, so they passed an order also. Order under section 74 on say 31st March 2026, they passed an order. Can they pass an order on 2026? Yes, it is within the time limit and there should be a minimum gap of 6 months. So it can be more than 6 months also. So this order also valid. There is no issue with respect to this notice and order. But what happened? Against this order, appeal has been filed, appeal filed, and so they have decided, appeal filed, and GSTAT decided that there is no fraud, and this particular decision came somewhere on say 25th of September 2027, somewhere like 2028, 25th September 2028 they have given this decision. GSTAT has decided that on 25th September 2028 that there is no fraud. Now again, if it is non-fraud, they have to give the notice under 73, but the notice under 73 time limit is already over. So they cannot give because we are in 2028. The notice under 73 should have been given long back itself. So what is the time limit for giving the notice under 73? For financial year 2021-22, what is the due date of annual return? GSTR 9 due date is 31st December 2022, and the order under section 73 should be passed within 3 years. So what is the time limit? That is 31st December 23, 24, 25, and the show cause notice should have been issued. Show cause notice under 73 should have been issued by which date? 30th September 2025. Is that notice given under 74 within the time limit under 39, like notice under 73? Yes, the notice given under 74 is within the time limit under 73. Okay, so due to that reason, as notice given under section 74 within time limit under section 73, time limit under section 73, can the recovery be made with respect to this financial year 21-22? Yes. Therefore, recovery can be made. Recovery can be made for financial year 2021-22. That is this. So first, there is a notice. That notice is given on 15 March 2025 for financial year 21-22, but this is given under section 74, and we have observed whether this is within the time limit. Yes, within the time limit for the purpose of 74, and against this notice one order also passed, and we went for an appeal. And when we went for an appeal, so appellate authority GSTAT is telling that there is no fraud on 25th September 2028. Now there is no possibility of giving a new notice for this financial year because the time limit for giving the notice is already exhausted. That's why they have brought in section 75, which says that already the notice which is given under 74 will be valid, is sufficient, and we will deem it as 73 notice. But to do the recovery, we need to check whether that notice which is given under 74 is within the time limit under 73. For that again we are checking 73 time limit. So 21-22, the 73 time limit for passing order is 31st December and the notice will be 39/2025. Yes, it is within the time limit because a notice which is given under 74 is on 15th March, which is on or before 30th September 2025. So it is within the time limit under 73. Therefore, recovery can be made for financial year 2021-22. Got it? But what is the time limit by which order should be passed for recovery? Because this order will be null and void. Why this order will become null and void? Because this order appeal is decided in favor. So this order will become null and void. So they cannot pass a new order under 73 or 74. So therefore, order should be passed under section 75. Order under section 75. What is the time limit by which order should be passed under 75? When the matter is remanded back for fresh adjudication by the court or GSTAT, demand order shall be passed within 2 years from the date of communication of directions. So therefore, order under section 75 should be passed within 2 years from the date of judgment. What is the date on which judgment has been given? 25th September 2028 plus 2 years. So 25th September 2028 plus 2 years will be 25th September 30. That is the time limit by which order should be passed under section 75. For what purpose? Recovery of tax for the financial year 21-22. That is with respect to this. Is it clear? So there are many things which are covered in this same illustration. So therefore, this illustration will give you an idea about whatever I am trying to convey this in 75. So notice issued under section 74, not sustainable in the court. Then is that notice given under 74 within the time limit under 73? Yes. Then definitely the tax can be recovered. Suppose the notice given under 74 is not within the time limit under 73, then the entire proceeding shall be dropped as a period of limitation is affected. If the notice is issued under 74 for multiple financial years, then what we will do? Same way we will determine for each and every financial year. So for those financial years for which the notice under 74 is within the time limit under 73, that financial year liability only can be recovered. If notice was issued under 74 for multiple financial years and such demand order is not sustainable in court, then with respect to those financial year for which time limit under 73 is satisfied, redetermination can be made and order passed under 75. What is the time limit within which the order should be passed under 75? Within 2 years from the date of communication of directions. Then proper officer shall grant adjournment for maximum 3 times. So 3 times is the adjournment. This point is common even in case of appeal also. Appeal also 3 adjournments are possible even during this determination of tax, that is adjudication. This whatever we are discussing now is called as adjudication proceedings. In adjudication proceedings also the adjournment will be for 3 times. Interest is payable even if not specified in the order, but penalty is not like that. Penalty is payable only if specified in the order, otherwise penalty is not payable. But interest is not like that. Whether it is specified in the order or not specified in the order, we need to make the payment. However, write down, however, penalty is payable only if specified in the order. And what is the amount in the order that should not exceed the amount in the notice? For example, notice is given for 10 lakhs. Can the order be passed for 12 lakhs or 15 lakhs? Impossible. So therefore, the amount in the order should be within the amount in notice. Then in case of self-assessed tax, what is self-assessed tax? Liability reported in GSTR1 and not paid in 3B. There is direct recovery without an order can be made. So that is as per section 79. So that is what happens is that GSTR1 has been filed, but GSTR3B has not been filed. Already there is a direct recovery as per Rule 88C. So you can just give the page number reference here for Rule 88C, which is in, like input tax credit returns chapter, which is connected to ITC and returns. You can see in returns chapter this information I have given there. It's a page number here. 150, page number 150, page number 150 you can see Rule 88C, page number 150. What does it says? Suppose if my liability in GSTR1 is greater than the liability in GSTR3B, means what happened? I reported more liability in one, but I have not reported the liability in GSTR3B by such amount and such percentage. Then department will give me the communication. So in DRC 1B, this is 88C, see the alphabet before, that is DRC 1B. Either it will be uploaded in the portal or it will be sent over mail, and response time within 7 days. What is that I need to reply? Either pay the difference, because I have reported more liability in one, less liability in 3B, so pay the difference. Or if it is a genuine case, explain the reason for difference. Genuine case will happen if, in case on advances already I paid tax, and I forgot to do the adjustment of advance in GSTR1. As per my GSTR1 there will be more liability, but 3B there will be less liability, but that's a genuine case. I will give the explanation for the difference, or part payment and partly explain the balance, and thereafter if there is no satisfactory reply within 7 days, or I gave a reply and they have not satisfied with that, or I have not given reply, or I have not paid the tax, then they will initiate direct recovery under section 79, which means that there is no other order etc. and all. Directly they will post the liability in my liability ledger and they will initiate the recovery process. Till the time they are recovering this money from me, I cannot file GSTR1, not allowed to file returns in form GSTR1, and once GSTR1 not filed, GSTR3B gets blocked. And if GSTR1 not filed for 2 consecutive tax periods, because without filing GSTR1 we cannot file the GSTR3B. If 2 consecutive tax periods, if you are not filing GSTR1 and 3B, your e-way bill gets blocked, and this is one of the reason for suspension of registration. So this is the connection there. So therefore, in case of self-assessed tax, either they can initiate 79, that is direct recovery, or they can also do recovery in terms of 73 also. That's what this section 73 subsection 11 if you see. So if self-assessed tax not paid within 30 days, means for recovery of self-assessed tax they can do either 73 or they can initiate under section 79. That is this point. Then next, even one more way is also there for recovery of self-assessed tax, that is best judgment assessment on account of non-filers of returns. Okay, so somewhere you can write down here. So what are the various ways in which they can do recovery of self-assessed tax? In page number 196 you can write recovery of self-assessed tax. What is recovery of self-assessed tax means? Self-assessed tax is what? Self-assessed tax means what? Reported in GSTR 1. Reported in GSTR 1 but not paid, then in that case there will be recovery of self-assessed tax. And what are the three ways in which there can be recovery? Either they can do direct recovery under section 79 read with rule 88C, okay. Later on you give the page number references for this. So then second alternative is also there. That second alternative is section 73, demand and recovery under section 73. That is also one way. And finally they can also do best judgment assessment, best judgment assessment under section 62, best judgment assessment under section 62 for non-filers of return. So any of these three things can be initiated by them, by the department. So they have three powers, any of these three powers can be used, okay. And in this itself we have discussed about two powers, that is 79 direct recovery and demand and recovery under 73. In assessment chapter we will come across best judgment assessment. Sir, what if it is the other way around, where notice under 73 is given first and fraud is identified by the proper officer? Do we have to give a new show cause notice under 74? Yes, we have to give a new show cause notice under 74 because this provision is not there, okay. So maybe if you can recommend it to finance minister, she will add that, okay. But this provision is not there so far. That is, first the notice is given under 73 without fraud, later on they came to know that there is a fraud. So we will modify the 73 notice to 74. No, not there. In law itself it is not there. Only the other way around is there. If they give the notice under 74, if the charges of fraud is not proved, then it can be, like trimmed to 73. That is there. Next, look into similar issue. So come back, page number 194. If the similar issue is pending in some other proceedings in GSTAT, High Court or Supreme Court, such period shall be excluded from the due date of the order. Similar issue pending means, say for example, one particular issue is there, that is, I have purchased invert supplies for one business vertical, but I am using that for another business vertical. Means for multiple businesses also I will have single registration only. So I purchased for, say, my consulting business, but that consulting business related ITC I am using for payment of GST liability on my coaching business. Then in that case, both consulting business, coaching business, same place, same person, same address, same GSTIN. So can we use like this? Actually in law there is no restriction, but department is telling I should not use, so therefore I went for appeal. This case is pending, okay. So when this case is pending, so you also have the same issue. In your case, can they initiate any recovery? No, they cannot initiate any recovery in your case because the same issue is pending in the court, okay. So as the same issue is pending in the court, it is not possible. You can see here, similar issue pending in some other proceedings in GSTAT or High Court or Supreme Court, such period shall be excluded in the due date of the order. Say it will take some 8 months. So for that 8 months, in your case they cannot pass any order. For that reason, if the regular time limit is 3 years, now it will be extended for 3 years 8 months. Then section 77 talks about tax wrongfully collected and paid. So 73, 74 order, 75 is this general provisions relating to tax. Then 76 amount collected as tax not paid. 77 is tax wrongfully collected and paid by treating intrastate as interstate. So I have collected CGST, SGST and paid it, but actually I should have paid IGST. What should I do? First pay IGST, then get refund of CGST, SGST. Same way, suppose if I have paid IGST, so then what, instead of CGST, SGST, pay CGST, SGST and get refund of IGST. Whether any penalty, interest, etc. arise in this case? No, because it is revenue neutral. Already we are making payment of tax. Then 79. So 77 is about this. 78 is about within 3 months we need to make the payment. Within 3 months from the order, if you are not making payment, they will initiate recovery. Now 79 talks about the modes of recovery, how they will recover the tax from us. Number 1, deduction from any money owed from government. So 3 months over, in this 3 months we have not made the payment. First thing, we are required to get some refund from the government, from that they will cut. And sale of goods under the control of proper officer. So they would have seized some goods that they will auction, and garnishee proceedings, that is recovery from a third person, bank manager or debtor or tenant of our property, from anyone. Then sale of movable or immovable property, that is called as attachment proceedings. Then as arrears of land revenue by collector, how collector will recover the arrears of land revenue, like charges, etc. and all, like that they can recover. As fine imposed by magistrate. So magistrate fine, if you are not paying, you can be arrested. So they can arrest the person also for the purpose of recovery of that money, or through surety. So surety is from the person who has given guarantee or security from that person. These are the various modes of recovery. This can be asked as a theory question. And there is one important point, penalty for self-assessed tax not recovered through section 73. I told you for self-assessed tax we have 3 alternatives. Either it can be demand and recovery under 73, best judgment assessment, or direct recovery. If it is demand and recovery under section 73, what will be the penalty that will be payable? Penalty will be under section 122 subsection 2. Whereas in case of best judgment assessment under section 62, what will be the penalty? The penalty will be under section 122 subsection 1. What is that penalty under 122 subsection 1? 100% of tax. But which grounds, sir? Collected tax not paid within 3 months. Under that category, collected tax not paid within 3 months, under that category they will be levying penalty. Whereas direct recovery, what will be the penalty? Here they have given a softer penalty. The penalty will be under section 125. Penalty will be under 125. What is the penalty under 125? Up to 25,000 rupees. For that reason they have given a circular. Okay. So you can see that circular here. So what is that it says? That is, penalty for self-assessed tax not recovered through section 73 is rupees 25,000 as per CBSE circular. This 25,000 is general penalty under section 125. Then next one, transfer of property to be void. Section 80 is installments, up to maximum 24 installments. 81, transfer of property to be void means whenever the amount is due from a person. When the amount has become due from a person, means the order has been passed. Once the order has been passed, definitely he has to make the payment within 3 months, or he can go for appeal within that 3 months. So say he don't want to pay, and if he is not paying, if he is not going for appeal, then department will initiate recovery. So for that reason he transferred all the assets in his name to some of his relatives' name. Whether that transfer is considered as valid? No, the transfer will not be valid, it will be void. Any amount that has become due from a person creates a charge. Creates a charge means we will take loan against that property, or we will pledge that property. That is called as creating a charge, or transfer any of his property in favor of any other person with the intention of defrauding the government revenue. Such charge or transfer shall be void. However, if that particular transfer is made in good faith, and in order to recover the money to pay the taxes, for adequate consideration this transfer has been made, then the transfer will be considered as valid, because I need to sell the asset, then only I can make the payment. So that transfer will be valid. So provided the charge or transfer shall not be void if it is made for adequate consideration in good faith. That is an important point. It should be made for adequate consideration in good faith, and without notice of pendency of such proceedings, or with the previous permission of the proper officer, then it's okay. But adequate consideration in good faith is important. Then sir, what if before passing the order itself, after notice itself, means the proceedings are going on, at that stage itself if I transfer the property, then section 81 will not come. Now correct, section 81 will not come. In that case 83 will come. So 83 says that the moment the notice is given, means the proceedings are on. So if they have a opinion that you may transfer the assets to any other person and escape from section 81, so then in that case they will provisionally attach your property. That provisional attachment will be for a period of 1 year. Provisional attachment of any property including bank account after initiation of any proceeding under assessment, inspection, search, seizure and arrest or demand and recovery for a period of 1 year from the date of order of provisional assessment. Okay, so for a period of 1 year from the date of order of provisional assessment, means provisional assessment will be for a period of 1 year. Within that 1 year we need to complete the proceedings, means we need to give the order. After giving order, anyhow section 81 will take care of the property. Got it? So up to that 1 year, means notice is given, within 1 year the order should be passed. Only when order is passed, so then section 81 will come into picture. So your transfer will not be held as, your transfer shall be held as void. It will not be valid. Got it? Whereas during this 1 year, so from the notice, section 83 will protect. So it will say that your property is provisionally attached. And whenever there is a provisional attachment of the property, what is a property? It can be movable property, it can be immovable property, it can be bank account, anything can be provisionally attached. And what happens after 1 year? By default, the attachment will be withdrawn. For example, if they are attaching your property, means they will place an encumbrance on the property. If they are attaching your car, they will place an encumbrance on the car, which means during this 1 year, you cannot sell the car or you cannot sell the property. And what happens after 1 year? Immediately after 1 year, the encumbrance will be withdrawn and you will be able to make the sale. And suppose within this 1 year itself, you have completed making the payment. Say whatever notice, after notice itself you can make payment. Then what will happen? So officer will intimate the registrar, so to remove the encumbrance on the property or encumbrance on the car to the RTO, so that it will be withdrawn. You can see that is rule 159. Rule 159, the revenue authority or the transport authority or any such authority who has placed the encumbrance on the movable or immovable property on the order of the commissioner shall remove such encumbrance on the written instruction from the commissioner whenever in that 1 year, okay, or on expiry of period of 1 year from the date of issuance of order, whichever is earlier. So whichever is earlier, this will be removed, means maximum 1 year only there will be encumbrance on the property. Then we have section 82, which says that tax to be first charged on property, means whenever the liquidation, company is going into liquidation or business is into liquidation, but this is subject to IBC. So if there is a IBC initiated, then IBC will prevail. If IBC is not there, normal liquidation means, so first charge will be with respect to taxes, which means whenever we sell off the assets, those assets realized, so first we need to pay taxes. So but this provision is common in GST, customs, income tax, which means what they need to do is that they need to take the money and they need to see all these taxes as priority payments. In the taxes ratio, they will distribute and they will recover that. Save as otherwise provided in IBC, any amount payable by a taxable person shall be first charged on the property of such taxable person. Then next, section 84, continuity and validity or validation of certain recovery procedures. Okay, so what is that? First, we are going for an appeal. Please concentrate. Say they have passed an order under 73. Our friend asked me one question, no, can 73 be taken as 74? This possibility is there. Okay, first they have passed an order under 73. When the order is passed under 73, the amount is say 10 lakhs we are required to pay. On that we went for appeal. But the appellate authorities of the opinion that correct, we are not required to pay 10 lakhs, but we are required to pay 15 lakhs. You understood? So therefore they are enhancing the amount. We are telling we don't have to pay 10 lakhs. They are also telling we don't have to pay 10 lakhs, but you are required to pay 15 lakhs. So they are enhancing it. When they are enhancing it, for that enhanced amount of 5 lakhs, is there a possibility that they can enhance? Can the appellate authority enhance it? Whether they have power to do so? Yes, provided for that 5 lakhs, the commissioner should have given the notice. For that excess 5 lakhs, commissioner should have given the notice, and that notice should be under the time limit as specified under 73, 74, depending upon the order. If that order is under 73, the time limit under 73. If the order is under 74, the time limit under 74. The commissioner should have given the notice. That is what section 84 says. Read that. Appeal against an order. Appeal against an order. And appellate authority enhance the amount. Commissioner shall serve notice for such excess amount. Commissioner shall serve notice for such excess amount. No need of any order. just notice is sufficient. Appeal order shall be passed on such enhanced amount without adjudication order for the enhanced amount. And this other proceedings, that is, so who can increase it? Either it can be increased during appeal proceedings or it can be increased during any other proceedings. Any other proceedings means what? IBC. Under IBC also there can be a possibility of increase in the demand. Okay. So the word other proceedings includes government dues under GSTAT considered in IBC. Okay. Then for search and seizure, what we discussed, can we invoke 73, 74? No. So search and seizure we have separate proceedings, therefore this 74 is not applicable in that case. Then CBIC circular already we discussed. This is about the monetary limit for issuance of notice. Who should give the notice? Suppose if it is CGST due, specifically they gave CGST due. If it is up to 10 lakhs, superintendent. If you see the hierarchy, I told you, first will be chief commissioner, below that commissioner, they both will not give notice. So below that is additional joint commissioner, assistant or deputy commissioner, superintendent. These three people only will give. Superintendent will give up to 10 lakhs, ACDC will give beyond 10 lakhs up to 1 crore, and beyond 1 crore means it will be additional or joint commissioner. These three people are only called as adjudicating authority or assessing officers. So these three people only can give the notice and can pass the order. Got it? Superintendent up to 10 lakhs. And ACDC up to 1 crore. Beyond 1 crore it will be additional joint commissioner. If it is IGST, double, 20 lakhs, 2 crores. And if it is both CGST and IGST, then also it will be double. This about monetary limits for issuing notice means only those officers can give the notice and pass the order. Now, this particular demand and recovery chapter is not applicable, whatever we have discussed, if you are appearing for November 25 exam. So please try to clear now itself. Okay. So because for November 25 completely these two sections and all gone, and I have brought in one section 74A and lot of changes are there in this particular chapter alone. Okay. So better this attempt should be cleared. Okay. Come what may, take this book also to the exam hall and clear somehow. Okay. So but you should clear. You tell, no, they changed. You tell to the invigilator, they changed. IDT became open book like that and all. So no, they will argue paper 6 is open book. No, IDT is open book. You take and you clear somehow. Okay. But you clear. That is a bottom line statement. And manifestation is very, very important. You should manifest on a daily basis. This May 25 will be my final attempt. And thereafter, I am not going to write group 2. If I am writing for group 2, I will not write again. Group 1 and group 2, then I will not write. Okay, this should be our target. Got it? And don't think of if not May, then November, etc. and all. Nothing of that sort. Again, you cannot sit and read all these things here. You understood? Group 2, definitely you cannot sit and read. Group 1 also okay, wherein it will not change that much. But group 2 and all, frequently it will change. Next. So this is about demand and recovery we have completed. So there is one query, question number 10 in soil workbook, demand and recovery chapter. So let me see that. Yes, sir. What is your doubt? I don't know. But let me take that question because one friend has asked me to discuss. This question. Okay. So see this question number 10, page 425 if you have the book. A taxpayer has suppressed certain facts resulting in short payment of tax. The mistake pointed out by the department, but no show cause notice has been issued. As the taxpayer, suppression is accepted at rupees 12 lakhs. And he agrees that the suppression has taken place in the month of January 2019. He clears the dues on 20th April 2019. However, department on verification identifies additional suppression of 2 lakhs in the same month of January 2019. Show cause notice is issued and the taxpayer represents before the proper officer, which results into adverse order against the taxpayer. the order is passed on 25/5/2019 and the taxpayer complies with the adverse adjudication order on 27/6/2019. It is one very old question. What happened in this question is that they have not given many things. So, a lot of assumptions needs to be taken in this question. First of all, it is 73 or 74. Definitely it will be 74 because there is a suppression of facts. So, in that case, is the notice given or not given? Notice is not given. So, before giving notice itself, they are going to make the payment. So, how much payment they have made? 12 lakhs. Means is the 12 lakhs tax or value? That confusion is there. They have not given. So, therefore, two possibilities are there. You can take the 12 lakhs as value or 12 lakhs as tax. But usually, it is better to assume the 12 lakhs as tax. So, 12 lakhs as tax. And 12 lakhs into what will be the penalty if you pay before show cause notice? It will be 15%. So, that will be 1,80,000. So, 1,80,000 will be payable as the penalty, and accordingly interest also needs to be computed. So, this is pertaining to which period? This is pertaining to say January 2019. January 2019 means the due date will be 20th of February 2019 and the payment is actually made on 20th April 2019. For that period we need to compute the interest. So, if 12 lakhs you are taking as tax, accordingly the interest computation also will come at the rate of 18%. So, here what I did is that alternative one I have given where the amount of 12 lakhs is assumed to be value, alternative to 12 lakhs is assumed to be tax. I have given multiple answers depending upon that, okay. And here, so penalty for additional amount already order is passed. What is the additional amount? 2 lakhs. For that order is passed on 25/5/2019. So, if you pay within 30 days from order only, there will be 50%. So, when are you making the payment? 27/6/2019. Is it within 30 days? No, beyond 30 days. Due to that reason, you need to pay 100% of 2 lakhs as the penalty. There won't be any benefit of penalty here because you are not making payment within 30 days. So, that is about this, okay. So, this question is actually a vague question. They have not given clarity. That's why multiple alternatives I have given for that particular question. Then, coming back to this, we completed demand and recovery. Look into the next area, that is appeals. Appeal process. Segment 20 appeals. In these appeals, there are a lot of amendments now because they have brought in the monetary limits for filing appeal by the department, etc. So, this attempt you can expect good number of questions on appeals. You can see here. First, try to understand what is this appeal process. So, whenever adjudication order is passed by the adjudicating authority. So, what are the various adjudication orders which are possible? Just now we saw demand order under 73, 74, 76, 75 or even refund order. On any order passed by the GST officer, we can go for appeal. So, adjudication order or assessment order by adjudicating authority. Who is considered as adjudicating authority? Just now I told you superintendent, assistant commissioner, deputy commissioner, additional or joint commissioner. Now, the adjudicating authority passed an order. Now, I can go for appeal. Appeal to whom? Appeal to commissioner appeals or additional commissioner appeals. In income tax we have only CIT appeals, but here we have two, commissioner as well as additional commissioner appeals if aggrieved by the order. And thereafter what commissioner appeals or additional commissioner appeals will do, they will give the decision, they will give the ruling, and based on that we can go for further appeal to GSTAT, and again from there we can go for further appeal to High Court and thereafter to Supreme Court. But if the issue is pertaining to place of supply, we can skip GSTAT and directly we can go to Supreme Court, and that is the appeal process here. And thereafter revisional authority, like that one authority is there. What they will do, they will take up the order for revision. So, we are also not going for appeal, we are a taxpayer, we are also not going for appeal, department also not going for appeal, but the revisional authority will come and take up the order for revision. This is like whistleblower mechanism or audit of adjudication orders. So, they do the revision either suo motu or based on the information from commissioner, and when they do the revision, means whatever adjudication order you got, it is not final. that may be subject to change by the revision authority, they will pass a revision order. But based on revision order, if you want to go for appeal, definitely as a taxpayer you can go for appeal, but the appeal will be made to GSTAT, appeal to GSTAT, and thereafter we will go for appeal to High Court, Supreme Court, etc. Got it? So revision authority passes an order, we will not go for commissioner appeals, we will go to GSTAT, keep that in mind. Then next, appeal to High Court or Supreme Court only if substantial question of law is involved. So who is the final fact finding authority? The final fact finding authority is GSTAT. So here we need to understand the difference between question of fact and question of law. If there is a question related to applicability of the provision, then it is question of law. If it is about the condition on which the provision is dependent, then it is question of fact. For example, whether it is supply, for consideration or without consideration is a question of fact. If it is supply without consideration, will it become supply or not a supply is question of law. Whether it is blocked credit or not a blocked credit is coming under question of law. But whether it comes under the exception or not coming under the exception is a question of fact. Like that, usually conditions will be there. A provision is dependent upon a condition. Those conditions and all will come under question of fact. Whereas the provision itself is applicable to me or not is a question of law. So for final fact finding authority is only tribunal. Thereafter, if you are touching High Court or Supreme Court, definitely it should be because of a question of law. Even department can also prefer an appeal. So not only the taxpayer, even department can go for appeal against the order, and pre-deposit will be payable for filing an appeal. But that pre-deposit is payable only by the taxpayer, not by the department, not applicable for department appeal. And who can appear before the appellate authority? So this authorized representative, this is common for not only appeals, everywhere, even before the adjudicating authority, even before the appellate authority. Who can act as an authorized representative? A relative can act as an authorized representative, or regular employee of that person, advocate, CA, CMA, CS, even retired officer of government and GST practitioner. All these people can act as authorized representative, that is relative, regular employee, advocate, CA, CMA, CS, retired officer and GST practitioner. However, if that particular person is not a retired officer but he has been dismissed from government service or removed from government service, he cannot act as authorized representative. Or who is convicted of an offence or found guilty of misconduct or adjudged, there is a spelling mistake, adjudged as insolvent, cannot appear as authorized representative. Say for example, there is a CA or CMA who has been reprimanded by ICI for the purpose of professional misconduct. Can he act as authorized representative? No. That is this, found guilty of misconduct, they cannot, or adjudged as insolvent, cannot appear as authorized representative. Then next page you can see GSTAT. GSTAT so is constituted from 1/9/2023, but it became effective at a later point of time, only in 2024. But the power, so they have got only in 1/9/2023. We have principal bench and state bench. Principal bench is in New Delhi and state bench will be in certain locations in all states or union territories. What are the issues which the principal bench will hear? So in GSTAT there are two benches. The principal bench will hear the issue related to place of supply and the issue related to anti-profiteering. So that is newly added. Previously place of supply, now they have added anti-profiteering or any other notified cases will be heard by the principal bench, but all other cases will be heard by state bench. And in principal bench there will be a president, there will be judicial members and two technical members, one technical member central government and another technical member state government. Whereas in case of state bench there will be two judicial members, here only one judicial member, here two judicial member. Out of these two judicial member, the senior most member will become the vice president, and here also one technical member central government and state government will be there. This is the constitution of GSTAT. I don't think so this will be tested and all in exam, but this is an amendment which is there. Next, suppose if the dispute is less than 50 lakhs without question of law, it may be heard by a single member with the approval of the president, and in other cases hearing should be by two members, one judicial member and one technical member. Okay, So you need to understand this particular part, that is, see, if you divide it into two, question of law, it's a question of law, correct? It's a question of law. In that question of law, dispute less than 50 lakhs, dispute greater than or equal to 50 lakhs, okay? So dispute greater than or equals to 50 lakhs. Who should hear? Minimum 2 members, one judicial and one technical. Up to 50 lakhs, then it can be heard by, that is question of law cannot be heard by one person without question of law. Underline that, without question of law. If it is a question of law, definitely 2 members by default, whatever may be the amount, whatever may be the amount. So then without question of law means what? Question of fact, question of fact, question of fact, okay? So it is not question of law, question of fact. In that question of fact only they have given the division, okay? So therefore the dispute we will divide into 2, disputes we will divide into 2. What is that? Question of law and question of fact. If it is question of law, what is it they are trying to convey? There is no division, there should be 2 members, 2-member bench, 2-member bench. And suppose if it is question of fact, that's where it is divided, where the tax is up to, that is less than 50 lakhs, or where the tax is greater than or equal to 50 lakhs. Where it is less than 50 lakhs, it is a single member bench. So in many movies you would have seen only one person will be sitting as judge, that is single member bench. Whereas in some cases if you see 3 people and all will be sitting as judges, okay, you would have seen that, okay. So that is called as 2-member bench, more than one. So single member bench, and here it should be 2-member bench, 2-member bench. That is about this. This is with respect to the disputes. So depending upon question of law or question of fact, etc. Then, so question of law 2-member bench, question of fact up to 50, like less than 50 lakhs single member bench, greater than or equals to 50 lakhs 2-member bench. And say this, members differ in decision, case referred to another member for majority opinion resolution, including opinion of members who first heard the case. When there are more than like one member, so definitely based on majority, say for example 3 members or 4 members are there, then majority will prevail, majority's decision will be prevail. Members can be transferred between the benches by president, but the technical members must stay within the respective states because they are state government officers. So technical members must stay in the same state. Tribunal proceedings cannot be questioned or invalidated due to vacancies or minor defects in the constitution. If you observe, there should be total 3 members, judicial member, technical member state, technical member center, like that. And say for example only one judicial member and one technical member is there and another member is not at all there. Now can we say that as there is a defect in its constitution, so therefore the case will be void or the decision given by them will be void? No, that's why they gave that point. Tribunal proceedings cannot be questioned or invalidated due to vacancies or minor defects in its constitution. Then there are some non-appealable orders. Non-appealable orders means what? We cannot go for appeal against that orders. Whatever order which is related to imprisonment, definitely on imprisonment we cannot go for commissioner appeals because imprisonment order is passed by court. So on that we cannot go for commission appeals. So for imprisonment order appeal cannot be filed. Then sir, what is the way out? Imprisonment order passed, you have to serve that or file a writ petition. File a writ petition in High Court or Supreme Court, but the regular appeal is not possible. Number 2, seizure order. For seizure order you cannot go for appeal, but penalty order can we go for appeal? Yes. For confiscation order we can go for appeal? Yes. So right there, for confiscation order or penalty order appeal can be filed. For confiscation order, for penalty order under section 129, for penalty order under section 129 or confiscation order under section 130, confiscation order under section 130, comma, appeal can be filed. Appeal can be filed. But with respect to, you know, this this seizure order under 129 or 67, on that appeal cannot be made. Okay. For penalty order under 129 or confiscation order under 130, appeal can be filed. Then first one you have discussed, we have learned imprisonment order appeal is not possible, and even on seizure order also appeal is not possible. Then order sanctioning payment of dues in installments, that is like maximum 24 EMIs, but they are giving only 18 EMIs. You cannot go for appeal stating that officer gave me only 18 EMIs, but he is not giving 24 EMIs, like that you cannot go for appeal. Then transfer of proceedings from one officer to another officer. Say the commissioner transferred the officer from one place to another place, or your proceedings was transferred from one jurisdictional officer to another jurisdictional officer. In that case you cannot say I want that officer only, that officer will be so comfortable for me, like that you cannot ask. So transfer of proceedings from one officer to another officer. So these are the 4 non-appealable orders. This can be asked as a short note question. Now, what is the first appeal provisions? So first appeal is to whom? First appeal is to commissioner appeals or additional commissioner appeals. And when we will go for commissioner appeals and additional commissioner appeals, easily you can remember, if you see adjudicating authority, if you see adjudicating authority and appellate authority, who is adjudicating authority? Who is adjudicating authority? I told you, additional or joint commissioner, correct? Additional or joint commissioner, below that AC, DC, below that superintendent, okay. Whereas if you see appellate authority at the highest level, like 2 levels we have, commissioner appeals, correct? Commissioner appeals, this is the confusion we have, and below commissioner appeals we have additional or joint commissioner appeals, okay, additional or joint commissioner appeals. Now logically you think, definitely when the order is passed by additional or joint commissioner, we cannot go with additional or joint commissioner appeals, so definitely we need to go to the next level, am I right? So therefore additional or joint commissioner passes the order, okay, then the appeal will be made to commissioner appeals. Suppose if ACDC passes the order or superintendent passes the order, the appeal will be made to additional or joint commissioner appeals. That's what I have given there, okay. So if the appeal is made against the order of additional or joint commissioner, we will go to commissioner appeals. Additional or joint commissioner, we go to commissioner appeals. And appeal against the order of officer below the rank of additional or joint commissioner. Below the rank of additional or joint commissioner means ACDC or superintendent, that is to additional or joint commissioner appeals. That is same hierarchy, we cannot go to the next level, we need to go. That is the meaning of this phrase. Then what is the time limit within which they need to go for appeal? 3 months and plus 1 month. You remember this with the logic. Once the order is passed, as per section 78, within 3 months we need to make the payment. So within 3 months, either make the payment from order or you can go for appeal. Say I missed 3 months. Is there any condonation of delay for recovery? No. For recovery they will initiate recovery, but for appeal they have given a condonation. What is that? 1 month. Means if it is crossing 3 months, if the appellate authority approves, we can file the appeal even after that also. So 3 months plus 1 month. Can department also go for appeal? Of course, department also can go for appeal, but what is the time limit? 6 months plus 1 month. So against the adjudication order, so commissioner can prefer an appeal. So in that case 6 months plus 1 month review. And pre-deposit. This pre-deposit is to show the seriousness for the purpose of appeal, but this is not applicable in case of department appeal. How much is the pre-deposit? 100% of the admitted due plus 10% of disputed tax subject to maximum 25 crores. But here we need to take this as CGST. I told you 3 places we need to take CGST, SGST separately. One is penalty, already we discussed. Another is pre-deposit. and another is late fee. This is pre-deposit. So this we need to compute separately. So whatever is your admitted due, full you need to pay, plus 10% of the disputed tax. For example, if the disputed tax is 400 crores, 400 crores is total. So total into 50% is CGST. So means 200 crores. 200 crores into 10%, 20 crores or 25 crores, whichever is lower. So 20 crores only you need to pay. Is that clear? Suppose if the total is 600 crores, the disputed tax, 600 crores, half is 300. 300 into 10%, 30. 30 or 25. So 25 crores only we will pay as pre-deposit under CGST. So this 25 crores will be under SGST. So therefore, what is the total pre-deposit? 50 crores. Is it clear? Then, in case of appeal against the penalty order under 129. So I told you, against penalty order under 129 we can go for appeal. So in that case, what is the pre-deposit? 25% of that penalty. So that we discussed now 200% of tax or 50% of value, whichever is higher, like that. On that, how much? 25%. Again, this 25% is under CGST or total CGST. Means 25% on CGST penalty and 25% on SGST penalty. Got it? Then, is there any appeal fee? No, there is no appeal fee. And what is the time limit within which they need to dispose of the appeal? 1 year. It is not mandatory. Okay, but the time limit given is 1 year. Then, next, second appeal to GSTAT. So when second appeal to GSTAT, against whose order? Already this first appeal authority has given the order. On that order we can go for appeal to GSTAT against the order of the commissioner appeals or additional commissioner appeals or even revisional authority. What is the time limit? So time limit, see, remember, either against the order of commissioner appeals, additional commissioner appeals, or even against revisional authority also we can go to GSTAT. Time limit here easily remember, 3 plus 1 na, here 3 plus 3. So 3 months plus 3 months, and here 6 plus 1, here it will be 6 plus 3. So same copy paste, 3 months, 6 months, 3 months, 6 months, just the condonation of delay will change. In the first case it is 1 month, next case it will be 3 months. And pre-deposit, is there a pre-deposit? Yes, but this is not applicable in case of department appeal. How much is the pre-deposit? 100% of the admitted due plus 20% of the disputed tax subject to maximum 50 crores. That is again under CGST. The same amount is payable under SGST. And here you can remember 10% 25 crores double, 20% 50 crores. Does it mean already I am paying 10% here, so extra 10% I need to pay here? No. So 20% additional we need to pay, means 10% we already paid plus 20% extra we need to pay, which means total 30% we will be ending up paying as pre-deposit of disputed tax, not disputed due, only disputed tax. Okay. And for example, you can see here, that is, they have passed an order. So this order, adjudication order or order under section 74, order under section 74, they are asking us to pay tax, interest and penalty. Say tax is 10 lakhs and interest, this is total, okay, total tax 10 lakhs and interest is somewhere like 18% on that, and the penalty will be 10 lakhs. Now what happened? Against this order we are going for appeal. So appeal to whom? Appeal to, so commissioner appeals, appeal to commissioner appeals. Now in this we need to check how much is admitted, not necessary that entire amount is to be admitted and entire amount needs to be disputed. So there is nothing admitted, so means entirely it will be disputed. So now we need to see what is the outcome based on that. Okay. So say for example, here nothing is admitted, means entirely it is disputed, Now tell me how much is the pre-deposit that I need to pay. What is the pre-deposit? Pre-deposit under CGST. What is the pre-deposit under CGST Act? 5 lakhs into 10%, that will be 50,000. Okay, 50,000. Why? I told you this 10 lakhs is full tax. So we need to compute separately for CGST, SGST. 5 lakhs into 10%, 50,000. And what is the pre-deposit under SGST? Pre-deposit under SGST Act is same. So 5 lakhs into 10%, that will be 50,000. This is how the pre-deposit will be computed. So remember, only tax into 10%, not total due, only tax into 10%. And the outcome, if you see, they are asking us to pay 10 lakhs and 18% and 10 lakhs, which means we lost the case. As this person lost the case, again this person is going for appeal to GSTAT. Appeal to GSTAT. In this appeal to GSTAT, so what is admitted? What is admitted? So in that, say for example, he came to know that anyhow he need to pay 3 lakhs. So therefore 3 lakhs he admitted, and applicable interest 18% and penalty also 3 lakhs, and he disputed with respect to what? Remaining balance, and let's see what happens to the outcome. He disputed with respect to 7 lakhs and 18% and penalty 7 lakhs, and in this case what will be the pre-deposit? What will be the pre-deposit? So first we will see pre-deposit under CGST Act. First, 100% of admitted due. What is that 100% of admitted due? That is 1,50,000. So admitted due. So admitted due is how much? 1,50,000 plus 18% on that plus 1,50,000. Again I am telling it is under CGST Act due to that reason. And thereafter in the disputed tax it will be 20%. So what is the tax? 7 lakhs. In that 7 lakhs CGST will be 3,50,000. 3,50,000 into 20%. So 3,50,000 into 20%, that will be 70,000 will be disputed tax. Is it clear? So which means total he need to pay 1,50,000 plus 18% plus 1,50,000 plus disputed tax into 20%, 70,000 he is paying under CGST, and the same will be payable under SGST also. Now what happened to the outcome? Say the outcome is that he don't have to pay anything. So means he won the case. That 7 lakhs he don't have to pay. He won the case. So therefore this 50,000 whatever he paid and this 70,000 whatever he paid, this both he will get as a refund of pre-deposit. What is the refund of pre-deposit? Total, that is 50,000 plus 70,000, he will get a refund of pre-deposit. So that will be 1,20,000 he will get as a refund of pre-deposit, including, that is along with interest. At what rate? Along with interest at the rate of 9% per annum. So pre-deposit interest rate is not 6%. So ICAI has changed that, and previously there was a conflict whether 6% or 9% is applicable. In some old question they gave 6%, but in the recent past they have given 9%. So please follow 9% only, because that is a view that ICAI is taking. So therefore in case of pre-deposit the interest rate will be 9% per annum. Got it? That is about this pre-deposit calculation. Now, so therefore 100% of the admitted due in the second appeal plus 20% of disputed tax subject to maximum 50 crores. Then appeal fee. What is the appeal fee? 1,000 rupees for every 1 lakh or part thereof. Just add that, or part thereof subject to maximum 25,000. For example, 14,20,000. 14,20,000 means what is the appeal fee for GSTAT? For 1 lakh 1,000. So part thereof also 1,000, which means 15,000 will be taken as the appeal fee. Suppose if it is 28,40,000, what is the appeal fee? 25,000, because the maximum appeal fee will be 25,000. And sir, is it under CGST, SGST or in total? Total. This is not late fee. Again I am repeating. This is I think 12th time I am repeating today. That is penalty, pre-deposit and late fee, not this appeal fee, late fee. These 3 places only you need to take CGST, SGST separately. In all other places it is the total. So this is the total appeal fee. Got it? 1 lakh for every 1 lakh or part thereof of total tax. therefore 1000 rupees subject to maximum 25,000. And time limit for disposal of appeal, what is the time limit? 1 year, and it is not mandatory. GSTAT may refuse to admit appeal if tax or ITC or penalty involved does not exceed 50,000. So this is up to the discretion of the GSTAT. Maybe if there is a substantial question of law involved, they may admit the appeal. Here it is not shall, it is may. So it is up to their discretion and they may or may not. Then there is one important amendment, that is, as GSTAT is established recently and it started functioning only from 1st August 2024. What about the cases which happened before 1st August 2024? The time limit of 3 months, 6 months and all should not be taken from the date of first appeal outcome, because the GSTAT was not at all working at that time. So that's why for all the cases which happened before 1/8/2024, they have added 3 months or 6 months from 1/8/2024 should be taken. The time limit for filing appeal is 3 months or 6 months from 1/8/2024. So this is only the date you need to remember, because GSTAT started functioning from 1/8/2024. Next, third appeal to High Court. So against whose order we will go? Against the order of GSTAT. That to which bench? State bench. Because principal bench means directly we will go for Supreme Court. We will skip the High Court. So state bench. And time limit. What is the time limit? 180 days. And unlimited continuation of delay, there is no restriction, and pre-deposit, late fee, appeal fee, etc. as per CPC, Civil Procedure Code. Fourth appeal to Supreme Court, against whose order? Either against the order of High Court or GSTAT principal bench. Principal bench can hear two cases. What are they? Place of supply and anti-profiteering. And time limit, pre-deposit, everything is as per CPC. Then matter relating to question of law, we can go up to Supreme Court. If the matter is related to question of fact, we can go up to GSTAT. Then next thing, we have interest on refund of pre-deposit. This is what I told you, 9% per annum from the date of deposit. Very good provision. It is not you make application, after that 60 days. No, nothing of that sort. From the day we make a deposit till the day we are getting the refund, they will be giving us interest at the rate of 9% per annum. But what is the time limit within which they will grant refund? They have not given, but for every day they will be paying us interest at the rate of 9%. Then they have brought in one new amendment in this, monetary limits for filing department appeal. That is, department also can go for appeal, but we need to reduce the number of litigations made by the department. Unnecessarily for small issues, they should not come and waste the time for that purpose. But this is not for the taxpayer, this is only for the department. The same kind of provision we have even in income tax also. So here for GSTAT, what is the limit? 20 lakhs. For High Court, 1 crore. For Supreme Court, 2 crores. Is it CGST or SGST or total, sir? Total. When the total amount is 20 lakhs, total amount is 1 crore, and total amount of tax involved is 2 crore. Means the disputed tax we say na, disputed tax, total disputed tax. In the total disputed tax, if it is 20 lakhs, 1 crore or 2 crore, respectively we can go to, that is department can go to GSTAT, High Court or Supreme Court. So there is one good query. Sir, in case of section 129, you said for first appeal pre-deposit is 25%. What about second appeal? There is no information about it because there is no pre-deposit in case of second appeal. So in case of second appeal against 129 penalty, there is no pre-deposit. That's the reason why 25% they are collecting in the first appeal itself. Because when you go for second appeal, there is no penalty. Got it? So here 10 plus 20, 30, but they are collecting in the first appeal itself 25% in that case. Then see this. So what are the principles to be considered while determining whether a case falls within the above monetary limit or not? Suppose if there is a tax is in dispute, with or without penalty, under or interest, tax plus interest plus penalty, or tax plus penalty, or tax, whatever it may be. Don't consider interest and penalty, just see only the tax. If the tax is more than 20 lakhs, go to GSTAT, more than 1 crore High Court, more than 2 crores Supreme Court. That too, headwise we need to see or total we need to see. What is that I told you? That's what here. Only the aggregate amount of tax in dispute, including CGST, SGST, IGST and compensation says. Suppose if only interest is in dispute, interest alone we are going, like department want to go for appeal. on interest alone in the demand order, they want to go for appeal. Now what they need to check for counting this monetary limit? Just the interest. On penalty alone, department want to go for appeal, then only penalty. On late fee alone, department want to go for appeal, so only late fee. Easy na? So tax with or without penalty and or interest, only see tax, nothing else. So then interest, penalty, late fee. Suppose interest, penalty and or late fee without involving any tax, there is no tax. Interest, penalty or late fee, these three together is the dispute on which department want to go for appeal. See the aggregate of that, aggregate amount of interest, penalty and late fee. But remember, the moment tax comes into picture, you ignore interest, penalty, etc. You see only the tax. Because logically, if tax itself is not there, the penalty will not arise. If tax itself not there, the late fee will not arise. That's why we see the tax as the dispute. Okay. Next, if it is erroneous refund, we will see the amount of refund. Amount of refund in dispute, including all CGST, SGST and compensation cess. Then monetary limit shall be applied on the disputed amount of tax or interest or penalty or late fee as the case may be, in respect of which appeal or application is contemplated to be filed in a case. In a composite order which disposes more than one appeal or demand notice, the monetary limit shall be applicable on the total amount of tax or interest or penalty late fee as the case may be, and not on the amount involved in individual appeal or demand notice. Composite orders means what? Multiple orders together got disposed of in one particular case. Say for example, 3-4 orders are there, merging 3-4 orders, one decision has been given. Now in that case, on that decision of GSTAT, they want to go for appeal to High Court, then in that case, one order we need to see the limit, or together we need to see the limit together. You read it again. In a composite order which disposes more than one appeal or demand notice, the monetary limit shall be applicable on the total amount of tax, interest, penalty or late fee as the case may be, and not on the amount involved in individual appeal or demand notice. Appeal should not be filed merely because the disputed tax amount involved in a case exceeds the monetary limit fixed above. Filing of appeal in such case is to be decided on the merits of the case. That is, just because the amount is more, they should not go for appeal. Really there should be a dispute, then only they should go. Where appeal is not filed in pursuance of these instructions, such cases shall not have any precedent value. For example, there is a order, and in that order department is not satisfied with the order, but they could not go for appeal. Why they could not go for appeal? Maybe because of the monetary limit issue. The amount involved is somewhere like 80 lakhs, so they cannot go to High Court. And in another case, same dispute, another case, same issue, and there the tax amount is 1.2 crores. Can they go to High Court appeal? Yes. Now the person cannot question that, sir, in the previous case you did not go for appeal, why in my case you are going for appeal? So because in the previous case they were not going for appeal does not mean they accepted the order. So they could not go for appeal because of the monetary limit issue. You read that. Non-filing of appeal based on the above monetary limits shall not preclude the tax officer, shall not preclude the tax officer from filing an appeal or application in any other dispute or in any other case involving the same or similar issues in which the tax in dispute exceeds the monetary limit or case involving question of law. Okay, so they can definitely go. In the previous case, why they did not go? Because of the monetary limit issue does not mean in future they cannot go. They can definitely go. Where an appeal is not filed solely on the basis of above monetary limits, there shall be no presumption that department has acquitted in the decision. They have accepted the decision. That does not mean. And therefore, they can definitely go for appeal. And next, one more point. Following cases to be taken on merits irrespective of the monetary limits. What does it mean? First they gave monetary limit. After giving monetary limit, they are telling in the following cases don't check the monetary limits. Better they should not have given, correct? But they gave the monetary limits and they are telling in the following cases don't check monetary limits and all, directly go for appeal. First, whenever it is a provision that questions that questions the act which ultra-vires the constitution. So there is a decision given by the High Court telling that, so government has made a law which is ultra-vires the constitution. So therefore we struck down this provision, like that they will make a law. Already it has happened. That is transportation of goods by vessel from outside India to India, when both supplier and recipient are located outside India. On this transportation of goods by vessel, on the freight, GST will be payable by importer of such goods under RCM, like that one provision was there. And therefore in High Court, what they did in Mohit Minerals case, High Court has specified that it is a constitutional validity needs to be questioned here. So definitely they cannot levy this, on which department went for Supreme Court. When department went for Supreme Court, we don't have to check the monetary limit, because the dispute is what, whether the act ultra-vires the constitution or not. For that purpose, even though the monetary limit is less than 1 crore, less than 2 crores, they can definitely go for appeal. That is this same way. Second point is, whenever the decision is like the act, the rules ultra-vires the constitution. First point, act ultra-vires constitution. Second, rules ultra-vires act. Rules ultra-vires act. Third point, the circulars or notifications ultra-vires the act and rules. See that these 3 points easily you can remember. Where any provision of CGST, SGST or IGST has been held to be ultra-vires the constitution, or has held to be, that is act, rules held to be ultra-vires the parent act, or order, notification or instructions held to be ultra-vires the act or rules. Clear? Because usually this is how the order will be. First constitution, below that act, below that rules, below that notification, circulars and orders. So when any one ultra-vires the other, like that if they have given, so on that even though the amount does not exceed the monetary limit, they can go for appeal. So these 3 points easily you can remember. Then fourth point, where the matter is related to valuation, classification, refunds, place of supply, or any other nature which is recurring in nature and involves interpretation of the provisions of the act. So what are they? Valuation, refund, place of supply, classification. 4. Valuation, refund, place of supply, classification, or any issue which has recurring implication. In that case, even though it does not exceed the monetary limit, they can go for appeal. Where strictures or adverse comments have been passed and or cost has been imposed against the government or department or their officers. So when the High Court is scolding the department officers, and for that purpose, like they are telling adverse comments against the department officers, or they have imposed some cost on the department officers, no, because of which you have to pay this much, like that, then in that case, if department want to go for appeal to Supreme Court, they can go without checking the monetary limit. Any other case or class of cases where in the opinion of the board it is necessary to contest in the interest of justice or revenue. So in the interest of justice or revenue, if they want to do, they can. So these are the 6 exceptions they have created for the point, that is monetary limits. Okay. Now, so this how it can be tested in exam, because there are a lot of points related to this, and I have created some questions related to this. So just we will quickly look into those questions to understand how this can be tested. So it is, one second. See this, see these illustrations please, like how the questions could be coined based on whatever we have discussed on amendments so far, how the questions could come in exam. I discussed this in my regular batch, but I know I didn't wanted to add this for you. So look into the case 1, a tax dispute involving a demand of CGST and SGST totaling 18 lakhs is under consideration for filing an appeal before the GSTAT, will the central tax officer file an appeal based on the monetary limit? So what is the monetary limit for appeal? GSTAT 20 lakhs. But what is the monetary limit in the present case? 18 lakhs. So therefore, as the monetary limit does not exceed 20 lakhs, department cannot file appeal to GSTAT. Okay. Then next, so we have case 2, a case involving a disputed tax demand of 95 lakhs, including CGST, SGST and IGST is being considered for appeal before the High Court. What will be the decision regarding the filing of appeal based on the monetary limits? So this is to High Court. For High Court, what is the limit? 1 crore. The monetary limit for filing appeal is 1 crore. In the present case, it is 95 lakhs, which does not, that is, while counting 95 lakhs, we need to see everything, total. So which does not exceed 1 crore. Therefore, department cannot file appeal. But can the taxpayer file an appeal in this case? Yes. However, taxpayer can file an appeal. Then case 3, in a particular case, the penalty imposed is rupees 15 lakhs and the interest charged is rupees 12 lakhs. Only interest and penalty pa, interest and penalty. So we need to aggregate both. 15 plus 12, 27 with no disputed tax, Should the department file an appeal before GSTAT? GSTAT limit is 20, but here it is 27, which is more than 20. Therefore, department can file an appeal before GSTAT. Are you understanding? While discussing that, you are getting sleep na. So in exam also you will sleep while you are reading that question. But this is how they will be testing. Then next, case 4, GSTAT has ruled that certain provisions of GSTAT are ultra vires to the Constitution of India and the monetary value in that case is only 15 lakhs. Can the department file an appeal to High Court? Yes. If there is a issue pertaining to act being ultra vires the Constitution, monetary limit is, therefore department can file a appeal to High Court. Case 5, a taxpayer is involved in a dispute regarding the valuation of goods and the tax in dispute is 18 lakhs. Can the department choose to file an appeal based on the merits of the case to GSTAT? So what happens here when the issue is related to value of supply? What are they? Value, refund, place of supply, classification. Here it is related to valuation. So definitely department can file an appeal to GSTAT. Monetary limits not applicable to dispute related to value of supply. Therefore, department can file appeal to GSTAT. Case 6. A composite order disposes of 2 appeals. One involving a disputed tax demand of 12 lakhs, another involving 14 lakhs. Should the department file an appeal before GSTAT? Whenever they are going for appeal against the composite orders, 2 different orders, whether we need to see order wise or total. So 12 plus 14 is 26 lakhs, which is more than 20 lakhs. So department can file an appeal to GSTAT. Then case 7. A composite order disposes of 2 appeals, one involving a tax dispute of 12 and another involving 14. Should the department file an appeal before High Court? So again same, 12 plus 14, 26, which does not exceed 1 crore. So High Court they cannot go for appeal. Then case 8. If the department decides not to file an appeal due to the monetary limits in a particular case, can this decision be treated as a precedent for future cases with similar issues? No. So just because they did not go for appeal, it does not mean they have accepted the appeal. If department has not filed appeal due to monetary limit, it cannot be inferred that department has accepted the appeal. Case 9. ABC Limited claims a refund of 22 lakhs, which includes compensation cess of 10 lakhs. The department has denied the refund claim and the taxpayer intends to challenge the decision. Should the department file an appeal before GSTAT? So what is the total? 22 plus 10, that is 22 includes 10. Yes, compensation cess also will be taken. So 22 is more than 20. Therefore, department can file an appeal. Even if it does not exceed 20 also they can go for appeal because it is refund. As the issue is pertaining to refund, even if it does not exceed 20 they can go for appeal. But that point no need to write here because the question is about 22 including compensation cess. So full total we need to take. In case where the tax dispute amounts to 9 lakhs, the court passed strictures and adverse comments against the department. Should the department file an appeal based on the monetary limits? Yes, monetary limits department can file if the issue is related to strictures or adverse comments or any cost that is imposed on government or department. Okay. So like this they can ask. In RTP already one question they have asked on monetary limits for the latest RTP, but why only on monetary limits they should get the question? They can ask on these also. So when we learn fully, otherwise don't learn. That is about this. Next, say this, revisional authority under GST, fine. We are left with something, can we complete it? We'll complete it and then take break. Okay. Say this, revisional authority under GST. So who is revisional authority? I told you whenever the adjudication order is passed and against that adjudication order if they want to modify, so definitely they can modify, that is audit of adjudication orders. Revisional authority is appointed for revision of appeal orders or adjudication orders. Adjudication order, appeal order and all they cannot revise. And how they can do the revision? Either on its own motion, so voluntarily they can take, or based on the information received by it, or based on the request from commissioner, call for and examine the record of any proceedings. And if they consider that the decision given in that order is erroneous, point number 1 is erroneous, insofar it is, point number 2, prejudicial to the interest of revenue, erroneous or prejudicial to the interest of revenue, or is illegal or improper, point number 3, illegal or improper, point number 4, has not taken into material facts. 4 lines. Okay, remember these wordings you should write in the exam when you get a question on revision authority. Number 1, that is erroneous or prejudicial to interest of revenue, or illegal or improper. Number 4, has not taken into certain material facts. Then what revision authority can do? They may stay such order or decision, and after making further inquiry can do any of these 3 things. Either they can enhance, that is increase, or they can modify, that is decrease, or annul, they can cancel the said decision or order. Next, no revision in certain cases. So certain cases revision cannot be done. So when, if you go for appeal against that order, adjudication order, already appellate authority is going to look into it. So that's why revision authority will not touch that order. However, when in adjudication order there are 4 grounds or 4 disputes, in that 4 disputes, 3 disputes only we are going for appeal. With respect to 1 dispute we are not going for appeal, and we accepted that. On that particular point which we have accepted, they can take up the order for revision. So see this, order has been subject to appeal. However, revision authority may pass an order on any point which has not been raised and decided in an appeal, that is with respect to admitted due. We discussed now admitted due, disputed. With respect to admitted due, they can revise. Order has already been taken for revision. So the order has been taken for revision and the revision authority did not revise. Means on merits they said that everything is correct. Now another revision authority cannot come and take up this order for revision. Then order sought to be revised is a revisional order, which means that order has been taken up for revision and the revision authority has revised it, and once the order has been revised by one revision authority, another revision authority cannot touch that. Okay. Then time limit for taking up the order for revision. What is the time limit? Suppose you go for appeal against that order, then so 1 year from the outcome of such appeal or 3 years from the adjudication order, whichever is later. Mark this page. Whichever is later, not whichever is earlier, whichever is later. 1 year from the date of order in such appeal or 3 years from the date of adjudication order, whichever is later. That is the time limit by which. But sir, when we go for appeal, they cannot do revision. No, they can do the revision with respect to few grounds on which we did not go for appeal. For that reason only they gave this time limit. Suppose if appeal is not at all filed, when the revision authority can take up the order for revision? After 6 months. Why after 6 months? Because in this 6 months, either the taxpayer can go for appeal or the department can go for appeal. That's why 6 months time is there. After 6 months, the revision authority will take up the order for revision, but the overall period by which they need to complete is 3 years. After 6 months from the date of adjudication order and within 3 years from the date of such order. Period to be excluded in computing limitation period of 3 years. This is there even in adjudication order also. What is that? Stay granted. don't consider that period. Similar issue pending in court, don't consider this issue. These 2 points are same. So when the issuance of revision order is stayed by order of a court or tribunal, that should not be taken in computing 3 years. Time spent in appeal under similar issue in tribunal to High Court or High Court to Supreme Court should not be taken. So write this, these provisions are equally applicable for demand order under 73, 74 and 76. This is common point, both in adjudication also it is there and even in revision also it is there. These provisions are equally applicable for demand order under section 73, 74, 76. Next, look into this rule 108. It says what should be taken as the date of filing an appeal. So actually it is only for the first appeal, not for the second appeal. For the first appeal only it will be applicable. So it depends upon the adjudication order whether uploaded in the portal or not. Adjudication authority gave the adjudication order. Whether that adjudication order is already uploaded in the portal. Yes, it's already uploaded in the portal. Then the date on which you submit the appeal form, they will give an acknowledgement. The date of acknowledgement, provision acknowledgement itself will be taken as the date of filing appeal, because order has already been uploaded by the officer. Order of adjudication authority is uploaded in the common portal. Date of provision acknowledgement is the date of filing appeal. Suppose if there is a state government officer who passed the order, state government officers and all will not upload in the portal, because they will just type it in a dot matrix printer and they will be giving it to us, and then in that case it will not be uploaded in the portal. Then what we need to do? First you make the appeal form. First you submit the appeal form. After you submit the appeal form, they will be giving you provisional acknowledgement. Then you get the copy of the adjudication order from them, scan it and upload it in the portal. If you do it within 7 days from the date of filing appeal, then in that case the date on which you got the provisional acknowledgement is the date of filing appeal. If you are uploading this copy of adjudication order beyond 7 days, the date on which you uploaded the copy of the order will be taken as the date of filing appeal. Self-certified copy of the order is submitted by appellant within 7 days from filing appeal form. The date of provision acknowledgement is the date of filing appeal. Beyond 7 days means the date of submission of copy shall be considered as the date of filing appeal. And this is an amendment for November 25 exam. You don't have to bother about it. Completely the pre-deposit provision they have changed. But for your exam, whatever we have discussed, that is only applicable. So with this, we completed appeals also. And we'll take a break. And there is one query. In case of composite order, only for amount of 14 lakhs we can go for appeal, because composite amount 26 lakhs. We can. So both cases we can go for appeal. I didn't understand your question here. So with this, actually today we completed 3 chapters in the morning: offences, penalties, demand and recovery, appeals. Why I took that? Because I know that these are the areas which you will not be touching at all. Okay, and that's why I took it in the morning. We'll take a break. We'll meet at 2:45. Now it's 1:48, 2:45 we will meet, and afternoon let's start some interesting area like valuation, like those areas we will discuss. Okay, thank you. Okay, we'll start with valuation under GST. So kindly take that. So now we are going to discuss segment 8, value of supply, which is page number 76. In this valuation, we have only one section, that is section 15, which deals with value of supply, and then we have some rules, that is starting from rule 27 to rule 35. And look into section 15 subsection 1. It is a simple section, intermediate portion, assessable value equals to transaction value. And what is transaction value? The price involved in the transaction, provided two conditions are satisfied. What are the two conditions? Price must be the sole consideration, supplier and recipient are not related. If any one condition fails, then assessable value will not be equal to transaction value, and we need to determine the value as per rules. And there are few inclusions as per section 15 subsection 2. In that 15(2)(a) says all taxes, duties and cess by whatever name called other than GST should be included in the value. So supplier is making supply of goods or services to the recipient, for which recipient will make the payment, and this payment is the transaction value. Taxes, duties and cess by whatever name called other than GST, if charged by supplier to recipient, then only it should be included in the value. For example, municipal tax or property tax, which is paid by the property owner but not recovered from the tenant, it will not be included in the value. Only when it is recovered from the tenant, it will be included in the value. Then next 15(2)(b), recipient is incurring some expenditure, and this expenditure is incurred by recipient on behalf of the supplier. That expenditure should be included in the value because it is actually supplier's expenditure. Any amount that the supplier is liable to pay but which is paid by the recipient, that should be added to the value. And if the recipient is incurring the expenditure on his own account, such expenditure shall be excluded from the value, it will not be included. For example, if the transportation cost is to be incurred by recipient for taking the goods from the showroom to the customer place, then that transportation cost is not to be incurred by the supplier, it is to be incurred anyhow by the recipient, and recipient has incurred it, so it will not be included in the value. Suppose if the supplier is required to make payment to the raw material supplier and that payment is made by the recipient, it's an indirect payment made to the supplier only because supplier liability met by the recipient, so that should be added. That is 15(2)(b). Then 15(2)(c) is about expenditure incurred by the supplier and recovered from the recipient, but in this regard we need to compare with rule 33. Rule 33 says that if such expenditure is incurred by the supplier as a pure agent of the recipient, then it will not be included in the value. So therefore first it should be liability of the recipient which is incurred by the supplier, and the supplier should be acting as a pure agent, then it will not be included. So for example, if there is a chartered accountant who is providing income tax return filing services and wherein the income tax of the client is also paid by the chartered accountant, this actually income tax liabilities of the client, means recipient. Who incurred it? Supplier. Chartered accountant has incurred and in turn recovered from the recipient, so that will not be included in the value. But only thing, they should be acting as a pure agent. When they will be called as a pure agent, certain conditions are there, then only they will be called as pure agent. So supplier incurs the expenditure and recover from recipient. Suppose if it is as a pure agent, that is on behalf of recipient, such expenditure shall be excluded from value. Suppose if it is in the course of supplying, that is for the purpose of providing the supply of goods or services, such expenditure should be included in the value as per 15(2)(c). Then 15(2)(d) talks about interest, late fee or penalty for delay in receipt of consideration, and this interest, late fee, penalty for delay in receipt of consideration not on account of loans or advances. If there is any interest on account of loans, advance, deposits, what is the treatment of that interest? It will be exempted. So if there is any delay in receipt of consideration, for that if interest is collected, that will be included in the value as per 15(2)(d). Then as per 15(2)(e), subsidy is received by the supplier, and we need to check whether that subsidy is directly linked to the price or not directly linked to the price. If the subsidy is directly linked to the price, which means that the subsidy is based on the outward supply. So wherein like suppose if the subsidy is given for every vehicle sold, or subsidy is given with respect to every machinery sold, or subsidy is given with respect to every service rendered. So for example, a coaching center is providing services to the coaching services to the students of below poverty line, for which one NGO is giving 2000 rupees per student as a subsidy. This is related to their outward supply, so that is directly linked to the price. That is subsidy based on outward supply. Subsidy not directly linked to the price means subsidy will be received irrespective of the like outward supply. For example, subsidy received for setting up a power plant in the backward region, or setting up a factory in the backward region, or subsidy received for setting up a green energy plant, or subsidy for empowering the women, all these things are general subsidy, no way related to outward supply. It is ignored and it will not be considered in the value, and it will be treated like donations. So it is treated like either conditional donation or unconditional donation, like that. That should be the treatment. Whereas directly linked to the price, if it is from central government or state government, that is to be excluded from value. If it is from others, that will be included in the value. Now, there are two assumptions that are possible usually. The given price may be after considering subsidy, or the given price may be without considering the subsidy. For example, you can see here, say, price charged, price of a product is 10,000 rupees. Price of a product is 10,000 rupees. Subsidy from state government is 2,000, and subsidy from NGO is, say, 3,000. Now, what should be the treatment in this case? That is, price of a product is 10,000, subsidy from state government 2,000, subsidy from NGO is 3,000. What is the value of supply? Now, there are two views which are possible. View 1, whether the given price is after considering subsidy. So, price after considering subsidy. Price after considering subsidy means that, so the given price, let the given price be X. From that X, we reduced 5,000, so that's where we got 10,000. That is the meaning of this statement. Okay, so there is some given price, we don't know what is that price. From that we reduced this 5,000, so that's where we got 10,000. That is the meaning of price after considering subsidy. Suppose if the price is without considering subsidy, so what does it mean? It means that X, the original price itself, will be 10,000 and we have not reduced any subsidy. Now, in this case, what we need to do is that first we need to start with the price. So, what is the price? Here we will take 10,000 rupees. Now, here also 10,000 rupees. The first subsidy is subsidy from state government. Subsidy from state government, as per provision, if you see, it is to be included in the value or to be excluded from value. So, both this subsidy is directly linked to price. So, due to that reason, like this is to be excluded, but in the given price it is already excluded, so ignore. And suppose if it is subsidy from NGO, as per provision it is to be included, in the given price it is excluded, so therefore we need to add. So, when you add this, you will be getting, so 13,000 as the value of supply, 13,000 as value of supply. Then another view also possible, the price without considering the subsidy, which means I have not yet reduced the subsidy. Subsidy from state government is to be excluded, and in the given price it is not excluded, so therefore we need to deduct 2,000. Subsidy from NGO to be included, in the given price it is already included, so we will not do anything with respect to that. So, 8,000 will be taken as the value. So, which view should be taken? So, for the exam purpose, when the question is silent, please follow view 1, that is, price should be assumed to be after considering subsidy. This is one way of understanding. There is another way of understanding that is simple. From the recipient, how much is collected? From state government, how much is collected? From NGO, how much is collected? From the recipient, how much is collected? Say, out of this 10,000, so 2,000 rupees, 3,000 rupees is received from state government NGO. Then from recipient we are collecting 5,000, and from state government we are collecting, so 2,000, and from NGO we are collecting 3,000. So, definitely this should be taken as transaction value. So, 5,000 and 2,000 will not be coming, 3,000 will be coming. So, therefore, the value will be taken as 5,000 plus 3,000, 8,000 will be taken as the value. Is that clear? So, you see how much is received from recipient, how much is from state government, how much is from NGO. Based on that also you can construct this. Suppose From the recipient we are receiving 10,000, from state government we are receiving 2,000, from NGO we are receiving 3,000. Then whatever we receive from recipient is transaction value, from state government will not come and this will come. So therefore the value will be taken as 13,000. Is it clear? So this way also easily you can follow and you can arrive at the answer. Got it? So that is, you just divide as to from whom we are receiving, accordingly you will know how much should be taken as the value from each and every person. But this is like when we have lot of transactions in the question, you can either follow this way or this way, both are alternative ways only. And the first one is price after considering subsidy or without considering subsidy. The first one is price after considering subsidy, price after considering subsidy, and the second one is price without considering subsidy. Price without considering subsidy means subsidy is not reduced, okay, subsidy is not reduced from the given price. That is the meaning of this statement, okay. Next, so that is what I have given. In the next page you can see, if the question is silent, consider the given price as after reducing the subsidy amount given in the question, that is original price minus subsidy will be taken as the given price. Then in this regard there are two clarifications. Clarification number 1, whether the incentive paid by Ministry of Electronics and Information Technology for the purpose of promoting RuPay card transactions or UPI transactions. So generally whenever we are accepting RuPay cards or UPI transactions, in that case there will be acquiring bank. So even every transaction there will be acquiring bank, that acquiring bank will do the settlement. For example, you are coming to our office and you are scanning and you are making the payment. In that case, the moment when you scan and make the payment, you will be making payment from your bank account and we will be receiving it into our bank account. So there is one intermediary here called as acquiring bank. What that acquiring bank will usually do is that they will be collecting the processing fees. But in case of UPI transactions or RuPay debit card transactions, they will not be collecting the processing fees, or they will be collecting very nominal processing fees because they get an incentive from Ministry of Information Technology and Electronics. Whether this incentive which is received by them should be treated as subsidy, yes, that's what the CBSE circular says. Usually such incentive is provided if the amount in the transaction is up to 2,000. It is considered in the nature of subsidy by central government, therefore it is not included in the value and consequently GST is not payable. So because it is on par with subsidy from central government or state government, that's why GST not payable on the incentive received from Ministry of Electronics and Information Technology. Second point, whether the incentive amount received from Ministry of Information Technology in turn shared by the acquiring bank with other stakeholders in the digital payment ecosystem. In the digital payment ecosystem, we have lot of people. So it's not just the acquiring bank, it will be this voice box providers like Paytm, Pine Labs, etc. These devices providers will be there, not they. Then merchant onboarding agencies will be there. Like that, lot of people will be involved in this UPI ecosystem. But whether all the people will be getting the incentive, no, only acquiring banks will get the incentive from Ministry of Information Technology and Electronics. In turn they will be sharing it with others. But whether the others who are receiving this incentive further from acquiring bank should also treat it like subsidy, yes, that's what CBSE clarification has given. Sharing of incentive, first acquiring bank received it, thereafter they will share it with other people. Sharing of incentive by acquiring bank with various stakeholders in the digital payment ecosystem, example Paytm, Pine Labs, merchant onboarding agencies, as approved by NPCI. So NPCI is the authority which will control all these people. So NPCI should approve that they are part of the digital payment ecosystem. If they are approved, then only the money received by them is also considered. Actually it is not subsidy from central government, but it is deemed to be subsidy from central government and that will not be included in the value. So that is with respect to this. So you can see one question based on this. I have made questions on amendments. So you can see this. HDFC Bank, question number 14. If you have solved workbook, you see, or questions on amendments, it's there in my YouTube website in downloads. HDFC Bank, an acquiring bank registered under GST, participate in the incentive scheme for the promotion of RuPay debit cards and low value UPI transactions as a scheme run by Ministry of Electronics and Information Technology. Under this scheme, HDFC Bank receives an incentive of 10 lakhs. What is the treatment of this 10 lakhs? As per CBSE circular, that 10 lakhs will be treated as subsidy from central government, therefore it is not treated as value, not treated as value for payment of GST, it is excluded from the value. And as per NPCI guidelines, HDFC Bank is required to share a portion of this incentive with its ecosystem partners involved in facilitating digital payments. HDFC Bank distributes the incentive to stakeholders like Paytm Payments Bank and Pine Labs, which help to facilitate UPI infrastructure. In addition to the compliance sharing, HDFC Bank also shares 2 lakhs with XYZ Marketing Limited, a marketing consultancy that is not part of NPCI specified ecosystem. So therefore, this 4 lakhs which is retained by HDFC Bank, anyhow 10 lakhs collected by them is excluded from the value, that is not treated as like value because it is subsidy from central government. Even 3 lakhs received by Paytm and 3 lakhs received by Pine Labs, these two are also deemed to be subsidy from central government and that will not be included in the value for payment of GST. However, XYZ Marketing is not specified, not part of NPCI specified ecosystem. So whatever 2 lakh rupees received by XYZ Marketing Limited is not deemed to be subsidy from central government. Consequently, it is their consideration on which they need to pay GST. Now answer the following questions based on the facts given above. Is the incentive of 10 lakhs received by HDFC Bank from METI subject to GST? No. Is the sharing of incentive by HDFC with Paytm and Pine Labs taxable under GST? No. Is a further sharing of 2 lakhs with XYZ Marketing which is not compliant with NPCI guidelines taxable under GST? Yes. What is the total taxable value and GST payable if any? 2 lakhs plus 2 lakhs into 18%. So on that GST will be payable. So XYZ Marketing Limited shall pay GST on rupees 2 lakhs. So that is with respect to this, and they will raise invoice to whom? They will raise invoice to HDFC because XYZ Marketing Limited will raise invoice to HDFC Bank. And can HDFC Bank take ITC with respect to that? Yes. So because we don't have any restriction with respect to that, they can definitely take ITC. So that is about this amendment. Then Rule 33. Rule 33 is conditions for pure agent. So that is, as per Rule 33, if the supplier incurs an expenditure on behalf of the recipient as a pure agent, then it should be excluded from the value. But remember, first the supplier is incurring the expenditure on behalf of the recipient, then it should not be included in the value, provided it is as a pure agent. First, when it will be called as pure agent, total 4 conditions should be satisfied. Supplier and recipient, there should be an agreement between them wherein recipient is authorizing through agreement to the supplier to incur the expenditure. Number 2, supplier should recover only the actual amount incurred. Number 3, supplier should not hold the title to the goods or services so procured, and supplier should not use this goods or services so procured for his personal purposes. If these 4 conditions are satisfied, then supplier is a pure agent and it will not be included in the value. But before applying these 4 conditions, prima facie you need to check that it should be liability of the recipient which is incurred by the supplier. Coming back to this example of chartered accountant who is paying the income tax liability of the client. First, is the client making chartered accountant to pay as per the agreement? Yes, there should be an agreement, and whatever income tax that is paid, that much only should be recovered. It should not be income tax of the chartered accountant which is paid and recovered from the client. So it is the client's income tax liability only he should pay, and the income tax receipt should not be in the name of the chartered accountant. That's normal. Then another example, there is a Ola or Uber driver who is transporting the passengers and they have paid the toll charges, and therefore the toll charges is recovered along with the fare from the passenger. Whether the toll charges will come under expenditure incurred as a pure agent. First of all, the liability to incur the toll charges is on the passenger and it is incurred by the supplier, that is Ola or Uber driver. But unfortunately that will not be called as expenditure incurred as a pure agent because the toll receipt will not be in the name of the passenger. The toll receipt will be in the name of the driver or the vehicle. So due to that reason, so supplier should not hold the title, but they hold the title. So therefore they will not get the benefit as a pure agent. Yet another example, that is this real estate agents. Real estate agents will be doing marketing for the purpose of promoting the sale of the real estates. Okay, and this particular real estate agent, for every building sold they will get a commission, plus in addition they will also collect the advertisement charges. Whether that advertisement charges will come under pure agent? No, because first of all advertisement charges is not the liability of the client which is incurred by the real estate agent. For the purpose of providing the service only they are doing it. So therefore we cannot prima facie create a equation for this. We need to check the facts and cases on the question, and depending upon that you need to able to decide. First you need to remember as per the scope of the work, it should be the liability of the recipient. As per the scope of the work of supplier, it should be liability of the recipient which is incurred by the supplier. So what are the 4 conditions? Agreement should be there. Number 2, only the actual amount should be recovered. Supplier should not hold the title and it should not be used for the personal purpose. Then there is one circular related to this. Generally, airports will be collecting PSF, passenger service fee, and user development fee from the passengers for providing the services to the passengers by way of accessing the airport. And there are a lot of facilities in the airport which the passengers will be using, for which they need to pay, but literally they will not make the payment. Airline will make the payment and in turn recover it from the passengers. Now in this case, whether airlines is acting as a pure agent? Yes. With respect to this passenger service fee and user development fee, airline is acting as a pure agent because it is a liability of the passenger which is paid by the airline to airport and in turn recover it from the passenger. So that will not be included in the ticket fare for computing the GST. But for doing this activity, the airline will get a commission. So that is collection charges they will get. Just because they get a collection charges, does it mean that they are not a pure agent? No. Still they are pure agent because that's an independent activity. Whatever collection charges they get is an independent activity because first they will collect and they will remit, and thereafter they get these collection charges on which they need to pay GST separately. So passenger service fee and user development fee collected by the airline operators from passengers are to be remitted to airport operators and falls under expenditure incurred as a pure agent, and consequently it will not be included in the value even if collection charges is paid for the same by the airport operator to the airline operator. Then next, exclusion from the value. Section 15 subsection 3, we have 3 exclusions. One is discount given before or at the time of supply, that is trade discount. It is always allowed as deduction. Whereas if the discount is given after supply but the terms are agreed before at the time of supply, example cash discount, even then it is allowed as deduction, but here it will not be recorded in the invoice because the discount is given after supply. So therefore for this purpose they need to give one document called as credit note. Who should give credit note to whom? Supplier will give credit note to recipient. In GST, always debit note and credit note will be given by supplier to recipient. When there will be debit note, increase in the invoice value, debit note, decrease in the invoice value, credit note. Because of the discount, there will be decrease in the invoice value. Due to that reason, a credit note to be given by supplier to recipient. What is the time limit within which the credit note to be given? Remember, in 5 cases, the time limit will be same. That is 30th November of succeeding financial year or date of filing annual return, whichever is earlier. What are those 5 places? Number 1, time limit for availment of ITC, time limit for issuance of credit note, and time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B, and time limit for rectification of GSTR 8, that is TCS return. In these 5 cases, the time limit is common, 30th November of succeeding financial year or date of filing annual return, whichever is earlier. So the credit note needs to be given by supplier to recipient. Whenever the credit note is given by supplier to recipient, what will happen to the supplier liability? The supplier liability will be reduced. And what will happen to the recipient? The recipient has to reverse the ITC, because usually the sale entry will be recipient account debit to sales to GST payable. And thereafter when the credit note is given, so what will happen is that, so there will be debit. For example, discount is given, discount account debit and GST payable account debit to recipient. So GST payable is usually showing a credit balance. The moment when we make a debit, it will be reduction. And what will happen to recipient? As soon as you purchase the goods from me, what is the entry that you will pass? Purchase account debit, ITC account debit to supplier account. When I give you a credit note for discount, this discount is an income for you. So therefore, you will make a debit to me. That is supplier account debit to discount received to ITC. ITC usually shows a debit balance. You need to reduce the ITC. But here they have given in the condition that whenever the post supply discount is given and the terms are agreed before at the time of supply, supplier will give a credit note. Based on the credit note, the recipient should reverse the ITC. Then only for supplier, the discount will be allowed as deduction. Like that they have added one condition. See this. The discount is given after supply but the terms are agreed before at the time of supply and allowed as deduction if the credit note is issued and recipient should reverse the proportionate ITC. How do the supplier know whether the recipient reverses the proportionate ITC or not? For that purpose, what is the arrangement that is given? This is not automated in the portal. Till the time it is automated in the portal, they have brought in one provision, that is a latest amendment for May 25 exam. So how to ensure recipient has reversed the proportionate ITC? If the ITC does not exceed 5 lakhs in a financial year, then in that case 5 lakhs of what? That is whatever ITC they need to reverse based on the credit note. Whatever ITC they need to reverse based on the credit note does not exceed 5 lakhs in a year. Supplier shall obtain a certificate or undertaking from the recipient that the recipient will reverse the ITC. Suppose if the ITC exceeds, that is whatever proportionate ITC they need to reverse based on the credit notes given by the supplier in a financial year exceeds 5 lakhs, then supplier shall obtain a certificate from recipient's CA or CMA that the recipient is doing reversal of ITC. When they need to obtain this, is it a prior or a post-mortem? Post-mortem means after completion of the year we need to get it, means right now you claim it as a reduction. Whenever you give the credit note, you report it in your GSTR1, you report it in your GSTR3B, because of which the supplier liability will be reduced, no doubt about that. But what recipient has to do is that recipient should reverse the ITC. So therefore today we don't know, so you continue doing it. The financial year got over. Against this supplier, so the recipient should reverse the ITC. How much the recipient should reverse ITC against this supplier in a financial year? Means in this year I might have given you 100 credit notes, and cumulative of these 100 credit notes, one supplier, darling, one supplier, not all suppliers, one supplier, all the credit notes ITC component should exceed 5 lakhs. Then you need to get a CA/CMA certificate. Not that one CA/CMA certificate you will get, to whomsoever it may concern, my client has reversed the ITC. Not that. That is of no use. Specific to each and every supplier. You need to get a separate certificate, get a UDIN for that. Okay. So because they are so calculative, they have given this benefit. So each and every certificate means if you have 100 suppliers from whom you got credit notes, then for 100 suppliers we need to give 100 certificates. Is it clear or not? And because they brought in UDIN, otherwise now one copy they will take and they will do Xerox of 100 papers and they will give. Not that. Certificate or undertaking includes details of invoices along with supporting details like GSTR 3B, DRC, how they are reversing the ITC, that detail should be mentioned. Certificate of CA/CMA shall contain UDIN. ITC reversed in a financial year is sum of CGST, SGST, IGST and compensation cess. Means this is the total ITC pertaining to that credit notes. The certificate or undertaking not required to be uploaded in the portal. We don't have to upload in the portal, but whenever department while doing the audit, if they are asking, we need to produce this, but made available to the officer during any proceeding. And this actually, this point is a retrospective amendment, which means that even for the prior periods also we need to do this. Means starting from 2017, 18, 18, 19, 19, 20, 20, 21, every year we need to do. So this is like a rainfall gain. Okay. So for the CAs and CMAs, and they have brought in this amendment. And here, if the discount is given after supply, but the terms are not agreed before at the time of supply, is it allowed as deduction? No, it is not allowed as deduction. Example, end of season sale discount. First I made a sale of the product to you, and that product is 1 lakh, and this product is not at all moving in the stock for you. So therefore I am giving you a 50% discount, which means will I collect 1 lakh or will I collect 50,000? I will collect only 50. Okay, say this. I was into the discussion related to exclusion from supply. Suppose if the discount is given after supply but the terms are not agreed before the time of supply, it is not allowed as deduction, that is clear. And so therefore, even if I am giving a discount of 50%, like say at the time of supply I have not agreed, so at a later point of time I am giving a discount of 50%, even though I am receiving 50,000, but I will end up paying GST on 1 lakh. That was the example I was discussing. And here, whether GST is applicable on additional or penal interest on the overdue loan. So basically, interest is divided into two: interest on loans, advances, deposits, or interest on account of delay in receipt of consideration. And in case of hire purchase transaction, the hire vendor only will be giving the financing to the hire purchaser. In that case, the hire vendor will be collecting installments. In each and every installment, there will be interest component, and that interest will be on account of delay in receipt of consideration. So that interest will be taxable. Whereas in hire purchase financing, there will be three parties: hire vendor, financier, and hire purchaser. Now in this case, the hire purchase, like hire vendor will get the money from the financier. The financier will in turn recover money from the hire purchaser. So whatever money that is recovered by the financier from the hire purchaser in installments, that interest will be called as interest on loans, advances, deposits, and that interest will be exempted. So as interest involved in hire purchase is taxable, so penal interest is also taxable. Whereas the interest involved in hire purchase financing is exempted, the penal interest is also exempted. There are two transaction options involving EMI that are prevalent in trade. In view of the provisions of the law discussed above, these two options along with the GST applicability are as follows: hire purchase transaction and hire purchase financing. In hire purchase transaction, supplier collects the consideration, and in every installment there will be interest, and that interest will be taxable. So as this interest is included in value, penal interest for delay in payment of installment is also included in value. Whereas in hire purchase financing, supplier finances the product and collects the principal and interest as EMI, and this interest is exempted. As this interest is exempted for non-repayment of EMI, there will be penal interest. That penal interest is also exempted. And related to this, credit note point, okay. So credit note point, I have given one question. You can see this question number 13. So that is like right now we have a latest amendment related to that CBSE circular. So connecting that I have given. And online students, those who are watching, hope now it is audible. So you were telling like it is not coming, etc. So please confirm. And say this question number 13. PQR Limited, a manufacturer, entered into contract with DEF Limited, a distributor, on 1st April 2024. The supply was made on 10th May with a value of 25 lakhs and applicable GST rate was 12%. And payment terms required: full payment within 30 days of invoice date. A post supply discount of 7% was agreed upon, conditional on DEF Limited successfully selling 80% of the goods within the quarter. So if you are selling 80% of the goods within the quarter, you will get a post supply discount of 7%. So definitely it's a post supply discount, and the terms are also agreed before at the time of supply. By 30th June 2024, DEF Limited sold 85% of the goods, making it eligible for the 7% post supply discount. Consequently, on 15 July, PQR Limited issued a credit note for such discount to DEF Limited for post supply discount. DEF Limited had availed the ITC on the full invoice value as they complied with the conditions for availment of ITC. To comply with the provisions of 15(3)(b), DEF Limited is required to reverse the ITC proportionate to post supply discount. Now question number 1, how much ITC needs to be reversed by DEF Limited based on the credit note issued by supplier? So please see what is the value for which discount will be given. So 25 lakhs is the total price. On that, 8% will be the discount. So the 8% or 7%? 7%, that is 1,75,000 is the discount. What is the tax component in the discount? So this 25 lakhs is excluding GST. So therefore that 1,75,000 discount is also excluding GST. On the top of that, into 12%, that is 21,000. So that is the ITC component to be reversed by DEF. So DEF has to reverse an ITC component of 21,000 based on the credit note given by supplier under section 34. What is the consequence to PQR Limited based on that credit note? So for supplier, recipient should reverse the ITC, but for supplier their liability gets reduced. So liability of PQR gets reduced as and when credit note is issued and reported in GSTR 1. Then how PQR Limited can prove that recipient has reversed the ITC. What is the ITC component? Assuming that this is the only transaction in this financial year, what is the ITC component? 21,000, which does not exceed 5 lakhs. So then in that case, the recipient should give a declaration to the supplier that they are going to reverse the ITC. So as per CBSE circular, as ITC reversal in a financial year does not exceed 5 lakhs, PQR Limited shall obtain a declaration from DEF Limited that they have reversed the ITC along with supporting documents, that is GSTAT 3B or DRC 3. Okay. Then next, what will be your answer in 3 above? If the ITC to be reversed is 5,50,000 in this financial year, means like this, there are multiple transactions which is happening throughout the year, and for this particular supplier's credit note, they have to reverse an ITC of 5,50,000 as this amount exceeds 5 lakhs. So therefore, we need to, that is, supplier should get a certificate from DEF Limited CAR CMA certifying that they are reversing the ITC along with UDIN and supporting documents, and this procedure to be followed even for the past periods. So that is with respect to this. Next, so what is the treatment of inclusions or exclusions? So we have seen now 5 inclusions. 15(2)(a), taxes, duties and cess by whatever name called other than GST. 15(2)(b), recipient incurring expenditure on behalf of the supplier. 15(2)(c), supplier incurring expenditure and charge it to recipient. When it should be charged? Before, at the time of supply, or before the time of supply of goods, or that is delivery of goods or supply of services, it should have been collected. 15(2)(d), interest, late fee, penalty for delay in receipt of consideration. 15(2)(e), subsidy directly linked to the price other than from CG or SG. These are the 5 inclusions, and 3 discounts we have seen, and that is exclusion. First, as per provision, you need to see whether the amount to be included or not. If it is to be included, what they have done in the given price, it is already included. So ignore. If an amount is to be excluded and it is already excluded, then also ignore. And if an amount is to be included, but in the given price it is not included, so therefore you need to add. An amount is to be excluded, in the given price not excluded, so that you need to deduct. Then next one, whether no claim bonus given by insurance company. Generally insurance companies, what they will do, suppose last year I have not made any claim with respect to my car insurance. This year when I am renewing the car insurance, I will get a no claim bonus. Say the renewal premium is 8,000 and I will get a no claim bonus of 1,000 rupees. Literally I will pay only 7,000 rupees. Whether this 1,000 rupees can be called as discount, pre-supply discount? Yes, because for renewal premium only they are giving me this discount. Before paying the renewal premium itself, they will be giving me this discount. So it's a pre-supply discount, and accordingly pre-supply discount is allowed as deduction provided it is duly recorded in the invoice. So therefore, while giving me the payment advice, so what they should do is that they should mention 8,000 minus 1,000, 7,000 like that. Then in that case GST will be applicable only on 7,000. But some insurance companies, what they do, they follow a different pattern for no claim bonus. First they will be asking me to pay 8,000, thereafter 1,000 rupees they will be giving me like a cash back. In that case, is it treated as a discount? No, because it is not duly recorded in the invoice. Due to that reason, it is not allowed as deduction. So no claim bonus shall be claimed as deduction as pre-supply discount from the value if the same is shown in the invoice as per section 15 subsection 3. Then next one, we have summary on CGST rules, rule 27 to rule 31 related to valuation. First we need to see if price is not sole consideration. There are 2 conditions. Price must be the sole consideration, supplier and recipient should not be related. And what if price is not sole consideration and supplier and recipient are related? Then we need to apply rule 27 and rule 28. Rule 27 is applicable when price is not sole consideration. Price is not sole consideration means apart from price there is some other consideration which is received. That is, the consideration is there, but the consideration is in non-monetary form, or the consideration is partly monetary and partly non-monetary form. Then rule 27 is applicable, and this rule 27 is common for both goods and services. So we have 5 priorities. First, priority number 1, you see the open market value. Priority number 2, if open market value is not available, money received plus money value of non-monetary consideration. If that is also not available, we need to take like, kind and quality. If that is also not there, we need to take cost plus 10%. So this is the priority. If that is also not available, we need to go by rule 31, where the valuation will be determined by the officer. If the above is not possible, the value shall be determined as per rule 31 by applying the principles of valuation. So this is about the 5 priorities. Why will open market value not available? We need to understand the difference between open market value and LKQ. Open market value will be the day, that particular day between two parties, whatever is the price that will be taken. So the comparable time will be same date, and comparable value will be transaction value. Comparable supplier, same supplier or any other supplier. Comparable goods should be same goods, then only OMV will be coming, whereas LKQ is not like that. In case of LKQ, the comparable time can be any nearest date. The comparable value, so transaction value or even the value as per rules also can be taken. Comparable supplier, same supplier or any other supplier, so that's an ICA assumption. Then comparable goods, same goods only but minor differences will be acceptable. So this is about OMV and LKQ. For example, I am an actor and I started acting. So this is my first movie, and in my first movie itself, so I am asking for distribution rights, plus I will also get a remuneration of some 50 crores plus remuneration plus distribution rights in Andhra Pradesh. Okay. So therefore in this case, is the consideration fully in monetary? No. 50 crores monetary plus distribution rights in Andhra Pradesh is non-monetary consideration. Then definitely value will be as per rule 27. Open market value means today an actor like me, so some other transaction, either myself signed another movie today or an actor like me signed another movie today. What is the remuneration? That will be taken as open market value, which is not that easy to determine. So due to that reason, open market value will fail, because on the same day the transaction may not be available. Then in that case, money received plus money value of non-monetary consideration. What is the money that I have received? 50 crores plus money value of non-monetary consideration, that is the distribution rights ka value. It is very difficult to determine the distribution rates, because this is my first movie, I have already distributed, I have made some earning, that will be taken as a value of the distribution rights. So this is my first movie, so therefore this is not ascertainable. So therefore option 2, that is priority 2, also fails. Priority 3, like kind and quality. Like kind and quality means any nearest date. So this is my first movie, so therefore there is no other movie which I have signed. So due to that reason there is no remuneration received, and all other actors, I know they are like first movie itself, they will not be collecting. So LKQ also it is not available, so there is no comparable transaction. And thereafter cost plus 10%. Cost plus 10% means cost of providing the service plus 10%. So what is my rate? I mean, what is the service rate? What is the service rate? That is very difficult to determine again. So because there is no standardization which is available with respect to actor. For one day if they are acting, how much is their rate for one day? It is very difficult to determine. For that purpose, so cost plus 10% also fails. That's where residual value will come into picture. So this entire energy I spent to tell you that residual value only. So residual value will be ascertained in that way, wherein using the principles of valuation, I need to declare some value as the residual value. Understood? Then, so see the next rule. Next rule is what? Related party transaction, including transaction between distinct persons. Carefully listen, we have 3 rules. Rule 27, 28, 29. 27, price is not the sole consideration. 28, related party transaction, including transaction between distinct persons. 29, that is principal agent transactions. In the first case, we have 5 points, correct? In the second rule, second point is missing. Carefully listen. OMV, money received plus money value of non-monetary consideration. LKQ, cost plus 10%. Rule 31. Okay, residual value. Now what happens? Second rule. In second rule, second point is gone. So we have OMV, thereafter LKQ, thereafter cost plus 10%, and thereafter rule 31. Whereas in the third rule, third point is missing. That is LKQ, first OMV, if not cost plus 10%. LKQ is not there. OMV, if not cost plus 10%, if not residual value. Is it clear? That is this rule 28. And this rule 28 is 28 sub rule 1, transaction between related parties including distinct persons. So please write down rule 28 sub rule 1, and this is also applicable in case of both goods and services. And here OMV should be taken, but I have added one proviso. What is that? If the recipient is eligible for full ITC, open market value equals to deemed to be transaction value provided the recipient is eligible for full ITC. 100% of the ITC means what? The recipient, when he is eligible for full ITC, if his outward supplies is fully taxable, if his outward supplies is partly taxable or partly exempted, he will not be able to take ITC fully. So therefore, if his outward supplies is fully exempted, also he cannot take ITC. Means his outward supply, whose outward supply? My recipient's outward supply fully taxable, then only he can take full ITC. Then OMV is deemed to be the transaction value, that is whatever value that I declare in the invoice, that will be taken as the open market value. What if the recipient is not eligible for full ITC? Then I need to ascertain the open market value. Then if this is not possible, then we need to take like, kind and quality. If that is also not possible, then cost plus 10%, and thereafter finally residual value. Then you can see here alternatively. Alternatively means without following this OMV LKQ cost plus 10%, I can go for resale price method. Resale price method means the price at which my recipient is further selling to an unrelated buyer into 90%. So I am selling to one related person, or I am selling to one distinct persons. Now that related person or distinct person subsequently sells to unrelated buyer into 90% will be taken as my value for payment of GST. It is at the option of the supplier with respect to each invoice they can decide. But this proviso is applicable only in case of goods, not applicable in case of services. Alternatively, in case of goods, highlight that only in case of goods this point will be applicable. At the option of the supplier, for each supply 90% of the price at which recipient supplies like, kind and quality to an unrelated buyer. Recipient should not process those goods but should have been sold it as such. Okay. So therefore, if the recipient is processing and subsequently selling, this point will not be applicable. And next, so third point, that is principal agent transaction. In case of principal agent transactions under 7(1)(c), rule 29 is applicable, but this is applicable only for goods. Rule 27 and 28 is for both goods and services, but rule 29 is only for goods. And even this proviso is also that resale price 90% is also only for goods. And in case of principal agent transaction, either I can go for OMV or 90% of the price at which the like, kind and quality is sold to an unrelated buyer at the option of the supplier for each supply. Suppose if this is not available, then they can go for cost plus 10%, if not residual value. And if there is a sole selling agent, sole selling agent is related. Yesterday while discussing related definition, I told you family scope. In that family scope, yes refers to sole selling agent. So sole selling agent always we need to take rule 28, not 29. Because rule 29 is a general provision, whereas 28 is a specific provision for related parties. So due to that reason, in case of sole selling agent, we need to apply rule 28. Then you can see here, if the above is not possible, residual value. For rule 30, cost plus 10%, what should be taken as the cost? In case of manufacturer, cost of production. In case of service provider, cost of providing service. And in case of trader, cost of acquisition should be taken. You can see for cost plus 10%, cost shall be cost of production in case of manufacturer, cost of acquisition in case of trader, and cost of providing service in case of service provider. And as open market value equals to transaction value, invoice can be generated for any value. Even 1 rupee can be considered as value for this purpose. And then in case of services, rule 30 can be skipped and proceeded to rule 31, as determining the cost of providing service is difficult. So generally rule 30 is cost plus 10%. We can skip that and go to rule 31. Even if value is determined as per CGST rules, the inclusions and exclusions will be applicable. For example, instead of taking transaction value, you go for open market value. But whether the discount point is applicable even in that case, yes. See, just for transaction value only we take this value as per rules. It does not mean the inclusions and exclusions are not applicable. Those 5 inclusions and that discount exclusion is to be applied here. Then alternative value of 90% on resale price under rule 28 is applicable only in case of goods. And in case of transactions between distinct person and principal and agent, even though transaction value under section 15 is applicable, because transaction value under section 15(1) says that price must be the sole consideration, supplier and recipient should not be related. and if they are distinct persons, whether they are related, no, and if they are principal and agent, they are related, no, then definitely transaction value can be applied. Even then we need to determine the value as per rule 28 and rule 29 only. Why is it so? Because of section 15 subsection 5, which says that notwithstanding anything contained in 15 subsection 1 and 15 subsection 4 with respect to the notified transactions, we need to determine the value as per rules only because of that reason. So in case of transaction between distinct person and principal and agent, even though transaction value under section 15 is applicable, value shall be determined as per rule 28 and 29 respectively. Then next, how to determine value of supply in case of import of services from a related person where the recipient is eligible for full ITC. So this point is always common. You remember, in wherever it is RCM, so in case of RCM, that is import of services, so we need to pay GST under RCM, and if the recipient is eligible for full ITC, then rule 28 will come. Again I am repeating, carefully listen. So you are importing services from whom? From a related person. It is supply, okay, it is supply under either 71B or 71C, okay. Now in this case, when recipient is eligible for full ITC, first you need to determine value as per rule 28 because it's a related party transaction. As per rule 28, we have one point. If recipient is eligible for full ITC, open market value is nothing but the value declared in the invoice. But as the transaction is coming under RCM, there is no invoice given by the supplier. Then in that case, what should be taken? So in that case, if there is no invoice given, then we need to take the value as nil. Okay, say this. Value determined as per rule 28. As recipient eligible for full ITC, transaction value deemed to be open market value. As the said transaction is covered under RCM, invoice raised by recipient under 31 subsection 3 clause F. Usually self invoice to be given by recipient to supplier in case of RCM. If invoice is not issued, the value of such services is deemed to be nil. Is it applicable for all the services? Yes. With respect to all the services, it will be applicable. Okay. Then based on this, I have given one question. You can see that question here. Offences Limited, question number 15, page 656. Question number 15, Offences Limited, a registered company in India, is engaged in IT consulting and software services. Offences Consulting Incorporation, its related foreign entity based in USA, provides software development support and consulting services to Offences Limited in India. Both entities are related person under the GST provisions. In October 2024, Offences Consulting Incorporation provides software consulting services worth 20 lakhs to Offences Limited. So definitely it's an import of service from a related person. Since this transaction is an import of service, Offences Limited is required to pay GST under RCM. Additionally, Offences Limited is eligible for full ITC on this transaction. So now, moreover, Offences Consulting Incorporation also provides strategic advisory services to Offences Limited without issuing any invoice. The domestic entity Offences Limited estimates the market value of these services to be 5 lakhs, but no official invoice is generated for these services. So, as the recipient is eligible for full ITC, in the first case for 20 lakhs invoice is issued, correct? Invoice is issued, and therefore we will take 20 lakhs as the value. Whereas in the second case, 5 lakhs, no official invoice is given. As invoice is not issued, it will be taken as nil. And first question, whether Offences Limited is required to issue any invoice to Offences Consulting Incorporation. Remember, in case of services or goods covered under RCM, when the supplier is unregistered and the supplier is not giving invoice, the recipient has to give invoice to the supplier under section 31 subsection 3 clause F within 30 days. That is also an amendment. In tax invoice, that's an amendment. The recipient has to give invoice to the supplier within 30 days from the date of receipt of goods or services. See here, as per section 31 3F, Offences Limited shall issue invoice to Offences Consulting Incorporation within 30 days from the date of receipt of services. Then second, who is required to pay GST in the present case and what is the value on which GST will be payable? So GST payable by recipient under RCM because it's an import of services. Section 9(3) read with notification 13/2017, GST payable by Offences under RCM. Then if Offences Limited, and what is the value? The value will be only 20 lakhs. Why only 20 lakhs? Why this 5 lakhs we cannot take? Because of the CBIC circular. The CBIC circular says if the invoice is not issued, the value shall be taken as nil. And only for 20 lakhs the invoice is being given, so we are taking that. And if Infosys Limited declares 20 lakhs as the value of software consulting services from Infosys Consulting Incorporation in the self invoice, they declared only 20 lakhs. Compute the GST payable by Infosys Limited, only 20 lakhs. Applying the above circular, value of supply shall be invoice value as recipient is eligible for full ITC. If value declared in invoice is 20 lakhs, then GST payable under RCM on 20 lakhs into 18%, 3 lakh 60. What if in the invoice they mention 25 lakhs? Then that 25 lakhs will be taken as the value. Got it? That is the application of this particular circular. Then there is one more rule that is newly added, that is rule 28 sub rule 2. Already previously we had this, but this was given as a second proviso, third proviso, and now they made it as a separate rule, and wherein this is in case of corporate guarantee. Corporate guarantee between related person. One company is giving guarantee to another company with respect to the loan taken by the another company, for which there might be some consideration or there may not be consideration. But what should be taken as the value? Even if there is no consideration, transaction between related parties treated as supply under section 71C. So say this, value of supply in case of corporate guarantee to a related person located in India. Very, very important, located in India. What if the recipient is located outside India? Means the company giving the guarantee and the company giving the receiving the guarantee, if both are in India, definitely this rule will be applicable. Company giving guarantee is outside India, company receiving the guarantee is in India, then also this rule 28 sub rule 2 is applicable. Company giving guarantee in India, company receiving guarantees outside India, then this rule will not be applicable. Then in that case what we need to do? Even that is also related party transaction, yes. So this rule will not come. Then we need to determine the value as per rule 28 sub rule 1. This rule, OMV, LKQ, cost plus 10%, that will be applicable. Okay. So value equals to 1% of the amount of guarantee offered per annum or the actual consideration, whichever is higher should be taken. Previously it was 1% of the guarantee offered or actual consideration, whichever is higher was there, but this per annum they have added now, which means if the tenure is for 4 years, 1% per annum, so into 4 years means 4% will come. Previously standard 1%, now depending upon the tenure of the loan. So if the loan is for 6 years, 6% will come. Got it? Or the actual consideration, whichever is higher. Now this point was not there before, now they have added, if the recipient is eligible for full ITC, then whatever value that is declared in invoice is deemed to be the value. Then 1% is computed on the loan sanction but not on the loan disbursed. A very, very important point. For example, if the loan is for 100 crores and a company is giving guarantee for 100 crores, but out of that 100 crores, only 60 crores is taken as loan right now, but sanctioned is 100, disbursed is only 60. Now this 1% will be computed on 100 crores or 60 crores? Only on 100 crores, because on the guarantee given. So therefore compute on the loan sanction but not on the loan disbursed. Recipient can avail ITC with respect to GST paid by supplier irrespective of the loan disbursed. For example, so I am the supplier company or the recipient company, I gave the guarantee for 100 crores, but you received only 60 crores of loan. Now whatever GST that I pay, that is 1% on 100 crores or actual consideration, whichever is higher I pay GST and I will raise invoice to you now. Now can you take that ITC? Yes. Even though you received only 60 crores of loan, but you can take ITC with respect to whatever invoice that I am raising to you. If the loan is for a fixed term, then 1% computed for each year and GST payable at the time of issuance of guarantee. However, in case of annual renewal, GST will be payable yearly based on the value determined each year. For example, if the loan is for 4 years, I told you already, 1% into 4 years or actual consideration, whichever is higher. Suppose if the loan will be renewed every year, first year we will pay 1% into actual consideration, whichever is higher. Again second year the loan will be renewed, again second year the loan value may get reduced because the principal will come down now. Throughout the year some EMIs will be paid. Don't sleep here, don't sleep. Very, very important. If this attempt, this question is not coming now, next attempt I will quit teaching. Okay, open challenge. 1 crore rupees bet. Will you sign? Definitely it will come. Definitely it will come. That much strong I am. Definitely it will come. Otherwise I will quit. Open statement I am giving. It is being recorded also. Okay. That much guarantee it will be, because you are all sleeping. Because you are all sleeping, definitely it will come. Whenever we learn something and when we get sleep and all, definitely it is guaranteed in exam. That's what I say for you. So therefore, say this, if it is annual renewal, what will happen? So next year again I will renew. When I am signing next year, first year you fully made the principal payment. So due to that reason, if the loan is for 100 crores, the next year the loan will not be for 100 crores, the loan may be for 90 crores. So depending upon the value of the loan for the next year, we need to compute the guarantee. So 1% of the loan amount. If the loan is for part of a year, say for example, if the loan is for 9 months, then what we need to do? 1% is per annum. So 1% into 9 by 12. 1% into 9 by 12 is considered as value. Then whether GST is applicable on corporate guarantee in case of takeover of loans, since it is merely an assignment of already issued corporate guarantee. For example, so if there is one particular bank, HDFC bank, which has been taken over by ICICI Bank, for example, I am telling you. Now in that case, when the ICICI Bank takes over the HDFC Bank, the loan also will be taken over. When the loan is taken over, ICICI Bank will ask me to sign again. So when I sign again, then GST department will again get money. You understood or not? So takeover of loans by one bank from another without issuance of a fresh corporate guarantee or renewal of corporate guarantee would not tantamount to provision of corporate guarantee service. Therefore, GST is not applicable. Suppose if they ask me to sign the fresh guarantee, definitely GST will be applicable. Mere taking over of loan, there won't be any liability. But a fresh guarantee to be signed, definitely GST liability may arise. Then, where corporate guarantee is provided by more than one entity, what is the amount on which GST payable by each co-guarantor? That is, what will happen? 3 companies together may guarantee. Then in that case, normal, you take 1% or actual consideration, whichever is higher, and you apportion that between those 3 companies in their loan ratio. For example, if 100 crores is the guarantee, A, B, C are 3 companies, A will tell 40 crores to that extent I will give guarantee, B will tell no 30 crores and C will tell so for 30 crores. Now the total money divided between 4:3:3 ratio. What if we don't have any ratio? It is like joint and several like that. Then in that case, equally you need to divide. Okay, say this. If the total consideration paid to the guarantors exceed 1% of such guarantee offered, then value of supplied to be actual consideration received by each co-guarantor, and other cases proportionately on 1% of the guarantee offered by each co-guarantor. In the absence of ratio, equal proportion to be taken. Whether intra-group corporate guarantee liable to RCM. Suppose if the supplier foreign company and recipient is an Indian company, then definitely for that guarantee it is coming under RCM. Supplier located outside India and recipient in India, RCM. If both are in India, FCM, and supplier is required to issue invoice. Whether the valuation in terms of Rule 28 sub Rule 2 will apply to the export of service or providing corporate guarantee between related persons. No, because in case of export of service where the recipient is located outside India, first of all, this Rule 28 sub Rule 2 is applicable only if the recipient is located in India. If the recipient is located outside India, this is not applicable. So Rule 28 sub Rule 2 shall not apply to the export of service or providing corporate guarantee between related persons. In such case, we need to determine the value as per regular rule. That regular rule is Rule 28 sub Rule 1, that is OMV, LKQ or Rule 30. Okay, so like that we need to determine. Then these provisions whatever we have discussed is in the context of corporate guarantee. Corporate means, remember, only companies. Suppose if partnership firm is giving guarantee, this will not be applicable. It is only for the companies which is giving guarantee. Then there is something called as personal guarantee. Personal guarantee means which is given by the director of the company to the company. Then in that case, whether it will be coming under related party transaction, yes, because director of a company and the company are treated as related. So it's a related party transaction and the value will be determined as per Rule 28. But the problem is, RBI has given one circular that director who is giving guarantee to the company should not collect any consideration from the company. Due to that reason, CBIC gave a clarification that the value shall be taken as nil. In case of personal guarantee by director to a company without consideration is supply under 7(1)(c), and value under Rule 28 shall be considered as nil as per CBIC circular. Why? Because as per RBI circular, consideration should not be paid in case of personal guarantee by a director to a company. However, personal guarantee can be given by ex-director to a company for a consideration, then it is not a related party transaction and the value will be determined as per section 15. That is about this, corporate guarantee and personal guarantee. So please look into one question. So this kind of question may be coined. You can see that page 657, question number 16. XYZ Limited, an Indian company registered under GST, provides corporate guarantee to 4 different entities. ABC Limited, in which XYZ Limited holds 60% equity. Is it related? Yes. For a loan of 10 crores from a bank for a period of 1 year, XYZ Limited does not charge any specific consideration for this service. So what is your answer with respect to this? So 10 crores into 1%. So that will be 10 lakhs. Both are in India? Yes, both are in India. So therefore 10 crores into 1%, 10 lakhs will be taken. There is no actual consideration. Second, PQR Limited, in which XYZ Limited holds 20% equity. Definitely they are not related, because with 20% equity they cannot become related. For a loan of 20 crores from a bank for a period of 2 years, XYZ Limited charges an annual fee of 2 lakhs for providing this guarantee. So it is not a related party transaction, but it's a normal transaction chargeable to GST under 7(1)(a) section 15. That is 2 lakhs will be taken as a value, and first year 2 lakhs and second year will be 2 lakhs. See the answer. Transaction value under section 15 is 2 lakhs in first year and 2 lakhs in second year based on the invoice issued. Third case, LMN Corporation, a company located in Singapore, who is the largest material supplier of XYZ Limited, for a loan of 15 crores for 1 year. No consideration is charged for this guarantee. First of all, largest material supplier and all is not a related party. So therefore it's not a related party transaction. Consequently, there is no supply here because there is no consideration. First check. So that's what, where every time you see a question, you need to check whether it is supply or not a supply. In this case, it is not a supply. Why it is not a supply? There is no consideration, and moreover it is not from a related person. So what are the 4 activities, even though without consideration constitute supply? DRIP. D for disposal of business asset on which ITC avail. Then related party transaction, including transaction between distinct person, import of service from a related person or other establishment located outside India, principal agent transactions. Okay. Then, so that's why it is not a supply and GST payable shall not arise. DF Limited is related entity located in UK. So for a loan of 30 crores for a period of 3 years, XYZ Limited charged a consideration of 45 lakhs for providing this guarantee. Rule 28 sub rule 2 is not applicable. Why not applicable? Because where is the recipient located? Where is the recipient located? Outside India. DF Limited is related entity located in UK. So 28 sub rule 2 will not come, but the value will be determined as per 28 sub rule 1. Value under rule 28 sub rule 1 is open market value to be determined. If that is not available, like, kind and quality. If that is not available, cost plus 10%. Okay. Transaction value not applicable, as this corporate guarantee is to a related entity, and rule 28 sub rule 2 also will not be applicable. Why not applicable? Because the recipient is located outside India. Got it? So this is about this, and I have developed some more questions also for the purpose of application of this. Maybe anything can be asked. In second year. it is not there. Fine, in the break I will open and I will show that. Okay, so but I have developed some questions, the PDF is missing. Correct, in revised book it is there. Five 514. Okay. Okay, say this. Look into these questions. So compute the value of supply with respect to corporate guarantee with respect to below mentioned situations. Assume that the recipient is eligible for full ITC only if specified in that situation. Case number 1, XYZ Limited issued a corporate guarantee of rupees 20 crore to its related party DF Private Limited in India on November 1, 2023 for a period of 1 year without charging any specific consideration. XYZ Limited charges 50,000 as an actual consideration. DF Private Limited is eligible for full ITC. When the recipient is eligible for full ITC, open market value is deemed to be the transaction value. So due to that reason, this 50,000 will be taken as the value in this case. Case 2, XYZ Limited along with its other related entities, MNO and PQR, jointly provided corporate guarantee to a bank on behalf of GHI Private Limited related for a loan amount of rupees 30 crores. So therefore, they have given the loan. 3 companies together has given the guarantee to their related entity, where XYZ Limited share being 15 lakhs, the total actual consideration paid by GHI Private Limited for this guarantee is 25 lakhs. First you need to determine the value as per rule 28 sub rule 2, that is 30 crores into 1% or 25 lakhs, whichever is higher, that is 30 lakhs. So in this 30 lakhs, so XYZ Limited share is 50%. Out of 30 crores their share is 50%, which means that 50% of this 30 lakhs you give it to XYZ Limited. So XYZ Limited will be 30 lakhs into 50%, 15 lakhs. Thereafter remaining 2 companies, we don't know what is the share, therefore we need to equally divide between them. So MNO and PQR, the remaining 15 lakhs divided by 2, so 7 lakh 50 and 7 lakh 50,000. Then case number 3, XYZ Limited along with its other related entities, MNO and PQR jointly provided corporate guarantee to a bank on behalf of GHI Private Limited related for a loan amount of 30 crores, where the XYZ Limited share being 12 lakhs, the total actual consideration is 35 lakhs. Now in that case, 30 crores into 1%, 35 lakhs, or 30 crores into 1%, 30 lakhs or 35 lakhs, whichever is higher will be 35 lakhs. Now that 35 lakhs, first XYZ Limited share is only 12, so into 12 divided by 30, 14 lakhs. So out of that 35 lakhs, 14 lakhs is gone. What is the remaining amount? That equally divide between MNO and PQR, so 10 lakh 50 and 10 lakh 50,000. Then case number 4, XYZ Limited along with other related entities, MNO and PQR jointly and severally provided corporate guarantee to a bank on behalf of GHI Private Limited not related for a loan amount of 30 crores. The total actual consideration paid by GHI Private Limited for this guarantee is rupees 15 lakhs. As it is not to a related person, so we need to take the actual consideration as the transaction value. Value under section 15 is transaction value, that is rupees 15 lakhs. Rule 28 not applicable. Why it is not applicable? Because it is not a related party transaction. Then whatever is the consideration amount shared by XYZ, MNO and PQR out of such 15 lakhs is considered as the value of supply by them. Then case 5, XYZ Limited's parent company Element Corporation based in Singapore provided a corporate guarantee to a bank for XYZ Limited in India for a loan of 40 crores for a period of 3 years. Whether rule 28 sub rule 2 is applicable? Definitely, because the supplier is outside India and the recipient in India. So if recipient is in India, definitely it will be applicable. Corporate guarantee by related supplier outside India to recipient in India, value under rule 28 sub rule 2, that is 40 crores into 1% for a period of 3 years. So into 3, that is 1 crore 20 lakhs GST payable under RCM. Case 6. XYZ Incorporation parent company Element Limited based in India provided corporate guarantee to a bank for XYZ Incorporation in Singapore for a loan of 40 crores for a period of 3 years. As the recipient is located, related recipient is located outside India, the value will be determined as per 28 sub rule 1, that is open market value or LKK or cost plus 10% that should be taken. So 28 sub rule 2 is not applicable here. Case 7. XYZ Limited issued a corporate guarantee of rupees 60 crores to its related party UVW Private Limited in India for a fixed term of 4 years starting on January 1, 2024. No actual consideration is charged for the guarantee. The guarantee is for a fixed term and XYZ Limited wants to understand the GST implication for the entire period of the guarantee. First we need to compute the value as per rule 28 sub rule 2. That will be 60 crores into 1% into 4 years. There is no actual consideration, so 2 crore 40 lakhs and GST payable under FCM for entire 2 crore 40 lakhs, GST payable on January 1st 2024 itself, because on the date on which they have given the guarantee, as it is a fixed term, on this date itself GST will be payable under RCM on Jan 1 2024 for entire 2 crore 40 lakhs, which means Jan 1 2024 will be taken as the time of supply for this transaction, and accordingly for Jan 1 they need to discharge the liability by 20th of February. That is the meaning of this. Then case 8. XYZ Limited issued a corporate guarantee of 12 crores to its related company TUV Limited in India for a 6-month period starting on April 1, only for a period of 6 months. No specific consideration is charged. XYZ Limited wants to know the value of the corporate guarantee and the GST payable for the short term guarantee. Simple, that is 12 crores into 1% into 6 by 12, that is 6 lakhs, and GST payable under FCM on April 1st 2024 for this 6 lakhs. Then case 9. XYZ Limited issued a corporate guarantee of 25 crores to its related entity BCD Limited for 1 year starting on June 1 with the option for annual renewals. No specific consideration is charged. What is the value and GST payable for first year and second year if renewed for second year? So every year we need to pay value under rule 28 sub rule 2 for first year. This is June 1 2024. So what is the amount? 25 crores into 1%, 25 lakhs. GST on above on the date of guarantee given. Then again value under rule 28 sub rule 2 for second year, that is June 1 2025. So as they have not given any component, that is 25 crores is for the first year, whether for the second year also 25 crores or not they have not given, so we will take 25 crores itself for second year also into 1%, 25 lakhs. GST on above on the date of renewal will be taken. Then XYZ Limited, an Indian company, has issued a corporate guarantee of 75 crores to HDFC Bank on behalf of its related entity ABC Private Limited for a loan issued by HDFC Bank. After 3 years, ICICI Bank decided to take over the loan from HDFC Bank as a part of refinancing arrangement. During this process, XYZ Limited did not issue a new corporate guarantee but allowed the transfer of loan from HDFC Bank to ICICI. Does the takeover of loan from HDFC by ICICI result in any GS liability for XYZ Limited? No, as there is no fresh guarantee or renewal of guarantee by ICICI, GST liability shall not arise. If XYZ Limited issues a new corporate guarantee to ICICI for the remaining term of 2 years, calculate the GST payable on the new guarantee of rupees 75 lakhs. Then again GST liability will come. So value under rule 28 sub rule 2 75 lakhs into 1% into 2 years, GST payable on above on the date of execution of new corporate guarantee. Understood here? So covering all the points in circular, these are the possible questions that can be tested in exam. That's why I told you, because it's a very big amendment. So 2 questions I am expecting seriously for this attempt, that is one on appeals. In appeals they will be making 1 question. Another on this corporate guarantee, definitely chances are high. Then next, look into another one. So this circular already they have tested it for November 24 exam. I don't think so again it will be coming for May 25 exam. How to value internally generated services by head office to branch office. So head office will be incurring some expenses. These are not procured. These are not procured services. These are internally generated services, which means that the head office will be incurring the employee cost, or head office will incur the common expenses, etc. But they will be raising a debit note or raising an invoice to recover the money from its branch offices. So how to value that internally generated services? CBI circular on services provided by head office to branch office, not procured from a third party. First you need to see whether the branch office is eligible for full ITC. Generally head office and branch office are treated as distinct persons and the value will be determined as per rule 28. Usually when recipient is eligible for full ITC, then the value will be taken as transaction value. OMV equals to transaction value. Branch office eligible for full ITC, whether amount recovered or not by branch office, by head office, value under rule 28 is invoice value. Value can be nil if invoice is not issued. If invoice is not at all issued, the value can be nil. That's what this point is actually common in many places. Whenever the recipient is eligible for full ITC, OMV equals to transaction value mentioned in the invoice. If invoice is not issued, the value can be taken as nil. So this already we saw in import of services, and another place also we are seeing this, that is head office to branch office. And if the branch office is not eligible for full ITC, generally when branch office is not eligible for full ITC, we need to determine the open market value. But they have given one special point here. If the amount is recovered from branch office by head office, then the open market value will be determined. If amount is not recovered, means invoice is not issued, the value will be taken as nil. So one line summary is that if invoice is not issued, the value will be nil. That is this CBIC circular, which means giving invoice is an optional. Like this, one more place where giving invoice is optional, that is in case of import of services where the GST is payable by the recipient under RCM. But what is common in these two? So that is recipient not eligible for full ITC, eligible for full ITC, eligible for full ITC. But in this circular, one more point, even if recipient not eligible for full ITC, if invoice is not issued, the value will be taken as nil. This is like an exception to rule 28. Above treatment is applicable even in case of import of service from a related person. That's the circular which we have already discussed about, this circular. How to determine the value of supply in case of import of service from a related person. Then now we are moving on to rule 31A. So 27, that is price is not sole consideration. 28, related party including distinct person. 29, principal agent transaction. 30, cost plus 10%. 31, residual value. 31A we are discussing, that is value of supply in case of lottery, betting, gambling and horse racing. In case of horse racing, betting and gambling, we need to take 100% of the face value of bet or amount paid into the totalizer. So both are same only. So if there is a face value of bet given, you take that. Otherwise you see the total amount which is collected by the totalizer, not on the commission earned by the totalizer. For example, it's a horse race where 10 horses are participating in the race. People will randomly place bet on different horses. What is the total amount collected by the totalizer? That is the one who conduct the betting transaction will be taken as a value on which GST payable. And in all these cases, what is the rate of GST? 28% will be taken as the rate of GST. Whereas in case of lottery, therefore horse racing, what are the specified actionable claims? HC block. HC block is the specified actionable claim. What is H? Horse racing. C for casinos. B for betting. L for lottery. O for online money gaming. G for gambling. So therefore in case of horse racing, betting and gambling, they are telling this as the value. Whereas for the next one, lottery. In case of lottery, we need to see the price printed on the ticket or notified by the organizing state, whichever is higher. Say the price printed on the ticket is 500, but the price notified by the organizing state is 450, but we will take only 500 into 100 by 128. So there are two places where we need to assume that the value always inclusive of GST. That is number one, interest on account of delay in receipt of consideration. We need to assume that the value should be inclusive of GST. Again, in case of this lottery also, the value will be assumed as inclusive of GST, means the price of the ticket is assumed to be inclusive of GST. That's why into 100 by 128 is value. Then what is the value of supply in case of online money gaming and casinos? In case of online money gaming and casinos, so these both cases the treatment is similar, whereas in case of online money gaming, how much money we deposited for the purpose of playing the game. In online money gaming, what will happen? We will deposit an amount with the expectation of winning that amount, and here it may be a game of skill or game of chance or game of both, and whatever money initially we deposited, that should be taken as a value for payment of GST. After we play, we get a winnings. On that winnings, whether any GST is applicable? No. Initial deposit, whatever amount we have made, on that only GST payable. Suppose initially we made a deposit of 10,000 and we used 8,000 for playing the game. 2000 rupees of the initial deposit, we thought it is not worth to play, so therefore we have withdrawn. Then in that case, will there be any reduction in liability? No. So initial deposit 10,000 means on the 10,000 GST will be payable. Is that clear? Say we played games and 10,000 rupees went to 18,000 rupees. Now on that extra 8,000 rupees we need to pay GST? No. If you use that 8,000 also in turn for playing, we don't have to pay any GST with respect to this. Suppose if that 18,000 you have withdrawn and again deposited, whether GST will be payable on that 18,000? Yes. Every time you deposit, GST will be payable on that deposit. Valuation in case of specified actionable claim, supply of online gaming including online money gaming, the value of supply will be amount paid or payable or deposited with the supplier by way of money or money's worth, including virtual digital asset by or on behalf of the player. And in case of casinos, so whenever we go into casinos, we need to deposit money and we will buy the tokens or chips. So whatever money for which we purchase the tokens or chips, that will be taken as value for payment of GST. Amount paid or payable for purchase of token, chips, coins or tickets for use in casinos by or on behalf of player. In both these cases, if there is any amount returned or refunded by the supplier to the player, including amount paid or deposited with a supplier which is not used by the player, shall not be deductible from the value of supply. So it will not be deducted. Also, any winning amount which is used by a player without withdrawing shall not be considered as the amount paid or deposited with the supplier. Okay. So any amount that is withdrawn, there is no reduction, and suppose if using that he has played also, there is no GST with respect to that. That is with respect to this. Clear or not these 2 points? So first point, any amount returned or refunded, so there is no deduction, and any winning amount used by a player without withdrawing shall not be considered as amount paid or deposited. So that is about rule 31A, and related to this rule 31A, already one question they have tested it for May 25 exam, but there is a possibility of asking the same question again also, because it's a very good question. So they have given this in RTP, May 25 RTP, and it also came in exam also. So you can see that. Where is RTP? May 24. Say this question. Fortune 365 is an online money gaming platform operating from UAE. It provides its users with a platform to play and win money in different games that are available on its portal. In the month of December, player A, an unregistered person located in India, deposited an amount of 10,000 inclusive of GST. So the 10,000 will be chargeable to GST. That should be taken as a value. And what is the rate of GST? Always 28%. And it is specifically given as inclusive of GST, so we need to take. So 10,000 rupees into 28 divided by 128, that is 2,187.5 will be taken as the GST liability. So just make note somewhere, 2,187.5 will be taken as the liability. Subsequently, following transactions were undertaken by player A in the said month. Player A utilized the amount of 2,000 from the master wallet towards playing a virtual racing game. As a winning amount, 10,000 was credited to the master wallet of player A. No, there won't be any GST on this winning amount. On another portal, remember another portal, in the same portal if he is the playing, so there won't be any problem. But on the another portal operated by Fortune 365 in the name of bet 180, player A placed a bet of face value 11,000. Automatically it will come under betting transaction. So in case of betting transaction, now again we have another rule which says that the value of the bet should be taken for payment of GST. So bet face value 11,000 on international wrestling match. The amount of such bet was paid by the master wallet of player A. However, he lost the bet and hence the bet amount of 11,000 with applicable taxes, which means that 11,000 will be exclusive of GST. So again on 11,000 also there is GST, 11,000 into 28%, that is 3,080. Already you got some amount plus 3,080. What is the amount that you got? 2,000? 2,187.5, that is 5267.5. It should be rounded off to 5,268. That should be taken as the GST payable. And thereafter, player A transferred the balance amount from the master wallet to his bank account after the aforesaid transaction. Assume all above transaction to be exclusive of GST unless otherwise specified. Rate of GST applicable is 28% and ignore the bifurcation of GST amount into CGST. So question number 1, compute the total GST payable 5267.5. You can see the answer here. So 5268, clear? 5268. There is a second question. How much is the total amount transferred by player A to his bank account? First we deposited 10,000 and thereafter GST on deposit 2188 is gone, and then we spent 2000 rupees for playing the game, plus we got 10,000 as winning. So first 10,000 minus 2188 minus 2000 plus we got 10,000, and again we placed a bet of 11,000 and on the GST 3080. So balance 1732 will be refunded to that person. Okay, and there is a question. So like this can be tested, and because that particular attempt not many students have answered perfectly. And even one more point, if the online money gaming supplier is located outside India, who will pay GST? Whether the recipient in India will pay GST or the online money gaming supplier outside India only will pay GST. Online money gaming supplier outside India only will pay GST, and they are compulsorily required to get registered and they need to pay GST. Got it? Fine. So that is about this. We'll take a small break and then we will continue with the remaining portion here. Okay. Break for me. Throat pain. Okay. Okay, we'll start. So there is one query, sir, in case of schedule 1 transaction as no consideration is involved, at what price it should be treated as supply and on what price tax should be calculated. So this question, even you might also have this doubt, that is there are 7(1)(c) certain transactions, even though without consideration it constitutes supply. What are those transactions in section 7(1)(c)? That is 7(1)(c) read with schedule 1, read with schedule 1, that is DRIP, D-R-I-P, D for disposal of business asset on which ITC is availed. Now you check whether this particular business asset is capital goods or this will be other than capital goods. How you know whether it is capital goods or other than capital goods? We need to see whether this has been capitalized in the books or not capitalized in the books. If it is capitalized in the books, disposal of business asset on which ITC availed and it is capital goods, we need to pay GST under section 18 subsection 6. GST under section 18 subsection 6, that is ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value, whichever is higher. There is no sale value, that's why only A will come, that is ITC availed minus 5% for every quarter or part thereof, etc. So here A will be ITC availed minus 5% for every quarter or part thereof will be taken, or B. So what is that B that we will take? B will be GST payable on sale value. As there is no sale value, we need to determine the value as per rule 30 or rule 31 and into GST rate should be taken. Again I am repeating, so carefully listen. First, disposal of business asset, that is 7(1)(c) read with schedule 1. In case of 7(1)(c) read with schedule 1, suppose if it is capital goods, what we need to do in case of capital goods? So we need to pay GST in terms of 18 subsection 6. Okay, GST under section 18 subsection 6. What does 18 subsection 6 says? We need to take A, that is ITC minus 5% into number of quarters. Okay, number of quarters are part thereof from when to when? From the date of purchase till the date of sale. B will be GST. GST on what value? That value will be determined under rule 30 or rule 31. So whichever is higher should be taken. This is in case of D point. Then suppose if it is others, other than capital goods. When it is other than capital goods, definitely 18(6) will not come. So GST will be payable under section 15, but we don't know the value. So what you need to do? We need to take GST on value under rule 30 or rule 31 should be taken in this case. Then R for related party transaction. In case of related party transaction, anyhow directly we have value under rule 28, that will be applicable. Thereafter, import of services from a related person or another establishment located outside India, that is again related person or distinct person only. So value under rule 28 will be taken. Thereafter, principal agent transaction. When it is principal agent transaction, we need to determine the value under rule 29. This is how. Suppose if 28 is not possible, then 30. If 30 is not possible, 31. Again here 28 not possible, 30. Then it will be 31. For 29 also 30. If not possible, 31. This is how we need to determine for 7(1)(c) read with schedule 1. Then, sir, whether recipient will need to pay interest on ITC reversal with respect to discount if there is no ITC balance on the electronic credit ledger with the ITC reversal is made? Of course, yes. So when the recipient should reverse the ITC based on the credit note given by the supplier. If the credit note is given by the supplier in the January 2025, recipient should reverse the ITC for January 2025. If the recipient is not reversing for January 2025, but he reverses it for March 2025, then he need to pay the interest. Definitely he need to pay the interest because he need to reverse it by Jan. So why he need to reverse it by Jan? When the credit note is given by supplier January month, so then the credit note, because of the credit note given by supplier, the January month liability will be reduced. So therefore the recipient should reverse the ITC for the month of January, but he is reversing for the month of March. So then definitely interest will be payable. But remember, interest will be computed only if the ITC is utilized. If they have maintained sufficient balance in ITC, so why will there be interest? Interest will not arise. If they have not maintained the sufficient balance in ITC, then only interest will arise. Okay. Then, so these are the two queries related to this. Then we are moving on to Rule 34. Can the recipient claim ITC? Yes, definitely recipient can claim ITC. And where can I find this PDF? I want some, you can download it from my website, it is there. Next. No need to buy and all, yeah. So someone has replied, buy solved workbook of sir. No, it's already there in. I myself I am not telling to buy. Why you are telling to buy? Don't buy and all. It's already there. For the sake of that, don't buy. Already I gave that PDF in my downloads itself. Can the recipient claim this as ITC? Of course, they can definitely claim this as ITC. So, because whenever I am making disposal of business asset on which ITC avail, I am paying GST in terms of 18(6). Whatever GST I pay, I will raise invoice to the recipient. So, recipient can definitely take ITC. Now, coming back to this, Rule 34. Relevant date for determination of exchange rate for the purpose of valuation and computation of GST. The relevant exchange rate in case of goods, we need to take always CBIC rate. In customs itself we discuss CBIC rate should be taken for goods. In case of services it will be GAAP rate. GAAP rate means average of the buying rate and the selling rate should be taken. Which date should be taken? That date of time of supply. First you need to determine the time of supply for the transaction. And on the date of time of supply, if it is goods, CBIC notified rate, if it is services, GAAP rate, and then you recognize the transaction which is denominated in foreign currency into Indian rupees, and on that GST will be payable. So in case of, when this will come into picture, usually in case of import of goods, import of services, export of goods, export of services, the invoices will be denominated in foreign currency, but we need to pay GST in Indian rupees. For the sake of this rule will be applicable. So goods rate notified by CBIC prevailing on the time of supply determined under section 12. In case of services, rate determined as per GAAP prevailing on the time of supply determined under section 13. And if there is any exchange gain or loss, for example, we recognize $1 as 85 rupees and we paid the GST, but actually on the date on which when we have actually received the money, 85 we recognize now, but 88 rupees we received. Now there is a 3 rupees gain. On that 3 rupees gain, whether we need to again pay GST? No. Ignore foreign exchange gain or loss. GAAP rate is average of the buying rate and selling rate. Then Rule 32. Rule 32 is applicable in case of certain notified transactions where either I can follow transaction value or I can go for value as determined under this Rule 32. So CGST rules value of supply in the special situations, either transaction value or value under this rule at the option of the supplier for each supply, each invoice they can decide. In that, Rule 32 sub Rule 2 is applicable in case of foreign exchange transactions including money changing. Here again we have option 1 Rule 32 2A and option 2 Rule 32 2B. So first of all, in case of foreign exchange transactions, in case of forex transactions, either I can follow, so transaction value under section 15, transaction value under section 15 I can follow, or I can follow value under Rule 32 sub Rule 2. Okay, so with respect to each invoice, this is with respect to each invoice, with respect to each invoice, either I can follow transaction value under section 15 or value under Rule 32 sub Rule 2. Suppose if I am going for Rule 32 sub Rule 2, again there are two rules, that is Rule 32 sub Rule 2A, Rule 32 2A and Rule 32 sub Rule 2B. Two rules are there. Now what should I follow? That is with respect to each financial year. With respect to each financial year, I need to follow either 32(2)A or 32(2)B. So therefore here I don't have with respect to each invoice, that with respect to each financial year, whereas transaction value under section 15 and value under rule 32 sub rule 2 with respect to each invoice. But this rule 32(2)A, 32(2)B I need to decide in the beginning of the financial year, and that only we need to follow. So which is for foreign exchange transactions including money changing. That's what I have given, option to be decided in the beginning of the financial year, which shall be applicable throughout the financial year. Okay, and what should be taken as the transaction value? Currency conversion fee or currency markup fee that is given in the question should be taken. And what is rule 32(2)A value? Check whether one of the currency exchange involves Indian rupee and RBI reference rate is available for that currency. For example, we have $1 as rupees 85. This is the exchange rate, and RBI reference rate is $1 equals to rupees 86. Then what is the difference? 1. So that difference 85 and 86, the difference is 1. That should be taken as a value. And if it is say for $10,000, 10,000 into 1, 10,000 rupees will be taken. Suppose if this is 88, 88 means 85 and 88, there is a difference of 3. So 3 rupees into 10,000, so 30,000 should be taken as the value. So we need to take bid rate or ask rate depending upon the transaction, and minus RBI reference rate into units of currency. This is when one of the currency exchange involves Indian rupee and RBI reference rate is available for that currency on that day. When RBI reference rate is not available for the currency, what we need to do? The gross amount in Indian rupees. So coming back to this example, $1 is 85 and $10,000 is exchange. So 10,000 into 85 into 1% should be taken. That is the answer for this. Gross amount in 1% into 1%. When both the currencies exchange involves foreign currency, convert both the currencies into Indian rupees using RBI reference rate and multiply with 1%, whichever is lower. What if RBI reference rate is not available? Then you cannot do this. So this you can do only when RBI reference rate is available, otherwise we can't do this particular thing. Both the currencies, say for example dollars are exchanged into pounds, then in that case convert dollars as well as pounds into Indian rupees using RBI reference rate into 1%. What if RBI reference rate not available? Then this value cannot be determined as per this rule. So we need to go by transaction value only, that is currency conversion fee or markup fee only should be taken. Then rule 32(2)B. Rule 32(2)B is a slab rate model. In this slab rate model, we need to see first the gross amount in Indian rupees. If it is in the first slab up to 1 lakh, then 1% of the gross amount. So 3 slabs we have, up to 1 lakh, more than 1 lakh, up to 10 lakhs, more than 10 lakhs. First slab will be 1%, next slab will be 0.5%, thereafter next slab will be 0.1%. So first slab 1%, and there is a minimum value. That minimum value will be 250. For example, if it is 80,000 rupees, 80,000 into 1% will be 800, or 250, whichever is higher will be 800. And suppose if the value, like if the gross amount is somewhere like 15,000, 15,000 into 1% will be 150, or 250, whichever is higher will be 250. Suppose if the second slab I am going, so means first slab is 1 lakh, so 1 lakh into 1%, 1,000, 1,000 or 250, whichever is higher, 1,000. So the moment when I go to second slab, there will be a fixed amount of 1,000 plus for every amount beyond 1 lakh, it will be 0.5%. Say for example 6 lakhs. For first 1 lakh it is 1,000, remaining 5 lakhs, 5 lakhs into 0.5%, that is 2,500, 2,500 plus 1,000, 3,500. Like that, if it is exactly 10 lakhs, for first 1 lakh it is 1,000, next 9 lakhs, 9 lakhs into 0.5%, 4,500. So 4,500 plus 1,000, 5,500. When I go to the third slab, the fixed amount will be 5,500 plus for the amount exceeding 10 lakhs, it should be 0.1%, and the maximum value will be 60,000. Say for example 500 lakhs. For first 10 lakhs it will be 5,500, remaining 490 lakhs. 490 lakhs into 0.1%, that is 49,000. 49,000 plus 5,500, that will be 54,500. So which is up to 60,000. So 54,500 only will be taken. If it goes beyond 60,000, then only the maximum 60,000 will be taken. What if the cross currency transaction is involved? Again, we cannot determine the value as per rule 32(2)B, because here the gross amount is always in Indian rupees. If it is in foreign currency, you cannot determine. Then again you need to go by transaction value, that is currency conversion fee or markup fee. Then Rule 32 sub rule 3, air travel agent services. Air travel agent, what will be taken as transaction value? Whatever is the commission that they are earning will be taken as a transaction value. If they go for rule 32, then we need to see what is the base fare in case of domestic bookings, base fare into 5% in case of domestic bookings, in case of international bookings 10% of base fare, that should be taken as value. Again, life insurance business. For life insurance business, if they go for transaction value, what should be taken? The premium collected will be taken as a transaction value. Suppose if they go for rule 32 sub rule 4, then we need to see first whether it is a risk cover policy. Risk cover policy means term insurance, means we will pay the insurance premium for a particular term. If nothing happens, so there won't be anything that they will be returning to us. If something happens, a sum assured will be given. That is called as risk cover policies. So as the entire premium collected by the insurance company is income to the insurance company, entire premium will be taken as a value. Whereas in case of single premium annuity policy, 10% of the single premium will be taken. For example, we will pay a single premium of 10 lakhs, and that 10 lakhs they will reinvest and they will be generating a return. That return will be taken towards the premium payable by the person. Then 10 lakhs into 10%, that is 1 lakh will be taken as a value. Whereas in case of reinvestment policy means whatever premium that we pay will be invested into the equity market, and they will be allotting the equity units, that is unit linked insurance plan like a mutual fund units, and whenever the equity value increases, the unit value also increases. So upon maturity or death, whichever is earlier, whatever is the NAV value of those units, we will be able to redeem that. But this particular unit linked insurance plan, entire premium may not be invested in the equity market. So premium collected minus amount allocated for investment, that difference will be taken as a value on which GST payable. Where amount is allocated for investment and it is intimated to the policyholder, gross premium minus amount allocated for investment. If the amount allocated for investment is not communicated to the policyholders, then it is treated as other policies. For other policies, what should be taken? 25% of premium in first year and 12.5% of premium in subsequent years. Then rule 32 sub rule 5. Rule 32 sub rule 5 is purchase and sale of second hand goods. In case of purchase and sale of second hand goods, so we need to take the value as the margin scheme. So sale price minus purchase price, that is called as margin scheme. And if they go for transaction value, what should be taken? The transaction value is nothing but the sale value, actual sale value should be taken. But if they go for margin scheme, for example, I am a second hand car dealer, I am buying a car for 1,50,000 and selling for 2,50,000. Suppose if I am not going for this rule, then I need to pay GST on 2,50,000. If I go for this rule, I need to pay GST on the difference, that is 2,50,000 minus 1,50,000. On 1 lakh only I need to pay GST. What if the value addition is negative? For example, I am purchasing for 1,50,000 but I am selling for 1,25,000. So then in that case, if I go for transaction value, I need to pay GST on 1,25,000. But if I go for a margin scheme, I don't have to pay GST at all, because as the margin is negative, no value will come. Okay, but very important condition is that ITC should not be availed on purchase. If ITC is availed on purchase, this point will not be applicable. Okay, means margin scheme is not applicable. Then even this margin scheme is applicable in two places. Point number 1, in case of repossession, the margin scheme is applicable. That will be original purchase price minus 5% for every quarter or part thereof from the date of purchase till the date of disposal of the repossessed asset. For example, I am a financier, I have given finance for an asset and that person has failed to pay the EMIs. When I am doing the repossession of that asset, I will sell this asset. Definitely it's a used asset which I am selling, so therefore I can definitely go for margin scheme. Sale price is the price at which this asset repossessed is sold minus purchase price. What should be taken as purchase price? I need to construct the depreciated value. How will I construct the depreciated value? The original purchase price to the defaulting borrower minus 5% for every quarter or part thereof from the date of purchase till the date of disposal of the repossessed asset. I need to see the period and I need to reduce, so I will be able to determine the purchase price. So sale price minus purchase price, that will be taken as the margin on which GST payable. Again, what if this margin is negative? I will ignore, there won't be any GST that is payable. That is about this. In case of repossession, purchase price is original purchase price minus 5% for every quarter or part thereof from the date of purchase till the date of disposal of repossessed asset. Then also this is applied in one more place, that is notification 8 of 2018. I request you to kindly make note of this. notification number 8 of 2018. In this notification 8 of 2018, so in study material somewhere in one corner they have given this notification 8 2018, which says that in case of sale of motor vehicles, but this notification 8 of 2018 is applicable only for motor vehicles, not applicable for other goods. In case of sale of motor vehicles, whether those motor vehicles are second hand or newly purchased motor vehicles, we are selling, means we are selling after usage, then value can be sale price minus depreciable value under section 32 of Income Tax Act. But here the depreciable value is not in terms of 5% etc. We need to go by regular depreciation as per section 32 for motor vehicles. What is that? 25%? 25 or 20% for motor vehicles. Some depreciation is there na, as per section 32. 15%, correct, sorry, 15%. So we need to reduce 15% for every year, and we need to determine what is the asset. And what if there are lot of motor vehicles in the block? Then you have to compute the depreciation as if this is the only motor vehicle in the block, and you need to ascertain the WDV as per section 32. So sale price minus depreciable value under section 32 of Income Tax Act. But again, so ITC should not be availed here, provided ITC is not availed on purchase. Okay, so this is in case of what? Only motor vehicles. In case of sale of motor vehicles, it's a newly purchased motor vehicle. Value can be sale price minus depreciable value under section 32 of Income Tax Act, provided ITC availed or not availed on purchase. ITC not availed on purchase. This is common in every pair in margin scheme. And what if the margin is negative? Value will be nil. So that is about this. Be careful. Maybe they will give one point in the question about sale of motor vehicles, and you need to apply this. Okay. Then next one, rule 32 sub rule 6, in case of coupon or vouchers. So what type of vouchers? Basically these are identifiable vouchers, and if it is sold the actual amount paid or payable for goods or services supplied against a voucher will be taken as transaction value. But rule 32 says don't take the actual price paid or payable for the goods, but instead you see the redeemable value of that voucher. So money value of supply is redeemable against that voucher or coupon. For example, I am giving you a Domino's voucher. When you are redeeming it, you will get one regular pizza. Then what is the price of that regular pizza? Say $2.99. The $2.99 will be taken as the redeemable value of this voucher. Then in case of notified services between distinct persons without consideration, nil if ITC is available on purchase, but this rule 32 sub rule 7 is not yet notified. What are those notified services? They have not yet notified. So therefore we don't have to remember this rule 32 sub rule 7. Then next one you can see below, TCS. Generally TCS under Income Tax Act should be included in the value under 15(2)(a) or not. As per 15(2)(a), all taxes, duties and cess by whatever name called other than GST should be included. Then logically TCS also should be included. But TCS is first of all not a tax. TCS under income tax is an interim levy. It is not a tax on income, it's a tax on expenditure. When someone is spending money, so he will be paying TCS. For example, you are buying a car from me, so you are paying me the TCS. That's not a tax on your income, that's a tax on your expenditure. It's an interim levy just to identify the source of income of that particular person. Due to that reason, it is not having the character of a tax. Due to that reason, you don't include it in the value. So TCS under Income Tax Act should not be included in the value. So under section 15 subsection 2 of CGST Act, any taxes, duties shall be included in value of supply, but TCS is not included in the value because it is an interim levy, not having the character of tax. Okay, for example, I am selling a car to you for 15 lakhs and for which I am collecting 1% as TCS plus 28% GST. While computing this 28% GST, whether this 1% TCS to be included? No, it is not required to be included. Then next one, what is the value to be adopted for computing GST on service of business facilitator or business correspondent to a banking company? Business facilitators and business correspondents are agents of the banking company in order to extend the banking operations to many areas where the bank is not there. So they have appointed business facilitator and business correspondent, and these facilitators and correspondents will be getting commission. That commission only should be taken as their value. But what they do is that sometimes they will be collecting the service charges from the customers and remitting the service charges. Even though they collect the service charges, but that is not retained by them, that will be given to the banking company. So that service charges will be included in the value of supply of banking company. Whatever commission they get, that only they need to pay GST on. And moreover, in this services provided by business correspondent, GST will be payable under FCM. Whereas in case of business facilitator service to banking company, GST will be payable under RCM. So with this, we completed valuation under GST. That's one topic which many amendments are there. That's why I took that to be discussed. And now we are moving on to another area. So already we discussed accounts and records. Let's complete that accounts and records fully. Accounts and records and e-way bill, page number 158. First we need to understand section 35. There are two sections here, section 35 and 36. Section 35 talks about what are the accounts and records to be maintained and where that accounts and records to be maintained. So first question is that who is required to maintain that accounts and records? So every registered person is required to maintain that accounts and records, every registered person, but there are two exceptions. If there is a warehouse keeper and a transporter, even though they are unregistered, they need to maintain this accounts and records. Please concentrate. First question number 1, who is required to maintain accounts and records? Every registered person is required to maintain accounts and records, and there are two cases. Even though they are not registered, they need to maintain accounts and records. That is, a transporter and a warehouse keeper. They need to obtain unique enrollment number and they need to maintain. You can see in the last page, every transporter or warehouse keeper, even though not registered, should obtain unique enrollment number and maintain necessary records. That is about who. Then next one we need to see where these accounts and records to be maintained. So these accounts and records to be maintained in principal place of business pertaining to all the place of business, whereas in every additional place of business we need to maintain accounts and records pertaining to the additional place of business. Say for example, within the state I have three different place of business. Say Chennai is my principal place of business and Madurai and Coimbatore is my additional place of business. So in Chennai I need to maintain accounts and records related to Chennai, Madurai and Coimbatore, whereas in Madurai I need to maintain accounts and records of only Madurai and Coimbatore only accounts and records of Coimbatore. So that is about where the accounts and records to be maintained. Then next one, so how the accounts and records are required to be maintained. Either the accounts and records can be maintained in physical form or it can be maintained in electronic form. If you are maintaining an electronic form, we need to maintain proper backup of accounts and records. That is a condition. And next, what are the accounts and records to be maintained? So that is this I formats. So these are the accounts and records to be maintained. Already we know I formats. I for inward supply, F foreign trade, O for outward supply, R RCM, M manufacture related, A advances received, paid and adjusted, T tax details, S stock of goods. But if there is a person who is opting for composition scheme, they are not required to maintain tax details and stock details, means it is just I forma. Then next one, as per section 35, the above records to be maintained by every registered person in principal place of business and records pertaining to additional place of business in each additional place of business. Then what is the period? What is the period for which accounts and records to be maintained? We need to maintain accounts and records for a period of 6 years from the due date of filing annual return for the relevant financial year. So the 72 months are 6 years from the due date of filing annual return. Suppose for a particular financial year we went for appeal, then in that case, so the appeal outcome will come. Appeal outcome plus 1 year we need to maintain accounts and records, because it so happened that we got the appeal decision but the department may go for appeal. So at that time the next appellate authority will ask for the records. At that time we will say no sir, accounts are not there. Then it is not practically no, they cannot pass the decision for that reason. So 1 year from the outcome of the appeal or the 6 years from the due date of annual return, whichever is later. Again another place where we are coming across the later provision. So 6 years from the due date of filing annual return or 1 year from the disposal of appeal proceedings, whichever is later, for this period we need to maintain accounts and records, that is with respect to this. Then next page you can see these are the additional accounts and records which is to be maintained by every person. So in all these cases I formats is common, but there are certain changes and certain additional records to be maintained. Just this one page you need to remember, so that any question you get you will be able to write. First you look into manufacturer. So being a manufacturer they need to maintain I formats, no doubt. Plus in addition to that, what is it we need to write? They need to maintain process accounts. Process accounts means in intermediate process costing you did those process accounts. Plus they are also required to maintain records related to waste and byproducts. So process accounts and details of waste and byproducts. Being a trader they need to maintain I formats, but manufacture related records are not required. And being a service provider they need to maintain I formats, but manufacture related records not required, and other records details related to goods or services utilized in the outward supply. What is the use of it? For example, you take my business. In my business I am engaged in sale of books which is exempted, and sale of video lectures which is taxable. Now in that case, for both video lectures as well as sale of books, I am giving books, means I need to procure the paper, so I am procuring the paper. How much of the paper is used in books for sale of books, how much of the paper procured is used in books which is under video lectures, I need to maintain this utilization ratio, because that much of the paper procured used in sale of books, I don't have to take ITC, I should not take ITC, whereas that much of the paper procured used in books which is used for video lectures, I need to take ITC. So that utilization ratio, even though I am a service provider, the purchases which is used in the services, the utilization ratio or utilization schedule I need to maintain, then only properly I will be able to take ITC. That's why they are required to maintain the details regarding goods or services utilized in outward supply. And if I am under composition scheme, I forma, this TS not required. Being an agent, I formats plus details of authorization received from each principal, that is contract copy with each principal, and statement of accounts. An account statement will be shared with the principal, that account statement. Then being a works contractor, I formats, but in that M will not come, because being a service provider, anyhow we saw that manufacture related records will not be there. Works contract is also service provider, so manufacture records not required. However, this works contractor need to maintain the records separately with respect to each works contract, and payment received with respect to each works contract, mainly for the purpose of contract costing. In contract costing, for the purpose of recognizing the profit, we need to take cost incurred till date divided by total estimated cost. That is one of the way of ascertaining the percentage completion. For that purpose, payment received with respect to each contract they need to maintain separately. Then being a registered transporter, I formats, and transporter means service provider, so manufacture records not required. In addition to the details of goods transported they need to maintain. And being a unregistered transporter, unregistered person is not required to maintain I formats, but being a transporter, even though unregistered, they need to maintain certain accounts and records. So logically you think that you are a tax officer. What details you expect from a transporter? First, you need to get the details about the consignor and consignee. What goods are being transported, in which vehicle it is being transported, what is the starting point, what is the ending point, and thereafter you need the vehicle number in which the goods are being transported, and midway, suppose if you are storing goods anywhere, so those details also you need to maintain. See there, description of the goods, consignor, consignee, vehicle, delivery address, and the storage address. Then being a registered warehouse keeper, so you need to maintain I formats, and being service provider, manufacture records not required. What if you are an unregistered warehouse keeper? So logically you think, being an officer, what details you expect from him? You expect from him, that is what goods are being stored, and when it has been deposited, when it has been cleared, during that if there is any loss, and whose goods you have deposited, these details. So description of the goods, value of the goods, details of depositor, date of deposit, date of disposal, and any goods lost or destroyed. These records only we need to maintain. So being an unregistered transporter or warehouse keeper. So that's it. In 2 pages we completed accounts and records. Next we are moving on to e-way bill. E-way bill. So every person who is causing movement of goods is required to generate the e-way bill in the portal, that is e-way bill portal, and they need to carry that along with the goods, and whenever the goods are intercepted by the proper officer under section 68, so this e-way bill should be produced. If there is any defective e-way bill, or if the goods are transported without proper e-way bill, the penalty will be payable under section 129, that is 200% of the tax if the owner come forward. If the owner does not come forward, 200% of the tax or 50% of the value, whichever is higher. So that is a connection to e-way bill. So it is to be generated before movement of goods. It is not applicable in case of exempted goods. So only for duty taxable goods we need to maintain, and for exempted goods we need to carry only bill of supply. If bill of supply is not carried, then again penalty will come, 2% of the value or 25,000, whichever is lower, not higher, whichever is lower. And if the owner is not coming forward, 5% of the value or 25,000, whichever is lower. Then it is not applicable if the value of the goods does not exceed 50,000. But there are two exceptions, that is in case of handicrafts and goods sent on job work. Even though the value does not exceed 50,000, e-way bill is mandatorily required, and while computing this 50,000, whether GST to be included or not to be included, definitely GST to be included. So this is an exception to section 15(2)(a). As per 15(2)(a), all taxes, duties and cess by whatever name called is excluded from the value, but in this case GST to be included while computing the value of the goods, including GST and excluding exempted supplies. However, in case of job work and handicrafts it is required. And e-way bill will have two parts. Part A will contain the invoice details, like what goods are being transported, GST of supplier, recipient, and document number, etc. Whereas part B contains the vehicle details and the transport details. And validity of e-way bill. Once an e-way bill is generated, when is it called as e-way bill generated? If both part A and part B is updated in the e-way bill, then only it will be called as e-way bill generated. Once the e-way bill is generated, it will have a validity depending upon the distance that is being covered. Suppose if it is like 480 kilometers, and if it is other than over dimensional cargo or other than multimode transportation, then we need to see 1 day for every 200 kilometers are part thereof. 480 kilometers means first 200 kilometers 1 day, next 200 kilometers 1 day, and thereafter 80 kilometers it will be 1 day. So 3 days will be taken as the validity of the e-way bill. You can see here 1 day for every 200 kilometers are part thereof. If it is ODC, over dimensional cargo, where the tail of the cargo will be very big, or multi-mode transportation up to some distance by roadways, thereafter by waterways, and thereafter by railways, like that, multi-mode transportation where one leg of the journey is by ship, that is waterways, then usually it will take lot of time to travel. That's why it is 1 day for every 20 kilometers are part thereof. Always the validity will be counted from the midnight of the day in which it is generated. For example, today e-way bill is generated in the morning 4 o'clock. So then we need to count from the midnight of today. If it is generated afternoon 2 p.m, then also we need to count from midnight. If it is generated at 10 p.m, then also from midnight only we need to count. So which means e-way bill always expires by the midnight. So whenever the e-way bill expires, within 8 hours from its expiry, we can renew the e-way bill. So the validity of e-way bill may be extended within 8 hours from the time of its expiry, validity counted from the midnight of the day when the e-way bill is generated. Then there are some FAQs in this regard. When the e-way bill is not required, these are the cases where e-way bill is not required. Already we know one point where the value less than or equals to 50,000, that is including GST, but other than job work and handicrafts. Apart from that, there are some more cases. If you are transporting the goods by non-motorized vehicle, then e-way bill is not required, like horse cart, bullock cart, manual rickshaws, etc. E-way bill not required. And goods transported from customs port, that is whenever the goods are moving between the customs departments, like say for example port, airport, land customs station, inland container depot, container freight station, or customs warehouse, all these are under customs control. Due to that reason, e-way bill is not required. That is second point and third point. Fourth point, transit cargo transported to or from Nepal and Bhutan. So Nepal and Bhutan are landlocked countries, and India is having a MOU with them. So any goods which are to be consumed in Nepal and Bhutan will be unloaded in India, and it will be going to Nepal and Bhutan. So this is known as transit cargo that do not require e-way bill. Movement of goods is for Ministry of Defence. So Ministry of Defence goods also e-way bill not required, because if we know like what goods they are moving, like AK-47, RDX or gunpowder, we can stop that vehicle and we can loot the things from that. So but that is not not possible. So movement of goods for Ministry of Defence, e-way bill is not required. Empty cargo containers are being transported, there is nothing inside, why e-way bill is to be generated? The container is empty, there is nothing, but the container may be goods, that is the reason why they have given this point. Then container transporting goods to or from a place of business and a weighbridge for weighment up to a distance of 20 kilometers accompanied by a delivery challan. First the lorry will go to the weighbridge to know the weight of the lorry. As there is no goods inside the lorry, e-way bill anyhow not required. Again the lorry will go back to the factory and we will load the goods into the lorry, and now the lorry will come to the weighbridge. Even though it is carrying the goods, if the weighbridge is within 20 kilometers, e-way bill not required. If the weighbridge is beyond 20 kilometers, definitely e-way bill is required. And goods being transported by rail where the consignor of the goods is the central government, state government or local authority. What is the difference between point number 5 and point number 8? Point number 5, Ministry of Defence, any mode e-way bill not required, whereas here it is government, but if it is transported by rail, then e-way bill not required. Then goods specified as exempt from e-way bill in the respective state or union territory. So this e-way bill provisions, whatever we are learning is only interstate e-way bill provisions, means for intrastate e-way bill, so we have separate provisions, yes, so that will be given by the state GST. But whenever in exam you get intrastate movement also, you just apply interstate movement provisions only, whereas reality is that for intrastate we have separate provisions, and sometimes the same copy paste is there, sometimes different provisions are there. For example, in Tamil Nadu the e-way bill limit is 1 lakh, not 50,000, so like that it will vary, got it? So we need to see the state specific provisions for the purpose of intrastate movement, like that some goods may be exempted, so where e-way bill is not required. Then apart from that, in CGST rules they have given certain goods, transport of certain specified goods, LPG for supply to household and non-domestic exempted category customers, so other than dealers of cylinders, like this red color cylinders, so transportation do not require e-way bill. And what about the blue color ones, that is commercial, that requires e-way bill. So red color cylinders transported by a dealer, whether e-way bill is required, yes, this is only for other than a dealer of cylinder. Kerosene oil sold under public distribution system, that is in ration shops. Then postal baggage, natural or cultured pearls, jewelry, goldsmith and silversmith wares that do not require e-way bill, because if you know which vehicle it is carrying, then it will become money heist season 6. So therefore that is not required, e-way bill not required in that case, because it is precious articles. But imitation jewelry is not precious and all, so even if they give free also we don't need. So other than imitation jewelry, for imitation jewelry, imitation is what? Covered jewels, covering they call, it is not gold and all. So don't go to many marriages and think that all the things they are wearing is gold and all, okay? All that glitters is not gold, okay? So other than imitation jewelry. And used personal and household effects. So like we are relocating our house from one place to another place, we will book a lorry and we will carry the entire furniture, fixtures, etc. and all to another place. Whether that requires any e-way bill? No, that do not require e-way bill. These are some cases. Then next, second point, whether e-way bill is required if the movement is not for supply. Yes, whether the movement is for supply or without supply, e-way bill is required till the time the goods are taxable goods. Then whether 50,000 limit is for taxable goods or exempted goods, only taxable goods. What if in a single invoice there is both taxable and exempted goods? Exclude the exempted goods, see only the taxable goods. And next, while computing invoice value, whether GST to be included or excluded, GST to be included. Who will generate the e-way bill? That person who is causing movement of goods, registered person who is causing movement of goods. If the supplier is registered and he is causing movement of goods, definitely the supplier will generate the e-way bill. And suppose if the supplier is unregistered and the recipient is registered, deemed that the recipient will be causing movement of goods, so recipient will generate. What if both supplier and recipient are unregistered? Then in that case the transporter will generate e-way bill. Alternatively, supplier or recipient can enroll as citizen of India and they can generate the e-way bill. That is about this. Then whether transporter is required to generate if supplier has not generated because the invoice value does not exceed 50,000. Say for example, I am giving the consignment, the value of the consignment is just 30,000 rupees, that's why I have not generated the e-way bill. And like me, there are 10 people who handed over the consignments to the transporter. All these consignments are transported in a single lorry by the transporter. Even though individual value of each consignment does not exceed 50,000, but the cumulative value of all these consignments exceeds 50,000, then the transporter for each consignment should generate a separate e-way bill, and merging all these consignments, a consolidated e-way bill should be generated. So that is this. Transporters who generate the e-way bill, so as e-way bill 1 or e-way bill 2, where all the consignments in the conveyance individually is less than or equals to 50,000, but in aggregate exceeds 50,000, then there is something called as blocking of e-way bill. So when you are not filing the returns for consecutive 2 tax periods, which returns? Either GSTR1 or GSTR3B or CMP8. GSTR1 return of outward supply, GSTR3B consolidated return, or CMP8 a return to be filed by a person opting for composition scheme is not filed for 2 consecutive tax periods, then e-way bill cannot be generated. E-way bill generation facility is blocked only with respect to outward movement of goods by a registered person, which means if I am not filing returns for my outward supply only, e-way bill cannot be generated, but for my inward supplies e-way bill can be generated. Only for outward movement there is a restriction, and that outward movement I cannot generate e-way bill, and any other person also cannot generate e-way bill for this outward movement. My recipient also cannot generate for me, transporter also cannot generate for me. However, e-way bill can be generated in respect of inward supplies of the said registered person. Then other points, in case of bill to ship to transactions, usually in bill to ship to transactions, I am making supply to a third person, but I am raising invoice to you. You are my billing address and the third person is the shipping address. You in turn will raise invoice to the shipping address. Now in that case there are 2 supplies, one between the supplier and the billing address, second between the billing address and the shipping address. Even though there are 2 supplies, but there is only one e-way bill that is required. Then next one, multi-vehicle updation is possible in e-way bill, means up to some distance we are traveling in one vehicle and there is a vehicle breakdown, and in that case another vehicle is carrying, so multi-vehicle updation is possible. And part B, that is it contains the vehicle details. What is the time limit within which the part B should be updated? Within 15 days from updation of part A, which means that part A is invoice details, we updated that, which means the transportation should commence within 15 days and then only the part B details can be updated. E-way bill should be accepted by the recipient within 72 hours from its generation or delivery of goods, whichever is earlier. By that time they should accept. If they are not accepting, it is deemed that they are the recipient and they have accepted it. Part B may be updated by supplier, recipient or transporter. So see this, documents required in case of movement of goods. Suppose if there is a movement of goods, if it is taxable goods, if it is covered under supply, tax invoice plus e-way bill. If it is without supply, delivery challan plus e-way bill. So whether it is supply or without supply, for taxable goods e-way bill is always required, whereas in case of exempted goods e-way bill is not required. If it is under supply, bill of supply. If it is without supply, the document name will be delivery challan. E-way bill can be cancelled within 24 hours of its generation. So that is, e-way bill is generated and therefore we don't want to transport the goods, so the invoice is cancelled. For example, you placed an order in Amazon, and when the order is packed and ready for shipment, so you will cancel the product. When you cancel the product, but e-way bill already generated, so in that case what they will do, they will cancel the e-way bill. But if it is within 24 hours of its generation, e-way bill can be cancelled within 24 hours of its generation if such conveyance is not verified by the proper officer. So these are the key points related to accounts and records and e-way bill. So look into another area. So there is one small chapter, that is advance ruling. Page number 206. Segment 21, advance ruling. Advance ruling again may or may not come. This is one area which is there but not yet tested in exam. I have not seen any question on advance ruling over the last 4 to 5 attempts, but it is there. It is there in the syllabus. So if they want, they can ask any question on this. So first we need to understand in advance ruling, what is this advance ruling about? Advance ruling is like, we are getting a ruling with respect to a particular issue, and what are the questions on which we can go for advance ruling. If you see the index of this book, so supply chapter to registration chapter, just turn the pages and see the index of this book. So starting from supply chapter till registration chapter, lot of chapters are there na. Supply, charge under CGST, charge under IGST, and thereafter value of supply, time of supply, place of supply, then so exemptions, composition scheme, then registration, tax invoice, correct? All chapters except place of supply. We can go for advanced ruling. Got it? See this. What are the eligible questions on which we can go for advanced ruling? Supply, classification, valuation, registration, tax liability determination, time of supply, input tax credit, and applicability of notifications. So what are some ineligible questions? You tell me. Place of supply is ineligible question. Offence and penalties is ineligible question. Sir, I am planning to do this offence. So you tell me what is the imprisonment. Like that you cannot go for advanced ruling. So place of supply, penalties, appeals or returns payment process. On this we cannot go for advanced ruling. And to go for advanced ruling we need to ask advanced ruling authority for advanced ruling. Is there any fee that is payable? Of course. How much is that fee? CGST 5,000 and SGST 5,000. And when we make the application for advanced ruling, they will pronounce the ruling, and it will be binding on whom? It will be binding on the applicant and the department. Okay. And suppose another person having the same question, so can rely upon this advanced ruling? No. So even another person having the same issue, they cannot rely upon this advanced ruling, they need to seek the advanced ruling. Perhaps the same person for another state need to get a separate advanced ruling, because advanced ruling that is obtained by him will be applicable only in that state, because we don't have central AAR, we have only state AAR. Geographical scope, state level authority, there is no central AAR, so separate AAR for each state. And whether this advanced ruling authority will be a single person? No, it is not a single person. There will be some members, and if there is any difference of opinion between the members, what will happen? In such situation, application shall be referred to AAR, appellate authority for advanced ruling. This is another authority. This is authority for advanced ruling. Next one is appellate authority for advanced ruling. So it will be referred to them. Okay. In appellate authority for advanced ruling, again there will be some members. If there is any difference of opinion between them, advanced ruling cannot be pronounced. You can see here. So possibility of difference of opinion among members. In such situation, it shall be deemed that advanced ruling is not possible on this issue. Okay. Then next, here this appellate authority for advanced ruling is also, like state level, of course, that is also a state level authority only. Now say this, first you are going for application to authority for advanced ruling, possibility of difference, they will forward it to appellate authority, geographical scope state level, and when the application can be made? Before commencing an activity or with respect to an ongoing activity, we can make application for advanced ruling prior to carrying out an activity or in respect of ongoing activity. But whom? By whom? Either registered person or unregistered person. Withdrawal of application, no express provision. What is the time limit for pronouncing the rulings? 90 days from the date of application, they need to pronounce the ruling. Some more place we have discussed 90 days today. What is that? Compounding. So in case of compounding, once you make application for compounding, within 90 days they need to decide as to how much is the compounding fee that we need to pay. So just refer, and once they pass the compounding order, within 30 days we need to pay the compounding fee. So 90 days point is common for compounding as well as here advanced ruling also, within 90 days from the date of application. In offences and penalties, last page, compounding of offences, and in that compounding of offences you can see the time limit. Previous page, madam. In that previous page you can see steps involved. So below the compounding of offences, can you see that? What's the page number? 188. 188 you can find there, I have given. So 90 days. Here also there is 90 days from the date of application. Rejection of application. When they will reject the application, if the matter is pending in or decided by any court or tribunal. Say for example, right now there is one notice and the discussion is going on between me and the adjudication authority. For this issue, can I go for advanced ruling? No, because already the notice is on means the proceedings are happening, means the case is pending. So in that case they cannot pronounce any ruling. Or the order has been passed. On that order I want to go for appeal, but rather than going for appeal, can I go for advance ruling? No, no. So it is like with respect to ongoing activity or an activity, so which is yet to be commenced, we can go, but the proceedings should not be pending in any proceedings, like in any authority, either adjudication authority or appellate authority. See this, if the matter is pending or is decided by any court or tribunal, then authority name, next level authority is appellate authority for advance ruling. If there is any difference of opinion, then advance ruling cannot be issued. Geographical scope, that is also again separate AAR for each state. Time limit for appeal, what is the time limit? 30 days plus 30 days, it got repeated, just remove 30 days plus 30 days, we need to make appeal. And 30 days from where? 30 days from the date when we got the ruling, advance ruling. From there within 30 days, and it can be extended for a further period of 30 days. What is the fee? So here it is 5,000 plus 5,000, here it will be 10,000 plus 10,000, and again this ruling also will be pronounced within 90 days. Next, you can see here some special points in this regard. If a person is not satisfied with the ruling pronounced by AAR, that is, this appellate authority for advance ruling has pronounced the ruling, and if a person is not satisfied with the ruling, what they can do? Then they can file a writ petition. I told you, when the regular appeal is not possible, they can always file a writ petition and they can go. So regular appeal not possible. Even an unregistered person, can make an application for advance ruling. Even if supply is already made, so advance ruling application can be filed, but only thing, remember that there should not be any proceeding which is pending, okay, or is decided. Then advance ruling is state wise and it will not be applicable in another state. For example, there is a registered person and who is having registrations in multiple states, say 4 states. Now he need to obtain 4 different advance rulings, yes, and to another person in the same state, even though the facts are same, he cannot rely upon this advance ruling, he need to obtain separately. And advance ruling is binding only on the applicant and the department, and advance ruling is valid till the time there is no change in law. Suppose if there is any change in law, any amendment has happened with respect to that particular section, for example whether an activity is supply or not, for which we went for advance ruling. Now section 7 got amended. When section 7 got amended, so this advance ruling will not be valid. Again we need to get a fresh advance ruling. Also remember, whenever there is change in the facts of our case, so initially we submitted at that time, so we are doing certain things. Now there is a change in the process or there is a variation in the facts, again we need to get a fresh advance ruling. If AAR and AAR find that advance ruling pronounced has been obtained by fraud or suppression of facts or misrepresentation of facts, then that particular ruling obtained will be void ab initio, means they have to give all the facts truly. Suppose they have hidden any facts and obtained the ruling, tomorrow department came to know that we have obtained the ruling by suppressing some facts, then in that case the ruling pronounced will be void and the department can take the action accordingly. That is about this advance ruling provisions. Now look into assessment and audit. So this assessment is also connected to demand and recovery. Don't worry, today itself I will not complete entire GST. So segment 17, assessment and audit. In this assessment and audit, we need to see first what are the various interest provisions under GST. So this interest provisions under GST comes in different places, which I have just compiled into one place. Section 50 subsection 1, interest on account of delay in payment of tax, self-assessed liability. The rate of interest will be 18% per annum, and usually this interest will be computed from when? First date after due date till the date of payment of GST. Whereas section 50 subsection 3, wrong availment and utilization of ITC, and the rate of interest will be 18%, when it will be computed from the first date after utilization till the date of payment of GST. When the ITC is considered to be utilized, the month in which the balance in ITC falls below the wrongly availed ITC, to that extent the ITC is considered to be utilized. So So what does it mean? So say this, say for example I have wrongly availed ITC say for example month opening balance and ITC availed, month opening balance, ITC availed, ITC utilized and closing balance. So for the month of say March, for the month of March there is some opening balance which is a closing balance of February, that is 1 lakh is the opening balance and ITC availed is 3 lakhs. In this 3 lakhs, so we have wrongly availed 1,25,000. So wrongly availed 1,25,000 as ITC. Then ITC utilized is somewhere like 2,50,000. 2,50,000 is ITC utilized. So what is the closing balance? 3 plus 1 4, 4 minus 2.5, that is 1,50,000. Whether I have wrongly availed ITC been utilized? No, because what is the wrongly availed ITC? 1,25,000. What is the balance in ITC? 1,50,000. Means I have not at all utilized, means I maintain the balance in ITC. See LIFO, FIFO, weighted average and all we cannot apply here, because all these are amounts. For that reason only they are telling just check the balance. If the balance in ITC is sufficient, which means we have not utilized, got it? Then again for the month of say April, the opening balance is 1,50,000 and ITC availed is 2 lakhs and ITC utilized is 1 lakh. So what is the closing balance? 2,50,000. Whether again we have utilized? No, we have not utilized. For the month of May, 2,50,000 is the opening balance and 1 lakh is the ITC availed and what we have utilized is 3 lakhs and the closing balance is 50,000. Now this particular month we need to check what happened. The balance came down to 50,000. So wrongly availed ITC 1,25,000. The balance in ITC is 50,000, which means we have utilized 75,000 in the month of May. So out of this wrongly availed ITC, for the month of May, how much we have utilized? 75,000 utilized. Why 75,000 utilized? Because the balance in ITC falls below the wrongly availed ITC. So 75,000 got utilized in the month of May. And again say like this it continued, and June month opening balance 50,000 and ITC availed 4 lakhs and ITC utilized is 1 lakh and the closing balance is 3,50,000. So when the balance increases, does it mean we have reversed the ITC? No, it does not mean the ITC is reversed. So only when the balance is reduced, the ITC is utilized. When the balance increases, that does not mean ITC is reversed. And again for the month of July, opening balance 3,50,000 and ITC availed will be say 50,000. ITC utilized is 3,75,000 and again the closing balance will be 25,000. Whether we have utilized the ITC? Yes, we have utilized the ITC. To what extent the ITC is utilized? So already from 1,25,000 it came down to 50, means 75,000 utilized. Again it came down to 25,000. So therefore 25,000 utilized. And then what we did, this wrongly availed ITC is reversed. In August. Month. Now we need to compute interest. For two amounts. One is 75,000, another is 25,000, not on entire 1,25,000, because only ITC utilized is 75,000 and 25,000. So therefore first interest computation, interest on what? 75,000. Okay, at what rate? 18%. From which date to which date? So what is the month in which we have utilized? May month. May month we have utilized. Means for May month, when we will file 3B, 20th of June. So therefore we need to count from 20th of June till the date of reversal. What is the month in which it is reversed? August month. For August month, when you will file 3B, 20th of September. So till 20th of September we need to count the interest. That is for how many days? Don't count 20th June. Count from 21st June, which means in June it will be 10 days. July 31 days. August 31 days. September 20 days. That is for 92 days we need to compute the interest. So 75,000 into 18% into 92 divided by 365. So 75,000 into 18% into 92 by 365, that comes to 3,403 rounded off. Why can't we take 366? See, remember, it's not about the financial year. It is about, in the numerator, if you have February computation, means say January to March you are taking the period. So then in numerator we have 29 days. So in denominator it should be 366 days. In the numerator, say 2024 only, July to September, that where you are counting, in that there is no possibility of 29 days. That's why denominator will not be 366, it will be 365. Remember, only in numerator you take February 29, in the denominator it should be 366. Otherwise it will be 365 only. So 3,403. And next one, next interest. Interest on what? Interest on 25,000. At what rate? At 18%. From which date? From utilization. When is it utilized? July month. July month is it is utilized for July month. So what is the due date? 20th of August. 20th August till 20th of September. That is how many days? In August 11 days, September 20 days. That is 31 days. For this 31 days, we need to compute interest. So 25,000 into 18% into 31 by 365. So 25,000 into 18% into 31 by 365, that comes to 382. This will be the interest. So this is how the interest needs to be computed in case of wrong availment and utilization of ITC. That is this part. So wrong availment and utilization of ITC, 18% per annum. Then section 60. So this is related to provisional assessment, and related to this 50 subsection 3 itself, still there is some more discussion which is in payment process. You can see that information little bit in full. So you go back to payment process chapter. In this payment process chapter, we have interest computation. You see that in page number 139, interest on delayed payment of tax. There are three situations where this interest computation will come under section 50. Situation 1, delay in filing 3B. So there is a delay in filing GSTR 3B, then also interest will come, and invoice not reported in GSTR 1 and GSTR 3B of a month but paid in the another month. What does it mean? For a particular month, I have some liability. I have not reported that liability and I have evaded it. That amount I am paying in some subsequent month. Then situation 3, ITC wrongly availed and wrongly utilized. So look into situation 1. There is a delay in filing 3B, and in this case the interest will be at the rate of 18% from the first date after due date till the date of payment, actual date of payment. Okay. So for that period we need to compute interest on what? Is it on the gross liability or on the net liability? On the net liability. In case of delay in filing 3B, interest is always computed on net liability. For example, my gross liability is 7 lakhs and ITC is 3 lakhs. So 7 minus 3, 4 lakhs. On 4 lakhs only interest will be computed. So that amount which is paid through cash ledger. Whether RCM liability also will be taken in this? Of course yes, because RCM liability also will be paid through cash ledger. So that is also taken in net liability. Then from which date to which date? From the first date after due date till the actual date of payment. What is considered as the date of payment? Date of payment will be actual date of filing GSTR 3B or the date on which you are paying through DRC 3. So that should be taken, but here DRC3 point will not come, because first of all this is what situation? Delay in filing 3B. So due to that reason. And will there be a late fee payable? Of course late fee is also payable along with interest, but right now we are talking about the interest. Then situation 2, invoice not reported in GSTR1 and GSTR3B in a month but paid in the another month. In this case interest will be computed on gross liability. Say for example July 2022 I have to pay one tax which I have not paid, and I paid in July 2024. After 2 years I am paying. When after 2 years I am paying, so I may pay through credit ledger as well as cash ledger. That is okay. I can pay arrears of tax also through credit ledger. No issue at all. But interest will be computed on gross amount. So whatever is the amount that I need to pay. So compute on the amount paid through electronic cash ledger and electronic credit ledger, that is gross liability, and interest will be computed from the first date after due date till the actual date of payment. What is the actual date of payment? Here either I can pay through DRC3 or I can pay through GSTR3B. Then this just now we discussed situation 3, that is ITC wrongly availed and wrongly utilized. Interest will be at the rate of 18% from the first date after utilization of ITC till the date of reversal or payment, and it is computed on ITC utilized. What is the meaning of ITC utilized? The extent to which balance in ITC falls below the availed ITC. And what is considered as the date of utilization? Date of utilization, I told you, first you need to see the month in which the balance in ITC falls below wrongly availed ITC. For that month, whatever is the due date of 3B or actual date of 3B, whichever is earlier will be taken as the date of utilization, and we need to pay till the month of reversal. Okay, so date of utilization is actual date of 3B or due date of 3B, whichever is earlier, with respect to the month in which balance in ITC falls below wrongly availed ITC. What is considered as the date of reversal? Either actual date of 3B, even can we do the reversal through DRC3? Yes, you write there, date of reversal is actual date of GSTR 3B or DRC3. And there is one amendment with this regard, that is, if you maintain sufficient balance in the cash ledger by the due date of GSTR 3B, interest is not payable on account of delay in filing GSTR 3B. So this is a newly added point. So they have added one proviso where they are telling previously and all, when you file 3B late, so even if you have maintained sufficient balance in the cash ledger, you need to pay interest on the net liability. But now they are telling, as on the due date of 3B, if you have maintained sufficient balance, then interest shall not arise on that amount even if there is a delay in filing 3B. Okay, so for that purpose I have given one question, so have a look into this question. Say this, question number 24. Question number 24, you can see if you have solved workbook, due date of filing GSTR 3B is 20th of next month. Month is July 2024. My gross liability is 8 lakhs, ITC availed is 3 lakhs, and what is the net liability? 8 minus 3, 5 lakhs. I maintained that 5 lakhs as on the due date. For July, what is the due date of 3B? 20th of August. So as on 20th August, I maintained 5 lakhs in my cash ledger. Again, August 2024, my gross liability is 4 lakhs, ITC is 1 lakh. So 4 minus 1, 3 lakhs. 3 lakhs I have to maintain, but what is a mistake I did? I deposited only 2 lakhs. How 2 lakhs? Already 5, now it is 7. Means 2 lakhs I have deposited as on 20th September, and thereafter 1 lakh I deposited by 30th September. Then again, September 2024, gross liability is 6 lakhs, ITC availed is 4 lakhs. So the difference is 2 lakhs. So that I maintained by 20th of October, because for September 2024 GSTR 3B is due date is 20th of October, so I deposited. Now what I did, for all these 3 months, GSTR 3B for all the above months is filed on 28/12/2024. So correct that, 28/12/2024. Now compute the applicable interest that is payable. Now So what is the interest payable? First we will see for July month. July month, what is the net liability? 5 lakhs. Whether that 5 lakhs I am making payment, like I have maintained as on the due date of 3B, yes, I am maintaining the balance as on 3B due date, so no need to pay interest because the net liability 5 lakhs, due date of July is 20th August, I maintained that, so I don't have to pay interest. Is that clear? Then go to August month. August month, what is the net liability? 3 lakhs. 3 lakhs. Whether in that 3 lakhs, I maintain 3 lakhs as on the due date of 3B? No. Only 2 lakhs I have maintained. 1 lakh I have not maintained as on the due date of 3B. So on 1 lakh we need to pay interest. At what rate? At the rate of 18%. From which date to which date? You see the question and tell me. From which date to which date? 20th September to? Wrong answer. 30th September should not be taken. See, this proviso says if you maintain sufficient balance, in the due date of 3B, then interest not payable on account of delay in filing 3B. Otherwise, this provision will not come. If this provision is not coming, then section 50 will come. For delay in filing 3B, you need to compute interest from which date to which date? From the due date till the actual date of payment. What is the actual date of payment? Actual date of filing 3B. What is the actual date of filing 3B? 28 December 2024, not for this 10 days. One simple mistake they have done. What is that? Rather than putting on 20th September, they have deposited on 30th September, because of which they will end up paying interest from 20th September till the date they are actually filing 3B. Is it clear? So 28 December. So count the number of days. In September 10 days, October 31 days, November 30 days, December 28 days. For 99 days they need to pay interest on 1 lakh. Are you understanding this? So see there, interest not applicable on 2 lakhs deposited by 29. However, interest is applicable on 1 lakh. Because see, this provision not applicable for 1 lakh. If this provision not applicable for 1 lakh, the regular provision will be there. Got it? So not interest is payable on 1 lakh deposited after the due date. Interest computed from the due date till the date of payment, that is date of filing 3B, because date of payment of tax is the date of filing 3B only, and interest payable will be 1 lakh into 18% into 99 by 365. Where is it given? The date of payment is date of filing 3B. Clearly I have given. Date of payment will be taken as actual date of filing 3B because of that reason. Whereas for September month, if you see 6 lakhs minus 4 lakhs, how much? 2 lakhs. Whether the 2 lakhs is maintained as on due date? Yes. So whether any interest is payable in this case? No. Interest is not applicable as 2 lakhs is deposited by 20th of October 2024. Good question, no? So this can be tested in exam because of the amendment, this point of amendment. Then one more question I just wanted to give you here in this regard. So payment process chapter itself you can take in solve workbook. So there is one question, slightly I modified that question. This question. Question number 3, which is in page number 328. Miss Nitya has following balances in her electronic cash ledger as on 28 February as per GST portal. So CGST, SGST, IGST, this is the balance in the cash ledger as on 28 February. Her tax liability for the month of February for CGST, SGST was 75,000 each. She failed to pay the tax and contacted you as legal advisor on 12th April to advise her as to how much amount of tax or interest she is required to pay, if any, by utilizing the available balance to the maximum extent possible as per GST law. She wants to pay tax on 20th April. This is which month? February month liability. For February month, what is the due date? March. So date of collection of GST 18th February, no other transaction after this up to 20th April. So 20th March is the due date. So but when it is being paid, 20th April. As on 20th March, if sufficient balance is there in the cash ledger, we don't have to compute interest, correct or not? Now 75,000 is the CGST SGST liability. Now go to CGST head. Whether CGST head tax, they have 75,000 as on 20th of March. By 20th of March, no. So CGST only 40,000 is there. What is the balance not there? 35,000 is the shortfall. Agreed pa? 35,000 shortfall. 35,000 shortfall. And next, go to SGST head. Go to SGST head, how much? 80,000. So sufficient balance is there? Yes. Which means on this SGST, interest will not arise. Why interest will not arise on SGST? Because there is sufficient balance as on the due date of GSTR 3B. So interest will not arise. Okay. Now, sir, for CGST, 40,000 is there, but you go to IGST. IGST head, how much is there? 45,000. Can we use that 45,000 for payment of this 35,000? Yes. Because in cash ledger, there is no restriction on cross utilization. Any head can be utilized for payment of any head. If that be the case, then 45,000 can also be used for payment of 35,000. Means they have maintained the sufficient balance. So therefore, on the 35,000 also no need to pay interest. Wrong answer. Wrong answer. Because they have not specified that it should be headwise or total balance. They have not specified headwise or total balance. Got it? So right there, headwise or total balance not specified. Then what is the interpretation in that case? You take the interpretation as headwise strictly, because that much of balance should be maintained in terms of section 49 subsection 10, like that it is given, which means that headwise only should be taken. Got it? That is the assumption. So in exam, suppose if at all you get this question, as there is no clarity, ambiguity is there, you need to write the assumption. Of course, they will not go this much deep because they are not a psycho like me. Got it? So they will not think of all these things. But suppose in case if they are giving, you write the assumption. What is that assumption? That headwise the balance should be maintained. As there is no balance headwise, the interest will be payable on 35,000. That is the assumption I have taken in this case. That's why I computed interest on 35,000. Is it clear here? 35,000. In the given case, since Miss Nitya wants to pay tax on 20th April, interest payable on amount of CGST 35,000 into 18%. And I gave the explanation also. As per section 49 subsection 10, any amount of tax, interest, penalty, fee or any other amount available in the cash ledger under CGST Act can be transferred to such cash ledger for integrated tax. Okay. Thus, amount entered under any minor head and major head, so can be cross utilized. So why we are taking this particular assumption here? So because that is after that is, see, balance we can transfer, and then we can utilize. So not that directly we can utilize. So using PMT 9, we can shift the balance for 45,000 to this, and then we can use it for payment of tax. But that particular point is for transfer of balances, etc. and all. So means we should maintain the headwise that much of balance. So that is the view which I have taken. Maybe if they come out with a clarification, so that I will update for November 25 exam. Got it? But right now, this is the answer to be followed for exam. So 35,000 into 18% into 31 by 365. Hope you got the clarity about this. Then next one, how to check the balance in ITC while computing interest under 50 subsection 3 for wrong availment and utilization of ITC. That is, sir, headwise should we see the balance again or total we need to take? So look into this question. that is, say this, IGST wrongly availed, IGST wrongly availed is 1,50,000. IGST wrongly availed is 1,50,000 for March 2024 and reversed in September 2024. IGST wrongly availed 1,50,000 for March 2024 and reversed in September 2024. Starting from March, we have the balance in ITC. So, balance in ITC, if you see for CGST, then SGST and IGST. So, we have the balances and we also need to check the total with respect to this total, okay. And here the balance in ITC for the month of March, April, May, June, let's take July, we are reversing, July 2024 we are reversing. So, March, April, May and June, CGST if you see 40,000, SGST 40,000 and IGST is somewhere like 1 lakh, okay, and the total will be 1,80,000, whereas April CGST 50,000, SGST 50,000 and IGST is somewhere like 80,000, okay. So, still 1,80,000 is maintained. May month 60,000, 60,000 and 40,000, so 1,60,000 and June month that is 75,000, 75,000 and 0, there is no balance, so 1,50,000. Now tell me whether we have utilized the IGST credit or not utilized the IGST credit. So, if you observe here, so IGST column alone you see 1,50,000 came down to 1 lakh, means 50,000 utilized, then it came down to 80, 20,000 utilized, then it came down to 40, 40,000 utilized, then it came down to 0, means fully it has been utilized, but we should not see the IGST head alone. IGST credit we need to see all the heads, the balance in total. The balance in total is what? 1,80,000, 1,80,000, 1,60,000, 1,50,000. So, therefore, you need to see the total balance, all the heads we need to see as the total ITC, as the total ITC balance, okay, is greater than or equals to 1,50,000 in all months, therefore, interest is payable or interest is not payable? Interest is not payable. Is it clear here? So, while doing the computation, whether we need to see the total or only the headwise total we need to see for computing the interest. You see this IGST credit wrongly availed. When IGST credit wrongly availed, check the balance in ITC of CGST, SGST and IGST. So, therefore, we will check the balance of all the heads. We will check the balance of all the heads here for the purpose of understanding, that is total we need to take. Then you tell me, suppose if CGST credit is wrongly availed, then what we need to see? CGST and IGST. Why? Because CGST credit can be utilized for payment of CGST and IGST na. That's why we need to see CGST and IGST head ka balance. When SGST credit is wrongly availed, then SGST and IGST. And what if compensation cess is wrongly availed? Then in that case we need to see only compensation cess. We need to see only compensation cess, because compensation cess can be utilized only for payment of compensation cess for that reason. Okay. So, that is what I have given. If IGST credit wrongly availed, we need to see the balance of IGST total and all the credits. CGST wrongly availed, check the balance of CGST, IGST. SGST credit wrongly availed, check the balance of SGST, IGST. Compensation cess wrongly availed, check the balance of compensation cess. What if both CGST and SGST wrongly availed? See the total. See the total. Okay, if both CGST, right there, both CGST and SGST, both CGST and SGST wrongly availed, both CGST and SGST wrongly availed, then check total balance, total balance of CGST plus SGST plus IGST. Got it? When both are wrongly availed, just like IGST wrongly availed, when both CGST and SGST wrongly availed, check the total balance, all the three heads. Done here? So this is about the interest computation and some special aspects related to that. And with this I will stop for today. It's okay, I am leaving you 15 minutes early, and the remaining portion we will continue from tomorrow. So today what and all we have discussed? So we completed, see this, I started with search, seizure, demand and recovery, appeals, advanced ruling, and even we completed this value of supply, accounts and records. These are the areas which we have discussed today, and other things, small payment process, one section we have completed. So tomorrow our agenda is that we will be discussing this assessment and audit which I have started, and payment process also we will be completing, then this refunds, then even registration. So I wanted to touch these areas only last day, because this is something which you would have read many times. So that's why let me focus on all these things and then come back to these areas. Okay, thank you, we'll meet tomorrow.